Hi, good morning everyone, and welcome to the Introduce Investor Days. Today we have 38 companies presenting with us, and we go on until 6 o'clock tonight. But first here we have Sonny Midborn from Alcadon, the CEO, and he will give us about a 20-minute presentation, and we'll follow that up with a short Q&A. So without further ado, please go ahead, Sonny.
Thank you. Well, welcome everyone. My name is Sonny Midborn. I'm the CEO of Alcadon Group. Thank you for this opportunity to describe us a bit more in detail. Now, to start off, I could say that Alcadon is a distributor and developer of complete systems for professional network infrastructure. That means basically everything that you need for the transfer of data to occur. We were founded in 1988, and since then we've had a pretty strong market position in our field of operations. Next slide, please. I think this is a good picture to show what we are actually doing. Now, our products and systems are basically enabling transfer of data and thus enabling digitalization as a whole. Now, these products are needed for data to be transferred between cities, between buildings, and also within buildings to ensure that you have a connectivity when you are inside a building. To a large extent, you don't see our products from day to day. These are, to a large extent, copper and fiber cable-based systems that are behind the walls of hospitals, offices, schools, or in data centers, or even underground connecting cities. So basically, you don't see our products that much. In our largest business area, fiber network, we offer complete systems for large distances to connect, for example, cities. This concerns broadband, FTTH, 5G, for example. So this is basically the transfer of data across large distances and mostly fiber cable related, of course, with all the accessories needed for that. In commercial networks, this is the old core of Alcadon from when we started off in 1988. This is where we offer mainly structured cabling systems. It's copper and fiber cables and all the accessories you need to enable data transfer within all types of buildings. This is basically when you go to your office and you're using a Wi-Fi solution and internet wherever you are. This is basically due to these type of products. We also have a smaller business area called residential network. This is where we offer complete solutions for marrying together electricity and data. Smart home solutions, most of you know about. A rather new business area formed by acquisitions the last few years. But we also offer services and training where we offer instruments. We offer installers training courses, certification courses, mostly to use our own system, European cabling system. Where installers pay to go through a 2-day education course with us and get a certification that they are able to install our own systems. So this is basically what we do, and mostly it is about enabling the transfer of data, basically. Next slide, please. Okay, a summary of who we are. We're present across the Nordics, but also in Germany. Sweden is still our largest geographical presence. As you can see, we have done a few acquisitions the last few years since 2016 when we were listed on First North. We acquired 4 companies, adding quite a significant amount of profitable turnover. But we also did strengthen our customer offers and adding competence to the group. And I would have to say that acquisitions have always been and still is a very important part of our strategy. I think that to a large extent we are not considered a serial acquirer due to us making larger acquisitions compared to our size. And we might continue to do that, but we also look for rather small acquisitions to add something. For example, a geographical presence or a customer relationship that we do not have today. So looking at our ownership also, we have over 5,000 shareholders, but the largest ones are Atanase and the Spiltan. And I think worth mentioning here is that our second largest ownership group is the employees of Alcadon. I mean, in my view, ownership is the strongest incentive you have, and we have very dedicated and motivated, engaged employees, and I think that the high level of ownership among our employees is one of the main reasons for that, definitely. Otherwise, you see that we are approaching 700 million SEK in net sales. We are profitable. We have always been profitable, always shown a strong profitability, among the highest in our industry since over 25 years back. Next slide, please. Let's do a deep dive in our most recent acquisition, 66 International. For us, this was truly a transforming acquisition. At a very reasonable price, we added a very profitable company with a strong position in the premium segment. And of course, important for us was also to gain access to important growth markets in Germany and Denmark. And 66 is a distributor, but they have their own configured solutions as well, just like Alcadon. They're mainly present in the FTTX area, or broadband connectivity solutions and data centers. So I think that, to me, this is an example of the kind of acquisition that we want to do. It's a sound logic, it's a strategic and a financial rationale, and we simply become a stronger company. The strategic fit is fantastic for us. We started off really, really well, and 66 started off really well as part of Alcadon. They showed over 60% top line growth in Q1, and we're already preparing to share distribution rights across our geographical markets. And we also want to launch ECS, our own brand, in Denmark. So things are proceeding according to plan. And this integration that we are fulfilling right now, it basically started off during our acquisition discussions that started well over a year ago. Next slide, please. A quick look at our management team and our board of directors. I'd say that this is well balanced. Our group management have a lot of experience, of course, in the network infrastructure industry, but we also have representatives from all our geographical areas except Germany today. We have representatives from all major acquisitions and a very interesting background of a lot of our leaders in the company. In our board of directors, we have not only expertise in network infrastructure and IT, but also in M&A and finance, and in industrial management and sales. And our board of directors, I mean, they come from leading positions of both Alcadon and our chairman, of course, but also BHG Group, Atlas Copco, Munters, Microsoft, for example. So I think this is a well-balanced, strong governance structure, I would say. Next slide, please. Taking a quick glance at our business model. Now, I usually say that our business model has not changed since the mid-90s. It's quite stable. It's proven quite stable. The offer to our customers is quite distinct. And let's start off with the sourcing that we have. I mean, for one thing that is very important to say is that we are developing our own systems, our own solutions. ECS and DC Line are two main brands that we work with. These are systems that we have developed ourselves. About 10% of the staff of Alcadon are working with product development and product management. We take existing global solutions and we locally adapt them to our local markets. We do not have our own manufacturing capability. The manufacturing market, the market for manufacturing of the components of these systems globally is quite competitive. So basically, there's no reason as to why we should not outsource this manufacturing capacity, which works very well. We have manufacturing in several parts of the world today. On the other hand, 70% of our sourcing is products and solutions from global market leaders. These are companies investing millions of dollars in R&D every year in developing the solutions for the future. So having a cooperation with them offers us the opportunity to never miss a technological development, for example. And these are very well-renowned companies. In total, we have over 200 suppliers, so we are very well covered in this area. And I like this model because when you have a mix of professional distribution where you represent a globally leading company in your own markets. And when you have your own product development, you have a very nice mix that gives you flexibility and a differentiated offer. But in essence, everything we do is to be a competence center within the premium segment of our markets. We make solutions to specifications, we customize solutions. We do it specifically for data centers, structured cabling systems, smart homes, for industry. So within a very narrow niche, we are a very broad player with a very broad offering. Looking at our customer base, you can say we have a lot of customers, over 2,800. We are not that dependent on any one large customers. It's quite spread over a lot of smaller customers today, our sales. I'd say that we have a very high degree of customer loyalty. Over 90% of our customers have bought products and solutions from us regularly, on a regular basis, since 10 or 15 years back. So I think this is, for us, a sign that we're doing something right, of course. You see some example of our customers here, like Instalco, Norlys, Bravida, Cygate, Transtema, Assemblin. So it's basically larger installers, it's operators, telecom operators, it's data center providers, construction companies. So it's a very wide area of customers, I would say. Competition-wise, I'd say that we compete with small niche distributors, often having solely one distribution relationship that they are focused on their local markets. And no own product development, or on the other hand, large international wholesalers offering mainly logistical solutions. So I think we found a sweet spot in the market. Next slide, please. Let's look a little bit about the market and start with fiber networks, our largest business area today. It's also called, to a lot of people, FTTX. I would say that there are some obvious megatrends supporting growth in this area. I mean, you're likely all familiar with terms like Internet of Things, smart homes, smart factories, and services on demand. The implication of these megatrends in society as a whole is that the amount of data is increasing a lot. You're talking about 30 to 40% a year the coming 5 years. That might as well increase exponentially over time as well. Now, to handle these increasing amounts of data, you need a strong FTTH network, a strong broadband rollout. You need 5G. I mean, fiber to the home is to a large extent affected by government-induced FTTH targets. There are targets today in Europe for 2025 and for 2030 in most countries, for example. And with 5G, what most people do not know is that except handling a very large amount of data, a 5G base station or antenna has a shorter range than a 4G antenna. So basically you need a lot more 5G base stations or antennas than you did with the 4G rollout. And every base station and antenna needs fiber. So it's an enormous amount of fiber needed for the 5G rollout, or at least for a complete 5G rollout. We're talking about 2 to 16 times more fiber compared to FTTH or the 4G rollout. What we can also see is that it's a very interesting study today. If you look at FTTH Council Europe's webpage, where you can see that they did a study of a copper switch-off trend. What happens in a society when a society is moving towards fiber, and there are some quite interesting positive impacts of doing that has enabled governments to argument for moving towards fiber to a larger extent. And these, I mean, an FTTH target, that's a moving target. You have population growth, you have construction activity, you have technological development. A lot of the fiber rollout today in Sweden, for example, that's replacing fiber that was added 8 or 10 years ago. So something new is happening all the time. We did a deep dive in some of the markets in Europe and of course in our own markets where we are present today. If you look at Sweden, we have homes passed of 86% or FTTH subscriptions 62%. So it's a quite strong FTTH build out that we've had in Sweden. But the rural areas in Sweden, the coverage there is only 40%. So there's over 30% of the total investments remaining to reach the government targets by 2025. And that's a lot of money. So Sweden for us is still a very, very interesting market in this circumstance. And of course, Norway and Denmark somewhere in between. But if we take a deep dive into Germany, that's perhaps together with the UK, one of the most interesting markets in Europe today. There we have had a very strong growth the last few years. And the expected growth in homes passed is over 700% the next 5 years. Today, it's the highest growth rate in Europe the last few months, or the last 12 months. And it's also the most homes left in Europe to receive fiber. So Germany for us is an extremely interesting market, but so is also Denmark, Norway, and Sweden. So we have a very nice market for a long time there. Next slide, please. Looking at our business area commercial networks, as with fiber networks, this area is also affected a lot by 5G, IoT, and increased volumes of data, of course. And what we should remember here is that 80% of the bandwidth is used indoors. So for connectivity to work indoors in the future, the demands on the systems the cabling system is becoming more and more important. You have more and more wireless devices, more access points, and this makes this a very interesting market the coming 10 years. Now, if you look at what happened in structured cabling system the last 5 years, you've had a growth in Europe of about 7% a year, and that growth is expected to continue. It might increase, but it's a minimum of 7% that we will see. If you looked at European cabling system, our own developed system, the last 12 years we have grown with about 7% a year as well. And we have a very strong position in the premium segment. So it's not anything strange that we have grown with the market rate. But data centers, at least for us, co-location and enterprise, that's a very interesting market segment where we have started to focus a lot during 2020. This is an area where you expect a growth the coming years of about 10 to 25% a year. We grew with about 40% from rather low levels in 2020. So our endeavors here to focus on this market has paid you, and it's been very good for us, and we hope for it to still be in the future. Next slide, please. A quick look at our financials. I mean, we have been affected by the pandemic as well as logistical issues during Q1. It has impacted mainly our top line in Sweden and Norway during 2020, of course, but also Q1. It hasn't been a major issue for us. We have focused on increasing our gross margins. We are focused on our cash flow, on our OPEX efficiency, and we did manage to have a very nice profit growth or EBIT growth during 2020 of close to 40%. And in Q1, we grew our profits with about 72%. About 14% of that was organic. So we're happy to say that the last 5 quarters we have grown our profit level organically, and now we added a very interesting acquisition, of course. So that's really interesting for us. We did manage to reduce OPEX with efficiency improvements, and our operating margins have continued to increase at a very nice pace, I would have to say. But I also would like to focus on our cash flow. We had an extremely strong cash flow in Q1. We have focused a lot on efficiency measurement to increase cash flow in the future and gain more resources to do acquisitions. So I'd like to summarize this with saying that we have definitely carried out some successful measures to increase profitability, and we have a nice platform to grow now, and grow further, and also to do acquisitions, I would have to say. Next slide, please. To summarize why we are an interesting company, I'd have to say that, I mean, we are affected by macro trends, especially in terms of digitalization. We have a proven business model. We've always been profitable. We have a very loyal customer base. We are an acquirer, a market leader in our segments. So as I write here, we're trying to leveraging on this history, and I would have to say that our journey has just started. So I hope you will follow us and see what we are able to achieve within the next few years. Thank you.
Thank you for a very good presentation, Sonny. And as you said, you gained access to the German market, which is really exciting now through the acquisition of 6X. But you also mentioned UK, and I think Italy looks exciting as well. Would you be able to reach these markets organically, or do you have to do M&A to reach them? And then also, are you interested in actually entering these new markets?
I'd say we are definitely interested in becoming more of a European player. Definitely, I think that the time has passed when we focused only on the Nordic region. Definitely, it is difficult to gain access to some of these markets just organically. So I think that our primary means to grow in new geographical markets would be acquisitions, and we would focus on companies that we already know very well, that we have some kind of relationship with, to reduce risk and also get some traction rather quickly, of course, in the markets. But the answer to your question is yes, we are extremely interested in moving to new geographical markets.
Okay, perfect. And then sort of continuing on the geographical theme, now in Q1 and here, the Swedish and Norway looked a bit weaker, and then maybe Denmark and Germany was a bit stronger. But what's sort of going on here in the short term here on these markets?
You could say that since November, the pandemic hit us really hard in Sweden and Norway, mainly due to a lot of installation projects just came to a halt. A lot of people, I think, became tired of what is happening now with the pandemic and said that we're going to wait a few months for the projects to start. I'd say the most important thing for us was that we haven't lost any market shares. We just followed the market, so to speak. In fiber networks, it's been mostly a case of government subsidies. I think the application period ended in May 17th or something like that. So a lot of projects will probably start during the autumn. So it's been like a perfect storm that ended up with a global logistical problem. I mean, we had a ship stuck in the Suez Canal. Our ship was just behind it with our containers. So we lost some millions in turnover just due to that fact. And we're not a wholesaler, so we don't keep very strong levels of inventory. We are not working just in time, of course, but we are affected by global logistical issues, definitely.
And perfect. And you also made some changes since you became CEO, and it seems like most things are in place right now, and we've kind of seen that in earnings. But when you guys in management still sort of allocate your time now, are you still focusing and seeing things you could improve sort of internally, perhaps also with the integration of 6X, or is the focus fully on growing right now and maybe looking at M&A?
We have, of course, a strong focus on organic growth. I mean, we are doing a reformation of our sales team in Sweden, and we just carried it out in Norway. So we have a lot of focus on that, of course. Growth is always on our mind, so to speak. We have some more efficiency improvements to do. We come a far way, I would have to say, in improving our gross margins, which was a target that I set out when I started, that if you are in the premium segment, you should definitely be able to have higher margins than Alcadon had in 2018 and 19. And I think we have achieved that. We focused also a lot, as you said, on the efficiency improvement on a new central warehouse. So we have much more to do, definitely. But we are now in a place where we could leverage on what we have already done by doing acquisitions and by focusing on organic growth. Then, of course, when you do a large acquisition that, like we did, you have to focus on the integration efforts, but they go hand in hand with our growth initiatives, I would have to say.
Perfect. And then lastly, a question I know you get a lot and might be tired of, but we've been talking a lot about 5G for some time now, and it has sort of been delayed, but now with the sort of 5G auction having taken place in Sweden, do you see this taking off anytime soon?
I would have to say that the operators started with transferring their 4G antennas or base stations to 5G base stations, and we are developing solutions there together with one of the operators. So we have followed that market quite closely, I would have to say, but the large volumes of fiber, it has started, and we've had some project with private players and city networks that have started to prepare for 5G by rolling out fiber. So some of the volumes that you have already seen are related to 5G. but the market has not really kicked off yet. And I think it will take some more time before that to happen. And I think it will occur over a rather long period of time and go hand in hand with the FTTH deployment. That's what I believe.
Thank you very much, Sonny. And that's all we have from Alcadon today. So thank you very much, Sonny, and also thank you to everyone listening in to this presentation.
Thank you very much. Thank you. Bye.
Hello everyone and welcome to ABG's Investor Days. My name is Carl Bokvist and I'm the responsible analyst on ABG's behalf of covering Cavotec. With us today we have CFO Glenn Withers, who will give us an overview of the company and where it's heading. And with that, welcome Glenn and thank you for joining us.
Go ahead. Okay, thank you very much for the introduction and good morning everybody. I'd like to start on the second slide please here and with two quick sentences about Cavotec and what Cavotec's about. So the first sentence, Cavotec is a leading clean tech company that designs and delivers connection and electrification solutions to enable the decarbonisation of ports and industrial applications. The second sentence is that backed by more than 40 years of experience, our systems ensure safe, efficient and sustainable operations for a wide variety of customers and applications worldwide. And for a few minutes now, I will just talk through what those couple of sentences are about and why we describe at the start of this presentation that we're on a mission in Cavotec. So if we go to the next slide, please. So if I look at Cavotec at a glance here, we're today focused on our businesses in ports and maritime and industrial applications, supported by a global services organisation. Total revenues in 2020 for that focused group was 115 million euros, and we have just over 500 employees in that group. We also have an airports business in Cavotec today, but that business, as we announced in March, is our strategy is to divest that business. And if we move to the next slide, and I'll talk about that briefly. This is something we announced to the market in March, and I'm pleased to report, and we reported this last week in our quarterly filings, that Rothschild is the lead advisor for this divestment based out of the UK. And the reason that we've decided to divest the airports business is so that we can focus on the significant opportunities we see in our products in the ports and maritime industry. And the rest of the presentation will really focus on the ports and maritime business and the opportunities that we see. And if we move to the next slide, we're not going to play the video now in the interest of time, but on our website, the Cavotec corporate website, on our investor landing page, you can see a video that explains the mission that I'm talking about today, probably a lot more eloquently than I'm going to do, but available for reference for anyone that's interested in learning more. And then if I talk about the mission more on the next slide, why is it that we want to focus on ports and maritime and why do we see an exciting opportunity there? Basically, the way we see it is that ports and maritime as an industry is undergoing a huge change. It's a change where today's unsustainable transport systems will be changed. The modernisation and decarbonisation of ports, as I said in the first sentence in the summary about Cavotec, we think is inevitable, and that's where automation and electrification will not only increase efficiency, but at the same time lead to a safer workplace and a greener footprint. We see that when we talk with our customers and in the market on a daily basis, and we can feel and hear the accelerating focus on sustainability inside the marketplace. A good example of that is even in the US market, where we saw a difference in approach on the west coast of the US versus the east coast. And in recent conversations, we're now seeing that shore power and electrification has become a big topic on the east coast of the US, in addition to where it was already a topic on the west coast of the US. And a good example of that is the cargo ports on the northeast coast, but also the cruise terminals down in Miami. And then if you followed us in our news feeds, you will have seen that the Nordics, and in particular Norway, has been at the forefront for installing e-ferries, and we're now also seeing an increased interest in that approach in Sweden. Now, if we move to the next slide, I'll spend some time talking about what our products are, what do we do in Cavotec, and what do we offer. The summary of that, though, is that we think we're in the right place at the right time with the right products. We think we're well positioned with each of our core offerings in the ports and maritime market for the mega trends of automation and environmental regulation and improvement. If I start with MoorMaster, that's our automated mooring technology. What that means is we can provide faster mooring in seconds that can soon add up to vast savings for our customers. One MoorMaster system, which is an automated mooring system based on vacuum technology, can save thousands of litres of fuel per year, and with it thousands of tonnes of CO2 and other particulate emissions. Lower mooring times also mean lower costs. Efficient mooring at the touch of a button dramatically cuts the idling and thruster use while berthing, and it reduces the fuel consumption and emissions in port. It also means less tugboat time, which can reduce emissions further. Those reduced turnaround times also result in lower fuel bills overall, because the shorter turnaround times can allow for different cruising speeds between destinations. So that's our MoorMaster technology. Now I'll turn to our shore power technology, which is about powering ships at berth. We offer the widest range and the deepest experience of shore power offerings in the market today. That can include onshore power supply or alternative maritime power for the vessels. And these solutions cut emissions totally at berth. It also now enables the connection of ships in port to shoreside electricity and to power onboard services, allowing diesel generators to be switched off while in port. The reduction of these emissions, we think, is no longer a nice-to-have technology. It's increasingly becoming a legal requirement for the industry, following the latest standards and regulations that are being announced by different governments around the world. Then I'll turn to one of Cavotec's founding technologies, which is reel technology. This is the core of Cavotec and where it started, both in terms of cranes in ports and industrial applications outside of ports. And that's where we provide the electric power and the means to connect the electric power using the reel technology. And we're a pioneer in that market and continue to lead that market. Then finally, looking more towards the future, although the future today, I'll talk about automated charging. And that's where we provide a future standard for commercial vehicle charging. That again could be in a port application or an industrial application. Our first high-power charger today is installed in Oslo to charge e-vessels, and today we have multiple systems installed around the world. We know the same technology that we've used for trucks in ports can be used for different applications for our industrial customers, again around the world, again with the aim of reducing emissions within existing operations and supporting the conversion, if not supporting, actually enabling the conversion of vessels, whether that's waterborne vessels or land-based vessels, without connection technologies for battery-powered vessels. The main part of our offer is that it is a high-power charger. That's the difference between what we supply and standard vehicle charging for the vehicles that we might use at home. We think it's a core enabling technology for e-vessels and offering fast turnaround times in battery charging. as the battery technology continues to improve. We have also been invited to help shape the future of the connector standards for e-vehicles in a group called Charon, and we've now joined another group also involved in automating charging, which we are leading. Then if I turn to the next slide, again, a resource for you available on our website is a summary of the MoreMaster technology with a video of how that technology works. And again, if you're interested in more information about what I'm talking about now, I'll leave you to look at that at your leisure. Then if I continue to the next slide, staying with the MoreMaster just for one more minute here, we think the market really is poised to take off now, that we're at an inflection point with that technology. We've installed today, after 20 plus years of using the technology, some 100 systems around the world. We've now successfully launched in the last few months the next generation of the MoreMaster product, what we call MoreMaster NXG. And we see with that technology and the discussions that we've had around the world, much increased interest with the new technology that we now bring to this product. And we've received multiple orders, which you can see in our news feed with NXG. The reason we see the inflection point is initially MoreMaster was only installed in niche segments where a customer had an operational limitation or where conventional mooring with ropes impacted the performance of the port. But in the second stage now, with the early majority, we now see automated mooring becoming a market standard for high-frequency ferries that sees a lot of benefit from the system, as well as addressing the environmental concerns that I talked about earlier. While the ferry market will continue to grow, we expect high utilisation and greenfield container terminals to be the next to follow. And we have examples of that already. At Cavotec, we believe every minute matters, and it will matter more and more that automated mooring is given a role in each port around the world in the future. Now, if I turn to the next slide, again, like MoreMaster, there's a link there to our shore power video, which is available on our corporate website, which talks about how the shore power offer works. But if I summarise that briefly for you now on the next slide, basically the key message is that we have been a pioneer of this technology and have more than 40 years of experience of connection technology, which underpins our shore power offering in the market today. We've now completed a completely new industrial design of all our products. And we think this is important because shore power will be installed in public areas around the world. We think the new industrial design, together with our combination of more than 35 to 40 years worth of experience on shore power, means that we're well placed to take advantage of the decarbonisation and sustainability drive within ports and the move away from diesel-powered vehicles into cleaner battery-powered vehicles. As part of that evolution of the market, if I turn to the next slide, we are also now moving to be more of a turnkey solution supplier in the conversion of power systems to provide shoreside electrical power to vessels. And that means that we'll provide a turnkey experience rather than just the noble product to our customers. And that will underpin a future where we see offering our products as a service to customers, whether that's the MoreMaster technology that I referred to before or shore power. And therefore a deeper relationship with our customers and a more integrated position inside the applications, whether that's in ports or indeed eventually in our industrial customers. And then finally, on the last slide, before I hand over for Q&A here, we announced last week that we intend to invest 20 million over the next 5 years to build our position in this market by recruiting more than 300 new employees over the next 5 years. We think 70% of those or more will be engineers. It also involves quite a significant investment in our sales side of the business. We've previously announced and will continue to develop a global innovation centre with new product development based in Rotterdam and in the Netherlands. We will also establish a turnkey solution centre, which I referred to on the last slide, to establish ourselves as a leader in the market of converting to cleaner technologies. And as I also referred to in the last slide, we will start to offer product as a service to enable the use of our products in a wider range of applications, backed by our experience and commitment towards the uptime and ongoing availability of the systems that I've talked about. And that, in a nutshell, is Cavotec. So a leading clean tech company that's focused on connection and electrification solutions that enable the decarbonisation of ports and industrial applications, backed by a very long period of experience in this market already. And I stop there.
Thank you very much, Glenn. And the first question here from my side is when it comes to these growth investments into ports and maritime, and how one should think about these investments in relation to your long-term financial targets of achieving a 12% profit margin and growing 5% per year.
Okay, thank you, Carl. Like I said, we announced an investment of 20 million in a 5-year cycle. We announced last week that approximately 25% of that will be spent in 2021. And in terms of our long-term targets, our position is that today we're divesting of the airports business. So we're in the carve-out process at the moment with that part of the business. And during this year, our strategy is that we sell that business, and then we've got a new base from which to build the Cavotec of the future that I've described today. Later on, we'll talk about how we will report new Cavotec, and also look at the financial targets that come with that. But to come to a more direct answer to your question, Carl, in announcing this strategy and developing this strategy for Cavotec focused on the ports and maritime business, we think we have set up this business to give it the best chance to grow in a profitable, sustainable way by providing solutions that our customers need, and where market conditions are such that there's a strong desire now to have much more sustainable solutions in the transportation network inside ports and maritime. So we're confident that that will result in good financial returns for investors.
Understood. And with that, the time is running out. We apologize for the early technical difficulties, but again, Glenn, thank you very much for joining us. Thank you for talking to us about Cavotec and its future growth journey. Thank you again, and have a continued good rest of the day.
Thank you, Carl, and thanks everyone for listening. Have a great day.
Hi and welcome to today's presentation with Christian Berner Tech Trade, presented by CEO Bo Söderqvist and CFO Torbjörn Gustafsson. Myself, my name is Max Bacco and I am an equity research analyst here at ABG within industrials. And with that said, Bo and Torbjörn, please go ahead and start the presentation.
Okay, thank you. Hi, my name is Bo Söderqvist, CEO in Christian Berner Tech Trade. I will present the company today together with our CFO Torbjörn Gustafsson. Next. The agenda for today is to present our markets, strategy for high value creation, priorities 2021, and short financial information in the end of the presentation. Next. Our business idea, we offer technical solutions, products and services to companies and public sector in the Nordic countries. We make our customer more competitive, and our competitive edge is our highly technical skills. It's really important to have a high technical understanding of our customers' process and demand. Next. We create innovative technical solutions for a sustainable society. We already do that in some areas already today, and you will see that later on in the presentation. Next. Our core values. Passion. We are passionate about helping our customer. Brave. We dare to challenge ourselves and each other. Innovative. We are creative and we find solutions. And together, we succeed together with our customers. Next. We improve environments that affect many people. Some areas are really important for us. Quiet environments, that we are leading in the Nordic countries in rail, tram and metro, and also in woodhouse production. Sustainable production and sustainable products, the demand is higher and higher all the time, so you must be there. Clean water, cleaning drinking water without chemicals, with UV lamps. And then our own product, Zeta boiler, to sustainable excess power and also reduce carbon dioxide. Next. Our business area are divided in two different business areas that complement each other. Process and environment and materials technology. Next. In process and environment, we have 4 different technical areas. For example, process and equipment, filter technology, etc. We work in sales team from 5 up to 20 salesperson in each team, depending how large the area are. And one important thing here is that we always met our customer as a specialist with really high technical understanding of our customers' process and demand. Next. Here we have a customer case, our own product, Fillflex filling machine here to Nordarom in Norrköping, which improved the working environment in the production facilities. Next. Materials technology, 3 different areas, vibration, technical plastics, and bullerbekämparen. Bullerbekämparen we acquired 2018, and they have their own production facilities outside Gothenburg and will be integrated with vibration technology in Christian Berner AB in the end of this year. Next. Another customer case, and here in vibration, we reduce steps and frame noise, an area, as I said earlier, we are leading in the Nordic countries. Here in a project in Jönköping. Next. Our sector and fields, or perhaps more correct, our customer segments. We are everywhere, and there is a good risk spread in our sales. Torbjörn will explain that a little bit more later on. Some big areas for us are pulp and paper, process industry, water treatment, and the food industry. And now Torbjörn Gustafsson, our CFO, will take you further in the presentation today.
Thank you very much, Bo. And next slide, please. This is our strategy for high value creation. A strategy that is built on 3 pillars, seen on the left-hand side. We create strong customer value. That is our first pillar. And that really goes to the core of our business, to be partner with our customers and create value together. The second pillar relates to sustainability. And sustainability is a natural part of our business model and how we do business. The third pillar, profitable business, is of course a result of the 2 first pillars and important looking at the strategy going forward. Next slide, please. And here looking at the framework for sustainability for Christian Berner Group, we have supplier Christian Berner and the customer. And supplier and Christian Berner are important areas to work with, where we are working with suppliers constantly in the collaboration with energy and resource efficiency and so on. And the Christian Berner part is our own climate footprint, working with diversity. But I would say the most important part of our sustainability framework is really how we work with our customers, where we see that we have products and we have solutions that supports the transformation that our customer goes through in becoming more sustainable. Next, please. We are positioned with good products and solutions to meet the market trends that we see are ongoing. We see that there are trends in greater consumption and utilization of resources. We have climate change and scarce resources and increased urbanization. And relating to the strategy that I mentioned before, we see that we have products and solutions that will support solving the challenges that comes with these market trends. Next, please. How we create value. We work with about 100 suppliers, and where the supplier that have the most sales from is about 10% of our sales. So we are not so dependent on the supplier side. And then we have on the customer side, we have around 4,500 customers, mostly in the Nordic region, but also some that are global. They are spread across a lot of industries, and the dependency there is around 2% of sales to one single customer on an average over the last years. So even less dependency on the customer side, which means that we have a spread in risk that is good going through different cycles in business. And I would say on this part as well that around 20% of our sales is from own products that we own the drawings and could sell as own products. Next, please. Profitable growth is important to us, and it comes from organic growth and also through acquisitions. And the strategy that we have in place goes for both the organic growth and also the growth through acquisitions. Next, please. Good acquisitions and positioning for intensified activities. We have a track record of making good acquisitions going back a lot of years. However, the acquisition agenda have intensified during the last years, and we have also during the last years positioned ourselves in having a better organizational capabilities and also structure and a governance in place to keep on doing more intensified acquisition agenda going forward. Next, please. Our latest acquisition is Swedenborg Ingenjörsfirma that was made in April this year. And it's a good example of good companies that we look on acquiring. It's a company with a good customer value proposition and also with an own brand and own products that have a good market position. It broadens the offer of the group, and we also see a great potential of profitable growth in the Nordics for Swedenborg being a part of the Christian Berner Tech Trade Group. Next, please. And then coming into financial information. Next, please. This is the financial objectives of the company. You see on the left-hand side the different financial objectives, and as you can see on green and red, on an average the last 5 years, we do have green on everything, but the EBITDA margin, the profitability. And we are, of course, working with all of the financial objectives. And when it comes to the profitability, we do see that the strategy for profitable growth will support closing this gap. And also we have made during the autumn some structural cost changes that have reduced the structural cost within the group that is also then supporting the EBITDA margin. Next, please. And then we have the first quarter 2021 in brief. This was a quarter where we had a better EBITDA result comparing the first quarter in 2020. However, 2020 first quarter was not a really good comparison. It was quite low EBITDA at that point. But however, we have made improvements compared to 2020, where we see a better gross profit margin. And as I mentioned before, there are also some structural costs being taken out that is supporting the EBITDA and the EBITDA margin, even though sales were low. And then going into sales, we do lack some of the bigger project sales that we usually have in the first quarter of 2021. Some are related to the pandemic situation, where we have had customers that are a bit more reluctant in taking investments during these times. But some are also just fluctuations that we normally have when it comes to bigger projects in heat boilers and in vibration technology. That doesn't happen each quarter, but for those, we see that we have a market position that is really good, and we see an underlying market that is growing. So we're not. We see that going forward, those sales will come in the end to us. This goes for sales, but also for order intake that has been a little bit slow on some parts, and also coming to the major projects there. Next, please. Looking at the market overview, the segments that we are reporting on, and you can see that Sweden is the segment that has the most impact of the group, with almost 500 million SEK in sales. Then we have Norway and Finland, and finally Denmark with lower impact on the total group as of now. Sweden has the most impact in the group, but we are looking at the strategy and profitable growth in all markets, and that goes both with the organic development, but also with the acquisition agenda, where we are looking at potential acquisitions in all these areas. Next, please. And here you can see a recent development per segment on a rolling 4-quarter basis, where you can see that Sweden has flattened out a little bit on major projects here affecting. But importantly, the last quarters, you can see that the EBITDA margin is ticking upwards, which is something that we follow closely and that impacts the group in total. For Norway, we have a really good upward going trend, both when it comes to sales and also in EBITDA margin. And Norway will be positively impacted by Impact, that was the acquisition being made during the autumn. For Denmark, then being our smallest segment, there has been a difficult situation coming from a very good situation, but having trouble even before the pandemic, but also then being affected by COVID-19 situation and going downwards here. So we're following that closely and hope that as the pandemic situation becoming better, that will also go upwards. And Finland then being quite stable on the numbers that they have for the last parts. Next, please. Finally, the shareholder list, where we have Gårdaverken being the major shareholder. But lately then, during 2021, there has been changes on number 2 and number 3 in the shareholder lists, where behind Nordnet Pensionsförsäkringar, we have Servante Capital coming in, and we have Consejo becoming a major shareholder as well, with the MD of Consejo, Carl Adam Rosenblad, also taking part in the board since the annual meeting being held late April. That was the last slide of the presentation, and I guess that opens up for questions to Bo or me.
Yes,
thank you
very much, Bo and Torbjörn, for that presentation. And as you said, now is the time for some Q&A. And to begin with, as you said during the presentation, you have a very strong position within noise reduction and vibration technology in the Nordics. Could you tell us something about that market, and if there are any additional market segments that you could enter with your offering?
Yeah, as you say, and also Torbjörn and I say in a presentation, we have a really strong position in rail, tram and metro, and also in woodhouse production. New, or more correct perhaps, is additional segment is now the industry segment, where we are on already today, but on a smaller scale. But we now make investments there and strengthen up the sales organization in Sweden for growth now in the industry segment. There is a lot of potential there.
Okay, interesting. And if we go on to acquisitions, how does the acquisition pipeline look like? Do you have any ongoing dialogues with potential targets as of right now?
Yes, of course. As I see it, we have a really good pipeline for acquisitions, and we have a lot of dialogue and discussions with potential target companies all the time, I will say. It's an ongoing process all the time.
Okay. And what kind of companies are you currently searching to acquire?
We are looking for companies that fit in Christian Berner group with us as a complement or strengthen up our offer in existing or in new business.
Okay. And lastly, how have the lack of raw materials and increasing raw material prices affected your segments? Have you seen any improvements in this area? If so, and how do you handle the situation?
Yes, it's right. We have seen that both in technical plastic and also in vibration in material technology, we have seen price increases in the beginning of this year. But so far, no supply or delivery problems.
Okay, I think that was all the questions, so that will conclude the presentation. Thank you very much, Bo and Torbjörn, for joining here us today, and I look forward to seeing you soon again.
Thank you.
Thank you.
Bye.
Hi everyone and welcome to ABG's Investor Days. My name is Karl Bokvist and I'm the analyst responsible for covering CTT Systems on behalf of ABG. Today we have the pleasure of having CEO Torbjörn Johansson with us, who will give us an introductory presentation of the company, and if there is time available I will ask him some follow-ups at the end of the presentation. But with that, Torbjörn, thank you for joining us today, and please.
Okay, Carl, take the next picture. I'm Torbjörn Johansson. I have been with the company since 1996. So 1st of September this year, I've been 25 years with the company, and I became CEO 97. Take the next picture. We can continue. This is the results from the first quarter 21. Take the next. The first quarter 21, of course, it was a problem due to the COVID-19, but we did meet our sales forecast, 31 million, and it should be noted that it was the first time during the pandemic where we had aftermarket sales that was in relation to the underlying demand, and that is a positive sign. Take the next picture. Net sales was down compared to the first quarter of 20. The first quarter of 20 was the last quarter before the pandemic, so we have lost almost 60% of our sales if we compare, but we still made a positive EBIT, and that is showing the strength of the company. We have a very good business. Of course, we are affected by the pandemic. The cash flow was a little bit weak. It was -7 million. We take the next picture. If we look at the sales mix, you can see one of the reasons we managed to make a positive EBIT was that the aftermarket portion of our sales was very, very large. Last year we had about 40% in the aftermarket. This year it was 65%. What is the big change between the 2 years is that the OEM has gone down. It was down to 15%. That is very, very low for CTT. Take the next slide. You can see a little bit more the changes in the net sales. As I said, the OEM is the biggest part of the decrease. We have lowered the OEM sales with 29 million. Retrofit and VIP was about the same as last year, and the aftermarket was also down, but not as much as the OEM sales. We take the next slide. If we look at the profit bridge, of course, the main reason that we lost a lot in profit was the lower volume. We have lost EBIT compared to last year with 22 million. We also had a very strong US dollar last year. So compared to that year, we had a currency impact of about 9 million. We have had run the cost saving program, and we have compensated with about 6 million on the cost saving side. So we had a small EBIT profit. Take the next picture. If we look at the cash flow, it was low, and the main reason for the cash flow was that one of our big customers, they delayed the payment that was due in February, March, and they paid it in April. If we would have got that 7.5 million payment, we would have had a balanced cash flow that would be in line with the EBITDA, as it should be. But of course, a late payment we could not compensate. Take the next slide. If we look at the order intake, we have now made from very, very low levels of immediately after the outbreak of the COVID-19, we have increased the order intake from quarter to quarter. And the first quarter this year was the first quarter where we increased the backlog also. But of course, we are down to very low backlogs, and that the reason for that is that Airbus and Boeing has reduced the production rates, and they also don't place as long purchase orders as they have done historically. But we hope that the trend will continue, that we will continue to increase our order intake and also build the backlog. Take the next slide. If we look at the last 4 quarters, we can take the next slide. This is 4 quarters with the COVID-19, and we have taken actions. We started already in February to increase our loan facility with 70 million. That was a way to save up all the business. We also thought then that we would be hit by the suppliers. Everyone talked at that time that you should be careful that you don't get problems in the supply chain. We increased our inventory and to be sure that we could deliver to Airbus and Boeing. We also decided in April, when we saw that the pandemic was very serious, we saved cash. We lowered the dividend that was planned to be the double of the amount we paid out. So in that way, we saved 50 million cash. We also started a cost-saving program. We adapted the production capacity to medium demand. It was most affected that in May regarding the blue-collar staff. We reduced the blue-collar staff with about 30%. We have working on the white-collar side with the scheme that we worked either 60 or 80%, and we got either 80 or 90% salary. We have continued that by the white collars, but we will go back to 100% again now from 1st of July. And by the beginning of January, we reduced the staff additionally a little bit, and that was to prepare that we could go back to 100% working time with the same personnel costs. We take the next slide. If we look at those rolling 4 quarters, of course, we have lost half of our sales. And as I said in the beginning, I'm very proud of CTT. We have lost half of the sales, but we could still make a profit those 4 quarters during the pandemic. The EBIT margin was 8%, and I think we have to be happy to perform in this way during these circumstances. Where we have taken a hit is the cash flow, and that is mainly 2 reasons. One is that we increased the inventory during 2020 to secure our supply, which is the most important. But we also continue to invest in our development projects. It's 777X, and also now we are making investments in the private jet sector. So during the pandemic, we have managed by cost control and our good business to keep a positive result, but we have continued to invest in future programs. Take the next slide. If we look at the sales again, it was we were hardest hit by the OEM sales, and of course that is because Airbus and Boeing has lowered the production rate. Retrofit has been about the same. VIP was even a little bit better during those 4 quarters. And in the aftermarket, we have taken also a hit of about 90 million. But if you look at the aftermarket, that is a good illustration on what we in relatively short term can increase our sales, because the only thing we need to get the aftermarket sales back is that the aircraft, and especially the 787, start to fly in the same relation as it did before the COVID-19. So there you can see how big of our loss in sales that we relatively quickly can recover. The OEM side is more difficult because that is dependent on the production rate from Airbus and Boeing, and they will not go back in pre-COVID-19 levels so quickly. We take the next picture. If we look at the outlook now, take the next. The second quarter this year will be a change in trend. We have had 3 or 4 quarters where we have lowered our sales, but we expect that the second quarter this year will be an increase. We expect sales between 35 and 40 million. It's mainly due to that the OEM bounced back a little bit. We had extra low sales during the first quarter due to production change, especially by Boeing. But we expect now to start to grow. We will also have some help from private jet projects. Take the next slide. Of course, for our recovery is dependent on the aviation recovery, that's clear. And the recovery in aviation is on the way. It has started really with the domestic. If you look at the left picture, there you can see the number of flight operations in different parts of the world. And you can see that China is almost up to 90% of what they did fly domestically before the COVID-19. We also have an effect in North America. They are up now to 70% of the flights they did fly before COVID-19. And of course, those two countries have a lot of domestic travel. It is not the same for international travel, which is the important thing for us. If you look at the right picture, it's the daily number of passengers in the United States. And you can see it was going down very quickly due to the pandemic, and then it recovered during the fall. Then we have a couple of drops there due to the second and third wave. But since beginning of the year, US traffic has increased, and that is an effect of the vaccination. You can see that they are up to around 1.5 million passengers per day in the United States. And I think this we will see internationally also when more of the world population are vaccinated, and especially perhaps if we get more vaccinated in Europe, we will get back the traffic between US and Europe, and then it will come direction Asia also. So the recovery in the aviation industry is on the way. The pace is dependent on the vaccination. We take the next picture. For CTT, as I said, our immediate recovery is dependent on the aftermarket, and the aftermarket is dependent on the installed base of humidifiers we have. And you can see on the left side there, the installed base that has been growing over the years. And even though 2020 was a very bad year for us on the OEM side, our installed base did grow. But of course, when the aircraft is standing on the ground, you can see on the right side, the aftermarket sales were going down. The humidifier pads that the airlines normally replace every year or after 4,000 flight hours. Of course, when they don't make the same amount of flight hours, they have a lower demand, and that you can see on our sales. We take the next picture. Our humidifier population very quickly. We have flight deck, crew rest, and cabin. Our population is very young. Most of our humidifiers out there are less than 5 years, so there is no risk that our humidifiers are taken out. And you can see on the upper corner the contribution between commercial and private jet. So far, the commercial aviation is leading, and the aftermarket is most dependent on commercial. Take the next slide. As we said, the aftermarket is the key for a quick recovery, and we had the last 3 quarters of last year. You saw that we were selling less in the aftermarket than the underlying demand was, and therefore we had very tough quarters. What was interesting with the first quarter 21 was that we did sell to the underlying demand. So the first step in our recovery we have taken. The second step we will take is dependent on the flight hours. So on the graph to the right side, you can see the flight hours on the 787 fleet. So for us to recover more in the aftermarket, the flight hour on especially 787 has to come back. So if we take the next slide, here you can see over a longer period the total amount of flight hours per month on the 787, and you see before COVID-19 it steadily growed with the increased population. Then we got COVID-19 and we were down very much, but immediately it started to recover. And the reason for that is that 787, even though the international traffic have been low, 787 have been used a lot domestically, and that international traffic you have is served to a great extent by 787 because it's an efficient airplane and it has smaller capacity. We take the next picture. We have products that is correct to the market. For the humidifier, we have the trends of in-flight air quality is discussed a lot. We have the wellness aspect. And on the dehumidifier side, we have the sustainability card, and that the government will put more pressure on the airlines to save fuel. Take the next slide. If we look a little bit more in detail on the three segments that is important for CTT, the aftermarket is the first segment. Of course, that is most important. We have discussed that the aftermarket comes back as soon as the aircraft starts to fly in the same amount as it did before COVID-19. And I think, as I said, the international traffic will come. On the OEM side, it will take a longer time. We have the 787, the production rate is now down to 5 aircraft per month compared to 13 aircraft a month before the pandemic. I think we will have to wait until 23 before we have an increase in production rate from Boeing. But then it will go up because 787 is a very popular aircraft. We also work hard to try to get cabin humidification into that fleet. If we would manage with that, of course, we would sell more humidifiers to the 787. On the 350, it's about the same as by 787. Airbus is down to 5 aircraft a month. There we have a good content. We have possibilities to sell 5 humidifiers and 2 dryers. Here we have to work with the selection rate by the airlines, but A350 is growing for us. 787 have been the strong part, but A350 comes closer to 787. The next project, the 777X, is the new big Boeing aircraft. Of course, we were very happy to get that platform also. We could sell 5 humidifiers to that aircraft, but it is delayed due to the pandemic. I think it will be entering into service during 23. But when it starts, when passengers come back, when international traffic grows, this will be a very popular aircraft because the 747 and the A380 with 4 engines, they are out of the game now. So for the future, I think 777X will be very important. And then we have the MC-21 from Russia, where we have a cockpit humidifier. They have started serial production, and that will grow during the next couple of years. We take the next slide. If we look at retrofit business, of course, it's difficult when the airlines is in a bad financial shape, but we got an order now for 10 more systems to an existing customer. I think this will be in the next future, we will sell the system to existing customers when they are increasing the fleet. But the drying system, of course, has a future as a sustainability product. The airline has to save fuel in the future, and Sona Drying can contribute. We also have an interest in cabin humidification. With the discussion of COVID-19 and the effect of drying out during long-haul flight, I think airlines will be more and more interested to include cabin humidification in the comfort packet. It happens on new aircraft, but we also have a good chance to sell it to old aircraft. And the best fleet to sell it to is the 787 fleet. There is 1,000 aircraft out there which could relatively easily be equipped with the humidifier, so you get humidification in business class. So retrofit is a little bit difficult, but I think here we have a good chance to grow for the future. We take the next slide, and that we call private jet. As you know, we have been selling our humidification system with drying to big VIP aircraft. I think we made the first business almost 20 years ago. It was at that time a few aircraft that took the system. Now, if you have a big VIP aircraft, almost all of them are equipped with humidification. That is also recognized by Airbus. We have developed a system together with Airbus for the smallest VIP. They deliver the A320 family. There, Airbus will include it in the option list. So I think we will have a much higher penetration on those aircraft types. So Airbus has clearly taken the position, if you fly VIP, the cabin should be humidified. So there we have made a big step during the COVID-19 period. We have also been able to get feet into the business jet market. Business jet is very interesting because there you have more volume. Bombardier and Gulfstream, which are the big ones, they will build about 40 a year each of a business jet type that can fly up to 15 hours. We have developed the system for this Bombardier aircraft. It is installed and they will start flying now during the summer. So this is really a milestone for CTT. This is the first time that we have developed a system for such an aircraft. And you can imagine such an aircraft, which is for private use, cost about $75 million US. So of course they can afford to buy a humidification system to those aircrafts. So there we have made a really big step in our private jet segment. And the last picture is Airbus new aircraft, which they have taken over from Bombardier. They make a business jet version of it, and they call it the ACG 220. This cannot fly 15 hours, but it can fly more than 10 hours. So Airbus has said this aircraft should be humidified. So I think they go into a selection period to select supplier. With our cooperation with Airbus, I think we have really good chances. And again, it's so important that Airbus is standing behind humidification. This is totally different as it was for 10 years ago. Then they did not talk much about humidification. They said those aircraft, they are so comfortable. But now they say they are really comfortable when you add humidification. So during this COVID-19 period, we have made investments in the VIP or private jet segment. So that is the most positive things that has happened during the pandemic for CTT. I think this was the last slide. You can take the next slide, Carl. So we made it in 23 minutes. Was it okay, Carl?
That was perfectly okay, Torbjörn. Thank you very much. And the first question has to do with if we then think about the delivery side or the OEM side of your business, what are your thoughts on the trends regarding increased selection rates for humidification within business class towards the newer aircraft models such as the A350 and the 777X?
Yeah, of course we have two airlines, China Southern and Aeroflot, that has taken humidification for the business class in the 350. They have both China Southern flies it and Aeroflot will start to fly it. That is good ambassadors for us. We can show with those airlines that it works and it has an effect. So I think normally this will spread to more airlines. The question is how quick it will go now, because it depends on the recovery. But with the discussion of air quality, I would be really surprised if we don't get more customers. And on the 777X, you know, we have Emirates, which is the most important customer, and we have ANA, the Japanese airlines, that is also important. So I think on that platform, which will be the king of the aircrafts in the next 20 years, I think we will sell a lot for cabin humidification. If you have such a nice aircraft and you have the possibility to make first and business comfortable, I think many airlines will select it.
And the final quick question has to do with, we've read a bit of news how Emirates, for example, has shifted some of its 777X orders into Dreamliners. And what are your thoughts about how this would impact CTT, considering your high penetration on the 787 program?
Yes, I think this trend we will see. As I said, 787 is a very popular long-distance aircraft. It was it before the pandemic, but it's even more so because it can fly all the routes and it's not too big. And that's typical that Emirates then take some more 787 now before the market comes back. But generally for CTT, if we sell 2 or 3 humidifiers on 787, or if we sell 2 or 3 humidifiers on the 777X, it doesn't matter very much. What our goal is really to get cabin humidification also into 787. Then it wouldn't matter anything for us which type of aircraft the airlines select. If they select 787, 350 or 777X, we have the chance to sell humidification to all of them. So for us, it's really the marketing of humidification as an improvement of the cabin. Take some benefits of the COVID-19 and say it's not acceptable to fly so long in such a dry environment. So that will be our message now. And for us, it really doesn't matter too much which type of aircraft the airlines select.
With that, thank you very much, Torbjörn, for joining us during this Investor Days. Thank you all of you who have been listening, and take care.
Thank you very much.
All right, our agenda continues today. My name is Rickard Anderkrans. I'm a healthcare equity research analyst here at ABG, also the lead analyst for Biovica, which is our next company presenting here on this track. And I'm very happy to introduce the CEO of the company, Anders Rylander. So without further ado, Anders, welcome to this presentation and looking forward to hearing you speak today.
Yes, thank you very much, Rickard, and hello, everyone. My name is Anders Rylander. I'm the CEO of Biovica, as Rickard said. And just a few words about my background. I have a background as a consultant, many years within Accenture, and as an entrepreneur, co-founding management consultant firm Axholmen. And came into contact, met with Biovica more than 10 years ago and was very attracted about the large potential in the company, both for cancer patients being on treatment and the possibility of providing a better outcome of that treatment, but also for healthcare provider and the commercial potential in the company. So now 10 years later, I'm both the major shareholder and also the CEO of the company. And I think we have a very exciting time ahead of us, which I'll talk about. So if we move on to the third slide, the agenda slide, this is what I will cover. The unmet need in our solution, our collaborations and the results of those, the go-to-market plan, the next step after the first indication, and then a summary and some upcoming milestones to look out for. So if you move to the next one, the current situation in metastatic breast cancer, and this is valid for most metastatic cancer areas, I would say, but we've chosen to focus initially on metastatic breast cancer. And the good news is that there has now been developed a lot of treatments, which provides for a lot of treatment options for the treating physician, which is, of course, has been great for the patient. And you see that the cancer patients are doing better on their treatment. But on the other hand, it also creates new challenges, and that is that all patients does not respond to all treatments. So you need to find out to match that, and also over time, resistance is developed, and you need to discover that early on so you can switch to an alternative treatment so that the patient can get the best possible treatment and an effective treatment. Other challenges are also side effects. So you want to make sure that the treatment is effective, worth taking the side effects. And also the cost impact. Standard treatments within metastatic breast cancer are priced at more than $10,000 per patient a month. So it's also, from a health economic perspective, important that you use the resources effectively. Today, the treatments are monitored by using imaging. And here's an area where we believe strongly that we can provide a more efficient solution to the benefits of the patients and the healthcare providers and the payers. So if you move on to the next one, slide number 5, I'll talk about our product and how it works very high level. The product is called DiviTum. It stands for dividing tumor. And that's actually what we measure. We measure cell proliferation. And as you know, cancer is defined by uncontrolled cell proliferation, so we provide essential information. And the way we do that is through a blood sample from the patient, which is combined with our product, our assay, as it's called, which is packaged as a kit on a standard platform, so it's easy to implement in the different labs around the world. And you get a readout from that, which correlates to the cell proliferation level or the aggressiveness of the cancer, as it has been shown in several clinical trials. It also, if the treatment, which most treatments are, has the objective to inhibit cell proliferation, you should be able to see that there's a reduction in cell proliferation, which we've also proven in several clinical trials that it's a good way of getting feedback on treatment efficiency. And compared to imaging, which is the standard method being used today, we measure cell proliferation, the growth rate, which eventually will become an increase in tumor volume. And with imaging, you compare size of the tumor at start of treatment and at certain time points during treatment. And you need to give some time for the volume to build and to be able to evaluate. And that is usually done after 3-4 months into treatment. And we've shown in clinical trials that already after 2 weeks, we can see significant reductions for patients being on treatment. And talking about other ways of doing and potential competitors, that's slide number 6. Imaging I just mentioned, and that's important because that's a standard method that we don't want to replace. We want to complement, and especially within the monitoring area, and imaging is being used in many other areas and providing important information. Another area which we also want to complement is biopsies. And biopsies are being used, especially in earlier phases, and also not for monitoring where you have serial samples to be taken. And there are biopsy tests for proliferation, just like we're measuring, which is good because the treating physician is familiar with the concept. But we have a great advantage here with a liquid, a blood-based test. So we don't see that as a competitor as well, more that we can add something new. When it comes to blood-based markers, there are some that we are more direct competitor, and but that currently within monitoring of metastatic breast cancer, there are no standard well-established blood-based biomarkers. The closest to that is CA15-3, which is approved in guidelines and so on, but it's not being widely used and have some shortcomings when it comes to its precision, and also that all patients does not express this antigen that is being measured. So here we think we have an opportunity to add something that is superior. There are also new, very exciting and interesting new technologies coming out, like the CTCs, circulating tumor cells, and ctDNA, where you do genomic analysis based on blood samples, and that's really exciting and will provide a lot of information. But they have also been focused in other areas than monitoring of cancer for good reasons, because they require a lot of blood draw and it's a bit more expensive to implement than DiviTum. So we believe we have a great opportunity competition-wise as well within the field of monitoring of metastatic cancer in general and metastatic breast cancer specifically. Moving on to the next one, the clinical results, because this is essential. We need to prove our capability with data, and we need to do that in clinical trials together with some of the leading both academic institutions and key opinion leader oncologists in the world. And so far, we've been able to do that successfully with over 24 published clinical trials in peer-reviewed. Peer-reviewed means that the other experts in the field has been able to give input and question the results before publication in the scientific journal. And the majority of the results is in the breast cancer area, which is our initial focus area. But we also have proof of concept within other important areas like the gastrointestinal and lung cancer area, which are cancer areas where a lot of patients. And just recently, we presented data on metastatic malignant melanoma, which is also an important area where immunotherapies are being used, which is interesting for us to be able to complement those as well. And if you summarize the results from these clinical trials, we're shown to be prognostic before, if you take the samples before start of treatment, and in the local setting, prognostic for recurrence, and in a metastatic setting, prognostic for progression and for overall survival. And when we've been able to monitor taking serial samples, we've shown that we can give quick feedback on treatment efficiency. It's also important who that we've done these collaborations with, and it all started with Karolinska a few years ago. So now we're doing our third collaboration together with them, a prospective trial. And it has been widened into other European collaborators like the IBCSG and Big Against Breast Cancer, where we've just presented results from our first prospective trial, where we've been able to follow the patients for a couple of years. And in US, we have several collaborations with the Mayo Clinic, Johns Hopkins, the Dana-Farber, etc. And if you look at the breast cancer area specifically, this is how it looks. The next slide. We have data from local to the metastatic area, but we have focused on the metastatic area, and the next step that we would like to expand to is the locally advanced, the stage 3. And as you can see, the blue ones are the already published, peer-reviewed and published. The pink ones, we presented the results on a conference, and you can expect the results to be published soon. And the white ones are ongoing trials where we have, which is in progress, basically. So this will give a great foundation for our commercialization activities going forward, especially with the breast cancer area. Talking about commercialization activities, if you move to the next slide. The next slide is our key opinion leaders. That's the oncologists that are the ones that actually are performing these clinical trials. And this is a slide where we have oncologists that has been or are doing work with our assay or has been advisor to us in the past. So those are, of course, really important. And we see the oncologist is there where we want to create demand, and we want them to communicate also these key opinion leaders the results and to reach to, because oncologists listen to other oncologists, especially the ones with a lot of experience within the business. And if you go to the next one, we have an example of one of them, Luca Malorni. Here I want to do some PR for our upcoming Capital Market Day. Luca has a lot of experience, more than 4 completed clinical trials and a couple of really interesting one ongoing. So he has a lot of experience from our assay, and he will share that experience, plus be able to talk about, answer questions on the 9th of June when we have our Capital Market Day. Yeah, so if we move on to the next one, we have commercialization activities. What are the key activities in order to bring this to the market for a successful commercialization in our mind? And here's a summary of the key activities. We've been working for a couple of years now, for many years, and we're coming to the end of this as we are about to launch the product. And of course, you have to have a product, and we've actually now developed our 3rd version of the product, which has been tailored to meet the requirements of the FDA. And that has been in validation since completed since quite some time. And with a product, you can do the clinical documentation, which I just talked about, the clinical trials proving the value of the product. And that's essential basically for all other commercialization activities. That's what you need for regulatory, for all the other activities listed on this picture. And when it comes to the regulatory pathway, as we want to get into the US market, in order to be allowed to market and sell the product for clinical use on the US market, you need to get regulatory approval from the FDA. And that process is called 510(k), which I'll come back to. But that's not enough. You have to also get into the reimbursement system so you can get paid for the product. And a good way of making that happen is the guideline inclusion. So we're working to generate data for that and health economics to prove the value of the product. And then also you need a commercial partner, someone that could offer the product as a service and also has a sales force so you can reach out to the customers and the oncologists. And when you put all this together, you're ready to launch the product, which we plan to do after this summer when we get the regulatory approval in US. So if we move on to the next one, I'll just say a few words on our FDA process because it's been a bit special due to the pandemic situation. But we did submit our application in September last year. And you see the process to the left here that the FDA uses a very strict process normally. And we quickly passed the first 2 milestones and went into substantive review when they start reviewing the details of the application. And about the same time, we also got the message, and not only we, everyone got the message that the FDA now pauses all applications for a 90-day period due to the pandemic situation and are focusing on reviewing COVID tests instead. And we got a new message after 90 days that this will be prolonged for another 90 days, except for prioritized submission or applications. And just a couple of days later, we got actually the positive feedback that the FDA will start reviewing our application, which is really, really positive to be in the few selected ones. So on the 29th of January, the review was restarted, and we have been in dialogue and provided more information to the FDA. But it's obvious that they don't stick to their normal time plan, as you see here on the left. So it's a slower process than normal, but still we have a good dialogue with the FDA and have been able to provide answers to all the questions so far. And we're waiting for feedback now. And but I think it's a realistic time plan, which we have communicated up until now, that Q3 this year is when we expect to get the final feedback and the clearance of the product. And that's also in line with how the FDA have been communicated. If you go to the next one, this is an example from their general communication, where they say that we continue to focus on COVID-19 applications. We have a few selected categories that we are prioritizing as well. But slowly they're going back to normal and starting to work on their backlog that has been created during this time. So yeah, it's never, we don't like delays, but we're grateful that our review were prioritized and started several months ago. Moving to the next one, reimbursement and health economics. We've been doing some work on that as well. We've been doing that for many years actually, but now based on the results that we now have, we're able to compile a health economic model, and we've done it as a budget impact model for the payers, as we want to initiate discussion with payers. And yeah, to simplify the message and the outcome is that every dollar spent on DiviTum gives $3 back in savings. And it also confirms we have used a price assumption in the level that we've been communicated before, $400 per test, and that's also confirmed in that process. So we were very happy about this, and this has been presented on the 17th of May on a health economic conference, and we've been using this model to initiate discussions with payer in for example, a payer advisory board and so on. So we're on track within that area as well. Moving on to the next one. Yeah, how are we gonna enter the US market? Well, we have a strength in our collaborations with many of the leading cancer centers, and those are also part of to a great extent, the NCI designated cancer center. There is 71 of them, that's our focus area, where our initial customers, the early adopters, which is a good way to enter the market and get a good market penetration. And we like to do that together with a lab partner. And initially we're looking more on us like a level 2, tier 2, not the big ones, LabCorp's Quest, but more specialty lab strong within oncology that has a sales force. And we're in discussion with some of those and progressing well as well. So that's also an important piece for our upcoming launch, as well as what I just talked about, the payers, and we've initiated that discussion. There are payers that are known as early adopters, and we have a lot of data, so we think we have a good opportunity to already now involve in discussions and get the first reimbursement already this year from those, and then build from there. And yeah, on the slide you see some of the ones that we have in mind and have or will initiate discussions with. Okay, moving on to the next one, a few words about the rollout plan and the market potential. as I've said a couple of times, the US market is where we want to introduce our test, and that's why we do all the activities there. So we've set up a team in the US doing a lot of the activities, you see a market potential figure there as well, which is based on the number of patients living with the disease times the price levels, which we have based on market research and now confirmed, as I said, in payer discussions, plus the process of using the product, which has been also, we received feedback from oncologists and payers. So that boils down to the market potential estimates. And then the second market we want to enter is the European and the Nordics, because it's very similar in terms of treatment and treatments and process guidelines and so on. We will be more selective because the countries vary a bit more than US has one reimbursement system, but our objective is to enter one of those markets before end of this year. And when we enter a market, our ambition is that we should be able to get 15% of the market potential within the first 3 years, and that long term we'll reach 50% of the market potential. And the product also has, as products in general in this area, has very high gross margins. But of course, we will have a partnership set up where we will share revenues. Okay, moving on to the next one. Next step after initial launch of breast cancer. Yeah, there's potential to expand. The first step is probably locally advanced breast cancer, but then geographically outside the markets, but most important maybe out into new cancer areas. And that's also why it's so important that we have proof of concept within many important areas like malignant melanoma, lung cancer, gastrointestinal. But we also have sales to pharma, and collaborations with pharma opens up also opportunities to do collaboration products, which could lead to new products. So there's the metastatic breast cancer launch is the first step on menu. And to summarize it, we have a very interesting product with a great potential that can meet an unmet need. We have several very strong collaborations with well-known academic institutions and key opinion leaders. And the result from those gives us a strong foundation for our commercialization activities that we're now doing. The potential is large, and that's for the initial application that we can widen over time. And we have an exciting 2021 where we expect to see feedback and regulatory clearance for 510K from the FDA. That is a starting point for our launch in the US. And we already started with our work, health economics, to get in the reimbursement system, which we expect to happen also during 21. And launch of the first country in Europe as well. Thank you very much.
All right, thank you very much, Anders. Just a quick Q&A here then. So just it'll be interesting to hear on how we should think about the potential positioning of the DiviTum test. Do you believe it will be used standalone or in some type of treatment algorithm? And if so, what could be the potential combinations, in the final clinical setting?
Yeah, that's a good question, and see if I can answer it here somewhat structured. Short term, the 510K application and so on, the intended use is that will be used standalone, but it will be used in combination with other diagnostic information, like on the slide where I showed the other input. And that's how generally the treating physician is using a lot of information and interpreting that without an algorithm, just combining information. However, I think you are opening up an interesting question, and that's an area for us to develop, that we can actually add biomarkers for certain purposes, either if you want to target certain areas or if you want to do collaborations with pharma to add biomarkers that more correlates to the mechanism of action of their drug. But that's more of a research roadmap and looking further into the future. But that's something that we think is very interesting and are looking into, but nothing I could communicate in the details about.
Great, I appreciate that. And in the interest of time, we'll unfortunately have to end the presentation here, as we have a busy agenda ahead of us. But I'm sure that Anders would be happy to take any investor questions that you might have, and you can reach out to the company in that case. I want to thank you so much, Anders, for participating.
Thank you very much.
Thank you. Have a good day and best of luck going forward.
Thank you, Rita.
Thank you.
Hello and welcome back to ABG's Investor Days and the upcoming presentation of GARO. My name is Ophelia Aspemyr and I'm an equity research analyst here at ABG. primarily covering clean tech and renewable stocks. And I today have the pleasure to introduce GARO's CEO, Patrick Andersson, that will go through a presentation followed by a short Q&A session. But anyway, I won't steal any more of your time, Patrick, so please go ahead and start the presentation.
Thank you, Ophelia, and hi everyone, and welcome to the GARO presentation. My name is Patrick Andersson, and I'm the CEO for the GARO Group. Next slide, please. I will start with an introduction of the GARO Group. GARO was founded in 1939, which means that we have been over 80 years in business. We develop and produce innovative products and turnkey solutions for the electrical installation markets. And we divide our business into two areas, Sweden, which consists of our Swedish operations, and GARO International, which cover our business in Norway, Ireland, Finland, Poland, and in the UK. We have production on 4 sites, 2 in Gnosjö in Sweden, where we also have our head office, and 1 in Värnamo, also in Sweden, and the 4th production site in Szczecin in Poland. And we are approximately about 430 employees in the group. Next slide, please. On this slide, you can see our business consists of 4 product areas, and you can see the share of the total sales in the first quarter 2021 compared to the same period last year. The largest product area is electrical distribution products, contributes to 42% of the revenue. The second largest area is e-mobility, accounted for 32%, up total sales up 28% in the year earlier. Our product area project accounted for 19% of the total sales, and the 4th area, temporary power, accounted for 7% of the total sales. Next slide, please. I will now explain more about our 4 product areas and what GARO could offer for products and turnkey solutions to the market. Our largest product area is electrical distribution product, which contributes to almost half of our revenue, as I mentioned before. The product area have approximately 3,500 products for the electrical installation market. This is product and turnkey solutions that the installers are using in many different applications every day, such new buildings, renovation sector, or industry, and so on. Example of the products is consumer and combination units, meter cabinets, components, plugs and sockets, safety switches, etc. Next slide, please. One area which GARO is the market leader provider is product used for measuring, controlling, and providing electricity to camping sites, marinas, and car heaters. This type of recreational product has increased during the COVID-19 situation when a lot of people have vacation at home. This is an area GARO are the market leader, and with a lot of knowledge about this type of system, we started our very first e-mobility product during 2008. Next slide, please. The area which is growing fast is the e-mobility business, as I mentioned before, accounted for 32% of our business during Q1. This area, we divide our product into 3 segments. 2 of them you can see on this slide. To the left, the wall box with 1 or 2 outlets that you can see outside your villa, apartment, or outside an industry. To the right, you can see the public chargers that you often see in applications such in parking garages, shopping malls, etc. These products are smart and could exchange information between the charger and the cars, for example, to load balancing, which means that you can use the energy on the site in the best way. You can also use a system called G-Cloud for measuring and control the system on your computer or smartphone, or integrate this to another backend system. Next slide, please. The third area in e-mobility is fast charger or DC charger. This is product and solutions you can see along the highway, and you can charge your car or transport vehicle. These products are used for the full electrical cars, which now increasing rapidly, but also different transport vehicle is increasing. On this slide, you can see example of our products. To the right, you can see our wall-mounted 24 kilowatt charger called Aktier, and our ground-mounted 50 kilowatt charger Alcadon. Next slide, please. To summarize the product area e-mobility, I will show you GARO's complete offer to the market. We have the product and turnkey solutions for the consumer, public, and the fast charger for full electrical cars or transport vehicle. On top of this, we acquired EV Charge Partner during 2020 to make the e-mobility business even more complete, so we also now can offer service agreements. Next slide, please. When it comes to project business, is an area providing complete and customized solutions for power supply, such distribution and cable cabinet and switchgear. These type of products are used to power supply apartment, properties, industry, and of course, e-mobility solutions. These cable cabinets were launched to the market demand for environmentally friendly, robust, and user-friendly cabinets. And here we can see clear synergies between the product area, project, electrical distribution product, and also e-mobility to power supply and load balancing the e-mobility solutions. Next slide, please. The fourth area, temporary power, offer product used on construction sites or different event to power supply, lighting, heating, and drying during the construction time. All these type of products are developed to be robust, user-friendly, but also to be sustainable and to be energy efficient during the construction time. Next slide, please. Product development is important for GARO, and we continue to strengthen the product development to manage to grow organic. Our team within R&D take a holistic view of product development, including function, installation, and sustainability. Our industrial designers create a modern design and sustainable design, and one important thing is the choice of material to make the product sustainable. Before our products are launched on the market, they are tested by independent test institute to current standards. The quality assurance is an important part of the total development of new products and enables us to guarantee electricity safety at all stages, but also in terms of installation and usability. Next slide, please. Here you can see our financial targets for sales growth, profitability, return, equity ratio, and dividend policy. In the row above, you can see the outcome for the last 5 years, and with some effect due to the COVID-19 situation on the sales growth 2020, which also affected the decision for the dividend for 2019. But aside that, GARO have over time a good performance due to our financial targets and also a strong balance sheet. Next slide, please. Sustainability is important for GARO and our stakeholders. We have chosen to focus on 6 of FN's global goals. We believe GARO can make difference. You can see on this slide which goals we have been chosen. I will give you some example of our sustainable actions. When we develop new products, GARO focus on the choice of material with the aim of developing highly functional products while minimizing impact on the environment during both manufacturing and use. Together with other companies, GARO participate in local projects that work to have zero emissioning on the country's transport system. The vision is to be an energy plus country that is easy to live, reside, and work in with energy efficient and fossil-free travel. As a part of our effort, GARO has the goal that all GARO transport will be fossil-free according to the conditions set by Fossil Free Sweden. Important suppliers are audited and monitored based on quality and sustainable factors. A new law on conflict minerals will take effect in the EU from 2021, and GARO has commenced a status analysis and started to collect data to prepare the right procedures to ensure regulatory compliance. GARO has made a choice as far as possible to primarily use suppliers for Europe to reduce transport needs and also to the risk of human rights violence. It's a given for GARO to offer everyone the same opportunity to develop and support for retaining the motivation, staying work at the company and saving a good ambassadors. Next slide, please. Strong growth and development opportunities. And here our strategy remains the same. The main driver of growth will be organic growth. A successful product development has been and will continue to be the key of this growth. And on top of this, we're always looking on potential acquisitions where we can add either new additional products, product areas, or companies with an edge. An example of this is the acquisition of EV Charge Partner last year to strengthen our e-mobility business. We are also looking at new geographical markets with a focus mainly on north part of Europe. And here GARO's vision is to become the leading brand on its chosen markets. Next slide, please. When it comes to the outlook, the strong market recovery has brought about certain challenges for GARO. Lack of component access is currently impacting the industry to various degrees. In the first quarter, GARO's managed to secure supplies, but limited access to raw material and components may impact our production. We assess that the core market condition has essentially not changed aside from the pandemic, even though great uncertainty prevails in society in regard to the pandemic long-term consequences on the economy. The market for charging infrastructure is growing structurally with a rising number of rechargeable vehicles, and we see a continuing strong trend with further expansion of charging infrastructure in all expected markets. Demand for construction-related products in Sweden, combined with the important renovation sector, is expected to remain stable. The trend in other markets served by GARO, aside from the pandemic, is expected to be similar. So to summarize the outlook, all in all, GARO has a positive view on the long-term market condition, mainly driven the growth about charging infrastructure. Thank you for listening, and I'm ready for questions. I'm ready for the Q&A session.
Okay, some technical issues. Can you hear me, Patrick?
I can hear you.
Perfect. Thank you so much for a good introduction and a good presentation to GARO. I
Thank
now
you.
have some questions for you, and I would like to start with the Q1 report. And you reported a very good and strong Q1 report, and whereof you stated that this was due to high volumes, tight cost control, but also a favorable product mix. I wonder if you could please elaborate on the product mix and what we should expect ahead.
As I said in quarter one, we can see that the demand in e-mobility solution is strong from all segments, but also in all our countries. So we believe also in this quarter to have a good product mix, mainly driven by the AC products such the wall boxes and the public chargers.
Okay, thank you. And it seems like you reached your target, your margin target. Do you think that you will increase this target in the near term?
Of course, we are working on daily basis to increase the margins, but how much it should increase or not, we think we are on a strong level. But of course, we are working all the time to have better margins. So that is. I can't say something about that. We're working on daily basis to have better margins, so to say.
Okay, thank you. And as a follow-up question on the Q1 report, you had some, despite the strong results, you had some postponed deliveries in Norway. Can you please elaborate on the development of this and if we still should expect this to occur in Q2?
Hopefully we can have some deliveries in Q2, and that's up to our customer, which has been postponed deliveries due to they couldn't install this due to the COVID-19 situation. But we got some signals that we can start to deliver some chargers during Q2, but how many we don't know at this stage.
Okay, thank you. And then, of course, we need to touch upon the component shortages and also higher raw material costs. As most of you know, this is a huge problem right now, and I wonder how this affects you and if you have any specific strategy to avoid any larger problems.
As we mentioned in quarter one, we have managed quite well, and we have a team working with this issue on daily basis to handle this, to get the material to our production and also negotiating with our suppliers for the prices and so on. So we think it will not affect us so much during Q2, but and we are working to secure material for also the autumn. But of course, we have some price issues we have to handle to the markets. And we're also working with that on daily basis to both to secure material and prices. We have a good team working with that.
Okay, that sounds very good. And geographical wise, I think you touched upon this in your presentation, but I wonder how your business is being impacted by the green wave in, for example, Poland.
Of course, the green wave will have a good impact on the business because it drives electrical cars in Europe. And Poland, as you mentioned, is a very interesting country due to they have a lot of investment due to the e-mobility solutions. And we also have a very strong position. And we also got a prize in Poland last year at the electrical mobility leader for 2020. So we have a very strong position in a very interesting Polish market.
Okay. And I also wonder if you're planning to expand any geographical in the near term.
We are always looking for interesting new markets, but nothing I can mention on this stage. But as we have mentioned, north part of Europe is very interesting for GARO, but nothing I can mention here.
Okay, I understand, Patrick. And thank you for the presentation and for all your answers. We now take a short pause and open up for Ferronordic's presentation in a few minutes. Thank you all.
Thank you.
Hello and welcome back to ABG Investor Day. Up next we have Ferronordic presenting. My name is Adrian Gilani. I am an equity research analyst at ABG and I am co-responsible for covering Ferronordic. With me today I have the CFO of Ferronordic, Erik Danemar, who will first hold the presentation, and after that I'm going to ask a few questions. With that being said, I will hand it over to you, Erik.
Thank you very much, Adrian. I will start straight away. I hope you can see the first page of the presentation. It should show introduction to Ferronordic. Adrian, I see slide 2 on my version. There we go. Yes.
Let's do it.
Right. So about Ferronordic, in very brief, we are a dealer of Volvo construction equipment in Russia CIS. We also are dealer for a number of other brands, Desta, Mechalak, and recently also Sandvik, mobile crushers for Sandvik, so a smaller segment of them there, and also Rottne, which is a Swedish forestry brand. We are aftermarket dealer only for Volvo trucks in certain locations in Russia, Volvo and Renault trucks. And we also engage in sales of used equipment, and of course service and support to our clients is a big part of our business. In Germany, we are dealer for Volvo and Renault trucks in parts of Germany, about 20% of the German market. And we have our head office for the group in Stockholm, and we're listed since 2017 on the Nasdaq. So with that, we can go to the next slide. Which gives you an overview of who we were and who we are. So you can see when we opened the business in 2010, we had only 160 employees and 6 locations. And then, of course, in Russia only. Now we're closer to 1,600 employees across the group, and we have almost 100 outlets. The 4 pie charts you will see are there to give you a sense of how the business is structured or the different revenue streams we are. So your top left there, you will see revenue streams, about 2/3 coming from sales of new equipment and trucks, about 1/4 being aftermarket, and then you have other revenue and among it, importantly, contracting services, where we provide services to our clients. They pay us per cubic meter. We own the equipment, we run the operators. Geographical split, you will see Germany being about 1/5, the rest being Russia CIS including also Kazakhstan since 2019. If we look by industry, top right chart or pie there, the point there, I think, is what we want to see. This shows Russia, Kazakhstan specifically, that we serve a number of different industries. So we would say that we're quite well diversified. And then again, Russia CIS, if you would look at those different brands we market and service, you will see that Volvo CE construction equipment, that is in 2020, was 87%. So really the dominating part. This is looking at new equipment sales. If we go onward. This slide is meant to show the opportunity that we see in Russia CIS. So we're looking at a recovery in GDP from what globally was a decline last year, of course, and getting back to high growth rates. We also have an economy that is very rich in resources and therefore cater to a lot of the construction equipment we sell. And we believe that there is more potential in that market. We're also looking at an infrastructure, excuse me, that is relatively poorly developed if you look in comparison to other countries. It's a very big country, so you would expect probably lower road and railroad coverage per square kilometer, but Russia recognized itself that it should be higher for them to utilize their industrial potential, and that brings us to the lower right there, where you can see that Russia Russia has its so-called national projects, a large part of which goes into infrastructure, and that also opens opportunities for the products and services that we provide. Onwards to next slide, please. This slide shows the market in Russia in number of units. And I think two things that we want to highlight here. One is that it's a relatively volatile market. It has been historically. That comes with certain risks. And I think we have shown that we can be resilient to that. But it also shows that we're currently only at about half the market that we saw in 2011, 12, 13. And we, at least in Ferronordic, don't believe that that was even a peak, and therefore that there's a lot of potential for the market to grow, for Russia to maintain its park, so not only grow the park, but maintain it, and indeed roll out the infrastructure that Russia needs. If we go to next slide. We see a corresponding picture for trucks in Germany. Again, in Germany, we do only trucks, so no construction equipment there. And point of this is, bar the decline that we saw related to the pandemic, a much more stable market. In Germany, the investment case is different. It is stability. It is us increasing the market share for Volvo and Renault in these markets by increasing our network coverage, increasing the brand image in the area where we operate, and then also increasing our share in the aftermarket. And that's, again, very pivotal to our case in Germany. Next slide, please. Our strategy focuses on 6 things, and I think it's worth going into this. Our objective is to be the leader in the market for construction equipment and trucks, and to be perceived as such by our clients, and to help our clients to achieve leadership in their respective areas. We want to have an aftermarket absorption of at least 1. This means that we can cover our fixed cost with operating profit from the aftermarket only. So we're not relying actually on selling new, although of course we want to do that as well. It's a prerequisite to care for the aftermarket, but we want that to cover the fixed expenses we have. We want to expand into related business areas. So this can be other brands, but it can also be different business types, as we've done with remanufacturing, which is actually where I'm sitting at the moment in Yekaterinburg, visiting our plant here. Contracting services is where we own the equipment and run the operators, and our clients tend to pay us per a metric. It could be per kilometer or per ton delivered, metric delivered. We want to develop industry-leading digital sales and service platforms. We are well, I think, developed in that area, but there's still a long way to go. And then, of course, further geographical expansion, given the platform that we now have and the experience we have. In time, we're looking for that as well. Next slide, please. Short on the financial objectives that tie in, they are very much related to the strategic opportunities we have. We are looking to double the revenue that we had in Swedish krona in 2020 by 2025. Important components of that growth will come from Germany, the investments we're making there, but also from contracting services, and where we see big opportunities. We want to have an operating margin above 7%, so EBIT margin, and keep leverage in terms of net debt to EBITDA below 3 times. Onwards, please. Now, this slide shows our coverage. I mentioned when we started in Russia, there were only 6 sites. Having a dense network coverage is a prerequisite to sell new, and to have a big population, which you get by selling new machines, is of course a condition to be able to capitalize on the aftermarket. So I think this is a network that we're very proud of. We can reach manage clients very well in Russia. We also keep it relatively mobile. Almost all of these sites are leased over a relatively short period, so we can move with clients. A few of them are bigger, especially when it comes to the truck service centers we have as well. And as you can see here also in the lower part of this to the left, you will see Kazakhstan. So we have now rolled out a number of sites there. We continue the expansion in Kazakhstan, and we're quite interested in and excited about the opportunities we have in that market. Next slide, please. Germany, our network as it looks at the moment there, the white points on this is acquisitions that we have recently announced end of last year and this year. Here, market is slightly different. In Russia, CIS, we tend to go to clients. In Germany, our trucking clients come to us. So it remains slightly different facilities, more permanence. Very important investment we make in very state-of-the-art facilities to service our clients, but also continue to rolling out to have a denser network there to make sure that Volvo and Renault clients that we serve get in our area a common service coverage over the area there. And again, very important that we can capture the aftermarket for our business model, so we can have that absorption that I mentioned to you and achieve attractive profitability there. I think we can go to slide after that. This slide shows Russia and CIS specifically, and it actually ties back to an early slide where we showed how the market can be volatile. So this, I think, is something that points to two things that we want to highlight. One is the resilience of our business model, which we think sometimes is underestimated. And what we show here is on the gray line, you will see the market. As we showed it earlier, and then you will see our revenue in the red line, and in the black line you will see our operating profit. From 2013 to 15, you will see that the market actually dropped in number of units by as much as 83%. And over that period, our revenue dropped only, so to say, in quotation marks, but by 40%. But interestingly, our operating profit didn't actually really move at all. It came down from 14 to 18, as you see here, but from the base level, we're only down 8%. And that aftermarket that I mentioned and that absorption is one reason for that. There is also some negative correlation when clients buy less new units. They tend to need to service them more and provide more aftermarket maintenance of their machines to keep high utilization levels and high productivity in the machines. That's one part of this slide. The other one we're trying to show here is again the potential of the market. You will see the leverage that we have from the market recovering, and we're still only at about 50% of the 2010 levels in the market. Very brief on the first quarter before I hand over for Q&A, so we have time for that. We had, we think, a very good, strong quarter when it comes to unit sales in Russia, up 31%. That's in a market that was up 26%, which is a very strong recovery in the market. And again, we were able to increase our market shares somewhat in that recovering market. And we had a record first quarter operating result. So indeed, for first quarter, it was a record for us, both in terms of the number itself and the margin that we achieved. And notably, despite the currency headwinds, as we write here, in Russia, we had on average rates, which is what we use for the income statement translation, a depreciation of 29%. But also actually in Germany, Germany, in the euro, it was a 6% depreciation. So despite these factors, we were able to achieve very strong results. And in Germany, we were very happy to see a growth in the aftermarket, which, as I mentioned, is a very big part of our strategy to make sure that becomes a bigger part of our revenue stream there in both relative and absolute terms. We continue to invest in our service network. Slide previously on the investments we've done in Germany, but also in the organization there, arranging the incentive structures and resetting the organization to work more along the group level, group standards that we want to introduce and that we believe can achieve strong efficiencies in Germany. We continued to have low working capital, and that supported strong cash flows in the quarter. And we also announced that we had introduced a new credit facility, or rather renewed a credit facility with Nordea, and expanded the facility we had. With that, I think we can turn to the next slide. So if we look a little bit more in detail, then we see across the group a growth in revenue by 13%, and that is then organic compared to when we looked last year's quarter by quarter. We always dealt with the Russia versus Germany, but this would then be organic. In Russia specifically, we had a total revenue growth of 20%, but then 54% in local currency. Much driven by that market growth and our market share gains. So new machine sales up by, or rather equipment sales, that includes used as well, up by 22%. 57% in local currency. Aftermarket sales was flat, but that is, we would argue, a good achievement. The aftermarket is slower to adapt to a depreciation in the currency, and we saw a decline year on year in the fourth quarter. But in this quarter, as you see, we were up 28% in rubles, so flat in Swedish, so catching up with the depreciation there. And then in contracting services, we doubled our revenue in ruble terms, so 55% in Swedish krona. And then in euros, we were actually more or less flat in euro terms, but slightly down then 6% in Swedish when it comes to Germany and first quarter total revenue. And if we look at the revenue streams, then again, what we'd like to highlight here probably is the increase in contribution from the aftermarket, which was up 28% in euros and 21% in Swedish, and then made up a bigger part of the revenue share. Operating profit up 57% to 80 million Swedish. That is again our best operating profit in a first quarter ever. So very excited to achieve that despite the negative contribution from Germany, as it were. Russia standalone at 94, and that's then of course an effect of the higher revenue, a slightly lower a gross profit, more or less flat year on year, but then also lower SG&A in the first quarter of this year versus the first quarter last year. In Germany, the operating profit was down from -10 to -14, but we did have what we would probably classify as one-offs there related to both acquisition costs, these acquisitions that we made, and restructuring costs that we are carrying from changing our organization and staffing in Germany. And then an operating margin of 6.3 versus 4.6 last year, and a strong margin in Russia of 9.3. And I mentioned the strong cash flows, which allowed us to have a positive cash balance of 33 million, so up actually from fourth quarter versus last year. And I think that was the last slide. If you move on there, you will have our outlook, where we're saying that there are a lot of uncertainties, and not at least on the supply side, as I think most in the audience would be aware. But we remain cautiously optimistic, and do expect our markets to recover this year following the pandemic experience that we all had last year, and see good drivers in all our markets, in Russia, supported by strong commodity prices and investment program that we see, and in Europe a general recovery, not only in Germany but across also Europe, and that favoring the transport that goes through Germany and therefore our market. So with that, I hope I was on time, and hand it over to Adrian.
Okay, thank you for your presentation. Now we're going to move on to some questions, and I would like to start off in Germany, since you've had a very active M&A agenda in Germany recently. Can you talk a bit about the competition in Germany in terms of other Volvo truck resellers? Is the market here fragmented, and if so, is there a trend of consolidation going on?
If we look at our area, it was more fragmented. You had Volvo operating 9 sites itself, and then you had the rest being at tops, I would say, operators having 2, or either just being 1 workshop each. And if we go back actually to our entry into Germany, we took over those 9 workshops from Volvo, but then also I mentioned that there was one with 2 workshops, so we took over that one as well. And now we're trying to choose the locations and the workshops that we think are most important to complete our coverage in our area. And if we can do that by acquisitions, as we've seen in the examples that we have announced, that's an option. We acquire businesses. Sometimes we do asset deals. One of the examples was that. And thirdly, if we cannot find such terms that we can agree on, or indeed if the location is not where we need it or in the shape we need, then we're looking at greenfields as well. But this is part of a consolidation strategy, not only from us, but actually from Volvo as well. I mean, they left the area where we're operating. They have another Volvo dealer north of our area, so they're not dealing in our area, but that is also consolidating in that area. Volvo kept the south for itself, and then west rural area that there is another dealer. So I think that there is a consolidation in Volvo strategy, trying to get the more homogenic client experience. With the fragmentation you had before, it was very different service coverage basically that Volvo clients got across this patchwork in a way, and that I think also affects the brand image, and that's something that Volvo and we believe that we should work on.
Okay. Also, recently you've shown some strong growth in the amount of units sold, or the new units sold, and obviously over time this should translate into aftermarket sales. Can you explain this dynamic a bit? How long after new units are sold until you see aftermarket sales coming in?
Thank you. It's a good question. I think you see it almost immediately, but to your point, definitely it increases over time. So I mean, we have, through our own contracting services, a lot of experience in this. Now, how long you use, for example, an articulated hauler depends on how intensively you use it. If you use it as we do when we're working for gold companies or palladium producers, as we're doing up in Norilsk, basically as close to 24 hours per day as we can. We've reached 22.7 hours, I know. So these kind of levels, so working almost around the clock. Then you would tend to use them for about 3 years, and then you either need to send them to the plant where I'm sitting now, again, the remanufacturing facility, or you replace it, which is often what our clients do. And then you would see, definitely a tangible increase in the maintenance costs each year. for us. It's hard to give percentage, I mean, in terms of how much it increases, but definitely as you depreciate the machine, you see an increase in that work that you provide. Our clients, they are big industrial. They would tend to try to keep a balanced portfolio or fleet of machines. So it wouldn't be that all of them are third-year machines, but they would try to rule it gradually, and therefore the level of activity would be relatively stable.
Okay, thank you for your answers. With that, I think we're going to have to round up this session since the next presentation is starting in a few minutes. I'd like to thank you again for attending today, and I will leave it to you for any final remarks if you have any.
No, thank you very much from you to you, Adrian, and also to the audience. Thank you for all your interest. And yes, if you want to have any more questions, you can follow up with questions to us in Investor Relations. You'll find our details on our website, of course. Thank you very much.
Hi and welcome to our next presentation with Seafire, presented by CEO Johan Bennersten. Myself, my name is Max Bacco, and I am an equity research analyst here with ABG within Industrials. And with that said, Johan, please go ahead with the presentation.
Thank you, Max, for the introduction. As Max mentioned, I'm the CEO and founder of Seafire. Next slide, please. Seafire is an investment group specialized in SME acquisition. We focus on Swedish legal entities and have currently 6 companies in our portfolio. Our targets are companies in each market with revenues above about 30 million and up to 300 million. So far, our largest company is Nobetiker with about 120 million in sales. Our investment criteria is that the company should be profitable, but also have a true development potential. We have a clear value add strategy in order to develop our companies. Our targets are 10% increased growth annually and an EBIT increase also on 10%. This means that we have an active ownership agenda. We are using our private equity toolbox to develop the companies. We prepare business plans 3 to 5 years ahead with annual target goals to be reached. In order to add competence, we also recruit senior professionals in the companies, but also in the board of directors for each company. The team has a long experience from M&A, but also to develop businesses, and we have also been CEOs in operative companies in the past. Today we have the 6 companies resulting in a revenue of 327 million pro forma in Q1 this year, and EBITDA of about 40 million. Next slide, please. We have 2 market segments in our portfolio. It's industry. We have 2 companies there, Ferrin and Åkerstedt, and 4 companies in trading and services. Åkerstedt and Ferrin, to start with. Åkerstedt is the manufacturer of customized fans to the industry and also agriculture. We have customers as Tornum, Väderstad, and Nederman, for example. And it's Västgötaslätten company was started about 35 years ago, so we have a long tradition in making fans to the industry. Ferrin is our latest acquisition. It's placed in Kristinehamn in Värmland. It serves the painting industry with technical services and paint, semi-finished paint. The main targets are customers in the automotive like Volvo, CE, we have Epiroc and other companies in that sector, but also house construction companies or building materials to house production as Dalok when it comes to doors. So this company has been around for a very long time, serving Värmland, but also northern part of Sweden. In trading and services, we have 4 companies. Nobetiker is our largest business. It's a provider of electric vehicles with own brands like EvoBike, it's electric bikes. We have Nitrox, which is scooters, and also Limo, which is the electric vehicles for elderly people. We have a true Nordic strategy and also e-commerce business. So we sell all just through e-commerce, our 4 websites in all 4 countries. Then we have Luda, which is a provider of surveillance products to the agriculture markets and the industry, logistic industry. The main focus here is the European markets, with France, Sweden, and UK as the largest countries. Then we have 2 companies. One is Linguacom, which is a service provider of translation services and also interpretation. It's a domestic or Swedish market it serves and has a revenue of about 50 million. And then we have Hiden, which was the first acquisition I made before starting Seafire. And Hiden is providing the film industry with premium film camera products. All companies are profitable. 4 out of 6 have EBITDA margins above 10. And our characteristics in those companies are they are profitable and have a growth typically exceeding the GDP. We have clear uniqueness unique selling points or reasons to be in all companies, which makes them more attractive for customers in specific markets. And with our diversity, we have spreading the risks, both when it comes to customer base, but also comes to the different specific industry. Next slide, please. We have an operative model with 4 cornerstones. Leadership, the first one. We run the companies as separate entities. They have a local management team and board. We recruit industrial experts with company with both network but also industrial knowledge in order to create value through the board. Strategic governance, we have senior chairman both from the team but also the external industry leaders that we recruit. We have development pathway, as said earlier. We have a business plan that we should develop after our acquisition of companies. It's about 3 to 5 years horizon on the business model, which is then broken down to annual target goals, both operational but also financial targets for each companies. And the last thing here is administration, and that is best practice models for administration. It could be digitalization, e-commerce, marketing, sales, and that's also for the industrial companies, which like Åkerstedt, so to get awareness and market knowledge through digital social media. We are creating also a Seafire Academy, which is a development and training platform for the CEOs and management teams in the companies. It's about leadership programs, it's about growth, ESG, and also best practice models. Next slide, please. If you combine the 6 portfolio companies, make it 4 pro forma P&L, we have a good growth since 2015. We have almost doubled the sales from 170 to more than 325 million. It's a CAGR of 14%. And also the profitability has increased from 18 to about 40. So a very good development in all companies through the years. And this is the basis of how we are looking at acquisitions that should have a good growth and also a good profitability, which we then take the next step with recruitment of management and expanding the businesses. The strongest contributor here is Biovica, but excluding that, we have a CAGR of more than 6%, which is a bit higher than the GDP during this period. Next slide, please. Short introduction to the team. I'm the CEO and founder of Seafire. I've been in the private equity business since 2000 at Swedish startup Capman, focused on life science and healthcare. I'm a master of science in engineering and also medical background. Created or was partner and head of team in the Stockholm-based business in the healthcare market. After building a portfolio of small cap companies and sold it, I started Seafire with a more long-term owner perspective. And also been around in various securities for a year, working with restructuring businesses and also healthcare. I'm having 14% of the shares in the company. Peter Friberg joined in June 17. He has a master of science in economics, and he has been working in CFO position for a very long time. And also a member of the founder family in Bergs Timber, and served also in the board of directors there for a period. Mats Gudbrandsson, he joined in August in 17. He will leave now in July. And he has background from financial sector, Catman, and also Alcadon. So we have a small experienced team in Seafire, mainly making the M&A activities, and with the change here, I will come back to that. We will strengthen the management team to develop, increase the development in Seafire the coming year. Next slide, please. The board of directors, we are 5 in the board now after Sara Wallin joined here at the AGM in April. Joachim Berner has been chairman since the start in 17, and also Lennart Jakobsson. They have been long timers in Seafire, but also we have known each other from their time in Catman also. Lennart was head of the IT sector team and Joachim as an advisor. This is active board with both market M&A experience and also private equity experience, and also operational background. So it's a very good sparring board for the development of Seafire. At the AGM, as said, we appointed Sara Wallin, and she will expand our network to the west with her background in Almi and also now in Chalmers. So ventures. So together also the board have almost 10% of the shares, so they're really committed for taking Seafire further in its development. Next slide, please. Coming into the key events in Q1 this year, we had a very active quarter. First, we made an acquisition of Ferrin. It's a company, as said, in the specialized and service provider, producer of industrial paint. We made that January 4th, paid 62 million on debt-free basis, and also the founders and the management team, Ulf and Björn Lundgren, they become a shareholder in Seafire, and that's I think a very good sign of our model to get them on board on Seafire with true incentive in order to develop the business Ferrin, but also be part of the share increase in Seafire. With that, we made a refinancing of our debt and issued a bond of 200 million out of a frame of 300 million. And with that, we have a very good platform for further growth and a more cost-effective financial structure with a bit lower interest rates. With that, we got Creades as a main shareholder through a directed issue in late March, and that was a really credit, I think, for the Seafire team and business model to have them on board, and with Creades and the bond, we have a very good opportunity to increase the acquisition, making more acquisitions, and also get up in size. We have about 70 million in cash balance end of quarter 1, together with a potential tap issue of 100 million. We will have a good capacity for further acquisitions. Next slide, please. In financial, during the quarter, we had organic growth of about 2%. That was driven of Luda Farm, Ferrin, Åkerstedt, and Inga, which had a quite good growth, all of them. Nordbutiker was down 12%, and that was mainly due to low stock of goods, which we have postponed, the stock has been postponed a couple of months. But also we have had some season swing with quite cold weather, but also the restrictions have lowered the sales. So it have been postponed a couple of months, so we will see the peak sales moving from Q2 to Q3 this year for Nordbutiker. the underlying demand in all companies are really good in the markets, but of course this COVID situation make bottlenecks when it comes to supply of goods for companies, but also especially the industrial companies have some issues with other suppliers like Volvo trucks, for example. So that will be a bumpy 2021 with less transparency between the quarters. Next slide please. Comes building for the future. Some more of the Seafire Academy. We have a management training program launched for all the CEOs in the companies, and that also the board of directors are the external board of directors are also into that program. We also will include the management teams. We will also increase our efforts in the ESG area, where we are working with sustainability and have also, like a very good business model for a more sustainable business. But we have to be better in presenting how we work and also take advantage in our different markets. Also in Seafire Academy, it's about best practice models for recruitment of key persons. We have a process there, and also digitalization of administration and other processes in the team in the companies, so we make it more efficient. We will also investment in teams. We have added management team in Nordic with a purchase manager and a business developer. Lohilo Foods with software and product manager. And Ferronordic, we will recruit a CFO in order to free resources for the CEO when it comes to marketing sales activities. Supply chain, as said, there are bottlenecks. We are putting a lot of effort in order to have the short-term tactics. But for example, we are now putting the plans for 22, 23 in order to have a better situation when it comes to stock of goods in our portfolio companies, and especially in Nordic, the most important there. Next slide, please. After the quarter, as President mentioned earlier, we had an AGM where Sarah joined the board. She will be a good new board member, adding both network and experience from small companies, SMEs. We also strengthened the board of directors in the portfolio companies. We have Thomas Barmo. He joined the board of Biovica. He was former CEO of Webhallen, and also new chairman in Åkerstedt with Göran Borsby. Joined here now in May, and Björn Andersson will share he's sharing Ferronordic and Lohilo Foods. And that's also to get a governance model with increased bandwidth when it comes to the Seafire team members, which in the past has been the chairman in the company. And also, as said, we are recruiting a full-time CFO and investment manager in order to step up the Seafire organization, which will be more focused on M&As rather than running the portfolio companies with the board. We had also in the Q1 a reservation of 0.8 million in Åkerstedt from an expected customer loss. We hope we can get that back, but it will take some years, but it will be in the future result. Next slide, please. Last slide here. We have a very good development in the share price. A year ago, it was traded at about 5 kronor per share and increased now to 25, 26 kronor per share. We have a market cap of 350 million. The largest shareholder is Aktier, which is in the Avanza pension you see here. And together my ownership in Sydsken and Össur Pension AB and some private holding of 14%. So that was it. Next slide. Thank you.
Thank you very much, Johan. And now over to a few questions. So if we begin with acquisitions, since that is your main focus, how do you find your acquisition targets? Is it through your network? Is it through intermediaries, sellers contacting you directly, or is it something else?
So far, with our deals that we have done, it's through intermediaries, small M&A boutiques, and that has been more where our limited resources in the M&A team, but also the financing has been our biggest bottleneck. So with this new bond and CRAD, I think we have more money to spend than ever. So with that, we can increase our efforts, and that leads into a proactive work that we're now doing in searching companies ourselves. That could be new platform investments, but also we are looking at add-on acquisitions in our portfolio companies. So we will increase our efforts in finding targets ourselves with the financing and also the expansion of the team here during this year.
Okay.
But
regarding
sorry.
Bolt-on acquisition, how involved are management in your different companies in the acquisition process? For example, by identifying bolt-on acquisitions.
We have, depending on companies, in some companies we don't really have a bolt-on strategy. Like in Linguacom, we see a very good growth path, organic growth path. That's more interesting than acquisitions. But for other companies, the management have a true initiative to find acquisitions, like in Paris and Åkerstedt. And also Luda Farm, for example. So they are running the acquisition process or identify. Often they know they have the network and they know the companies. Mainly it's Swedish companies, but they are then working because it's about in Paris industry, for example, all entrepreneurs they know each other. So there's a quite network in that business, and also Åkerstedt, the smaller companies there, which could be a potential target. Jesper is have contacts with those. So in that respect, they are running it. But when it comes to perhaps big acquisitions, then we are also taking perhaps the lead sometimes. So they are the portfolio company CEOs. They are definitely in the process and have the initial discussion. But when it comes to financing, due diligence on the legal and financial side, the Seafire team is supporting, of course. But it's an advantage, of course, because our CEOs they know the industry, they know the markets, the customers. So it's a true strategy that we have to find add-on acquisitions in our portfolio companies.
Yeah, and you have now operated as a listed company for approximately 2 years. Where do you see yourself in, let's say, 5 to 10 years?
Well, our goal is to make at least 2 acquisitions a year. So if you say like 5 years, we will have sales more than 1 billion in tech. We will be on the Stockholm Stock Exchange, the main market. And perhaps that will happen prior 5 years, but that will definitely be our target. 10 years is hard to say. We will still be in our area. I mean, when you become bigger, it's easy to get up in size when it comes to acquisition. So to make, if you have a revenue of 2 billion SEK and you make an acquisition of 50 million SEK, it doesn't have huge impact. But I think our real target and our competitive advantage is to work in this SME sector 50 to perhaps 300 million in sales in the target companies. So I would say that in 5 years, 1 billion in sales at least, and listed on the main market. 10 years, perhaps 5 billion in sales. I don't know. It's easy to buy companies, but you have to take care of it, and in order to develop it in a good way. And if you have very much financial capacity, of course, you can increase the prices. But I think it's important to have discipline in order to stay at this 4 to 6 times EBITDA or EBIT, and also making investments in a good pace where you can actually manage and take care of the company.
Yeah. Thank you very much, Johan. I think it's time for a short lunch break. So thank you to you for joining us here today, and good luck on your future growth journey. And I hope we'll be hearing more from you in the next quarters. Thank you very much.
Thank you.
Bye.
Yeah, tak. Welcome to this presentation with BankNordik CFO Rune Nørgaard. My name is Mads Tinggaard. I'm covering financials for ABG Sundal Collier. So with these words, I would like to hand the presentation over to CFO Rune Nørgaard. Go ahead, Rune.
Thank you, Mads, and thank you, ABG Sundal Collier, for having us. As Mads said, my name is Rune Nørgaard. I am CFO at BankNordik. And I will give the next 15 to 20 minutes, I will give you a brief introduction to BankNordik as an investment case. So if you could change to the next slide, please. Assuming we are on page 2, this is just a brief overview of BankNordik as a group. We are a banking and insurance group headquartered on the Faroe Islands. We service our customers on the Faroe Islands from a fairly consolidated branch network of only 5 branches. Our second market is Greenland. Where we service our customers through one banking branch in Nuuk, the capital of Greenland. We are around 230 full-time employees in the group as a total. And as I mentioned, we are not only banking, but we are also insurance. We conduct our insurance business on the Faroe Islands through 2 fully owned subsidiaries, one life and one non-life insurance company. And we also hold a small real estate broker service company on the Faroe Islands. Up until recently, we also had activities in Denmark. Relative to BankNordik's size, it was a fairly big business we had in Denmark, servicing private customers in the Danish market. But due to refocusing BankNordik, and also because we experienced increased interest from Danish banks in buying our Danish activities, we sold of the activities with effect from 1st of February this year to the Danish bank Spar Nord. And if you could turn to the next page, page 3, I just give you a brief status on the sales process in respect of the Danish activities. As I mentioned, the sale had effect from 1st February this year. So we had the earnings the first month of this year, and from 1st February, the Danish activities are owned by Spar Nord. But due as a banking business is a technical business, the actual handover of the customers, the transfer from our IT platform to the buyer's IT platform, will not be effected before 19th of June this year. But everything is going as planned. And due to the sale and reduction in risk-weighted asset, we were quite well capitalized before the sale, and after the sale we are uncomfortably overcapitalized, if you could say so. And that's why we have announced that we intend to pay out an extraordinary dividend of 700 million Danish kroner during the coming next 3 years. If you look a little bit on the numbers, I have to say that the numbers that we are looking at in this presentation are we have excluded the Danish activity, so it's only relevant numbers, also historical numbers for the continuing business on the Faroe Islands and in Greenland. Look at the P&L and actually also on the balance sheet compared to first quarter last year, we have a progress on almost every line. An increase in net interest income, fee and commission income, and also an increase in insurance income. Of course, we have to say that the first quarter last year, a part of it was negatively affected of the uncertainty surrounding the COVID-19 pandemic taking its first hit on the Faroe Islands and Greenland in the beginning of last year, March. So it was the last part of the first quarter last year was negatively affected by COVID, the uncertainty surrounding COVID-19. Of course, when you follow the profit and loss all the way down to profit before tax, we are quite a bit better this quarter than we were last quarter, and that's due to the one-off income from the sale of the Danish activities. We managed to sell off the activities at book value, plus a goodwill of above 250 million Danish kroner. Sadly, we have to compensate our IT provider for lost turnover due to the sale of our Danish activities. So the net profit that we booked in first quarter is just a little bit below 80 million Danish kroner. But still, we're quite satisfied with the sale and the price that we managed to obtain from Spanor. If we look at the key metrics for based on the first quarter, cost income wise, we are still a little bit shy of our long-term goal of 55%. We think 55% in cost income ratio for the type of bank that we are, then we are quite an efficient bank, and we're getting there. We're not there yet, but we are on our way. We have approximately 61% leaving first quarter this year. Looking at the return on equity, we have a goal going forward that we would like to be able to return around 8% or better after tax on our capital. A little bit shy of that at the moment, but you have to factor in that we are heavily overcapitalized at the moment. So of course, a extraordinary dividend of 700 million would improve on that metric. Capital-wise, well, I've said it a couple of times already. We are quite comfortably in place there. We have a long-term goal going forward of CET1 ratio of 23% and total capital, including the MREL requirement of a management buffer of 33%. If we could turn to the next page, that's page 4. Looking at our equity story, the headline is focus on improving customer experience and efficiency. And I would like to start up to just shortly describe our two main markets, because we are in a quite unique situation. We operate in two fairly, not completely, shielded markets. On the Faroe Islands, where we hold the market share of approximately 40%. In the banking market on the Faroe Islands, and in Greenland we have a solid market share of above 20%. Going forward, we do not have a growth strategy for the Faroese market on the banking side. We think we have the size that we would like to have here. So we will just grow with our customers and in the economy in general. But in the Greenlandic market, which is an interesting market to do banking in, we would like to grow to take market share over the coming years. When it comes to insurance on the Faroe Islands, we also could see a benefit in taking some market share in insurance. And for both markets, in respect of pension and investments, we see quite a bit of an upside if you could take market share in these fields too. So we operate in quite interesting markets to do banking and also insurance in. The way we approach our markets is we have a strong focus on the customer experience and delivering what we are good at, and that's providing our customers, private as corporate, with plain holistic advice on finance, investments, and insurance and pensions. And besides doing that, we know that the way forward is not only doing business as we always have, but we have to have a more digital approach, not only the digital approach towards our customers, but also an internal digital approach in order to be more efficient, in order to meet our cost income target of 55% or lower. Being a large player, a significant player in two societies as the Faroe Islands and Greenland, it's quite obvious that we also need to have a goal or approach that we positively contribute to these markets. We do not want to exploit them. We want to contribute positively to the Faroese society and also to the Greenlandic society. The way we measure that is we have starting measuring and also making publicly available certain ESG targets and numbers. But if you look on our key stakeholders, customers, employees, and shareholders, on the customer side, we have a strong focus on improving the customer experience, and we have a overall target on net promoter score of above 40%. It's actually quite high for banking. Usually banks are lower than that, and we are also at the moment, but we have a firm goal of improving the customer experience to be best in class when it comes to customer experience. Also on the employee side, we would like to have satisfied employees, and we do have, but there's always room for improvement. And then we have also a firm focus on that stakeholder. When it comes to the shareholders, I mentioned the key targets: return on equity, 8% after tax or more, of course. Cost income 55% or lower. Dividend payout ratio going forward of 50%. Supplemented with the share buybacks when that is possible. On the capital side, we like to reduce our capital, so we have a CET1 ratio of approximately 23%, and total capital, including the ML requirement of 33% going forward. But as I mentioned, in respect of the positive impact on the societies that we are a part of, I could use a couple of minutes explaining what we do. If you turn to the next slide, page 5. As the headline says, we have an increased focus on ESG and on sustainability, and integrating sustainability as part of our business. And we truly believe that that's not only just something you have to do because certain public interest require us to do. We think that this is a common goal that we share with not only our shareholders but also our customers and our employees. So sustainability and conducting a sustainable business is something that we have quite tight focus on going forward. And the old simple truth of what you measure is what you get also seems to be valid when it comes to ESG, and therefore we, with the annual report for 2020, we started disclosing certain ESG numbers, and including CO2 emission, both direct and indirectly. And we set a fairly ambitious target of reducing these kind of emissions. On the social side, we have a focus on improving or having no gender gap, a even distribution between the genders, both on the manager side, but also in respect of the composition of the employees in each department. In respect to the latter, we are a little bit behind. Some departments have an overweight of men, some have an overweight of women. But actually, if we look at the numbers going out of first quarter this year, on the manager side, we are almost spot on, 50-50 between men and women in management position. We are quite happy with that, and aim to keep it that way. We also develop a few number of call this green products, where we give a discount on the interest rate if for loans provided for electric vehicles, or if our customers are getting rid of a non-sustainable energy supply for heating to a sustainable electrified heating system, and so on. And we will have that focus going forward to make sustainable to make sure that sustainability is also a part of our product portfolio. If we turn to page 5, page 6, sorry. Going from the overall ESG numbers and diving down into the traditional numbers for banks impairments, I'd like to just give you a brief understanding of the soundness of our loan book. In the upper right-hand corner, we've shown the reversal of impairments that we have had the last many years. Actually, we should go all the way back to 2014, the aftermath of the financial crisis, before we could actually see a significant number of impairments. And actually, in the following years, we have reversed more impairments than we did back in 2014. We have a slight impairment in first quarter this year, but our expectation for the full year is still a very low impairments, and that's saying something about our customers are quite able to repay the loans that we provided to them. If we look at the corporate side, we also have quite a good diversification between the different sectors. No sector comprised more than 10% of the gross loans in the loan book. And if you look at the private side, almost all of the private loans are first priority mortgage loans provided to Faroese homeowners. So they are well covered by security. And you can see here's also a fairly low loan to value on these loans. So the loan book quite sound and quite well diversified, and we have good collateral from our customers. If we go to page 7, another important number for a bank is, of course, the capital position. And as I explained, we are, you could say, uncomfortably overcapitalized at the moment after the divestment of the Danish activities. You can see up in the right-hand corner, if we include the result for first quarter this year, including the one-off gain from the sale of the Danish activities, and if we include the upcoming improved legislation on capital we should put aside when providing loans to small and medium-sized enterprises. This is the so-called quick fix regulation that was put in place in Denmark. I think it was June last year. Not a quick fix for the Faroe Islands. It was a little bit lengthier process, but the relevant authorities and the Faroese legislators are working on putting these regulation into force on the Faroe Islands too. And when they're put in force, combined with the result of first quarter, actually we lift our CET1 ratio up to 33.7. And we intend, as I explained, to reduce. We have a goal going forward on the CET1 ratio of 23%. So we intend to pay out a dividend of extraordinary dividend of 700 million. We plan to pay out the first last part of it, 450 million, in the second half of this year, and then the last part during the course of 2022 and 2023. Of course, before paying out, we will take due consideration to the guidelines and approvals needed from the relevant authorities. If we turn to page 8, I will just end my presentation just giving a brief insight in the impact of the COVID-19 pandemic on the Faroese market and the Greenlandic market, or those two economies. So if you turn to page 9, the Faroese economy, as you can see on the GDP growth rate has been quite high, quite steep in recent years, and we actually expect a true V-sized recovery after the COVID-19 downturn that we saw in 2020. We actually expected the growth rates already this year, and back to more or less normal in next year. So a quite swift recovery is expected for the Faroese economy, and it was not that deep a downturn that we saw. What has affected us most is the reduced prices for export goods, where the primary export good is breed salmon, and followed by mackerel. And we see a little bit of a downturn in prices for these two species, driven by COVID-19 and the situation primarily in restaurants throughout the world, that they are not open for business, and therefore, of course, they don't need the product. That has pushed the prices a little bit downwards. There's no trouble in selling; it's just a matter of selling to a reduced price. But anyway, if you look at the unemployment rate, of course, it took made a little pike first half last year, where everything was in lockdown, also on the Faroe Islands, but it has fallen to a low level already, and not as low as before the pandemic, but still at a very low level, and virtually there's no unemployment on the Faroe Islands at the moment. Population is still on the rise, and that's also has been a contributing factor, along with, of course, lower interest rates, to the increasing housing prices on the Faroe Islands. Of course, this is something that we monitor quite closely, but we do not see a sign of a bubble yet. But of course, if prices are keep increasing at the pace that we have seen last year and this year, that could be a early warning sign of a starting housing bubble on the Faroe Islands. Turning to the last page, Greenland, same picture, but instead of salmon and mackerel, it's shrimp and halibut, two other, you could say, species that are have affected the Greenland economy negatively due to reduced selling prices. But we see the same picture in Greenland as we see the Faroe Islands. They have been fairly shielded from the negative consequences of COVID-19. I think my time is about to be up.
Yeah,
Mads?
thank you, Rune. And I just have we have a few minutes for questions here, and I think I better start with the distribution, since these are, I mean, the size is very significant with 46% of the market cap, and you have different tax rules across your investor base. So it has become a bit of a hot topic. When do you plan to inform about the type of the distribution that you are going for? I mean, dividends versus buybacks.
Well, our plan as the world is at the moment is when we make public available our half-year results, we can inform the market on how we plan to handle this distribution. But as you say, there's a lot of factors going on, and of course we wanted to do it in the best way possible for our investors. But of course we have to take due consideration to the opinion and guidelines from the authorities, both the Danish and the Faroese.
Would it be possible to choose a model where you could have an initial reverse tender buyback auction and then have an extraordinary DPS flagged and paid after the buyback. Would that be a possible scenario?
I think we haven't fixed ourselves on a certain scenario yet. So at the moment, every scenario is possible, and of course we would take due consideration of what kind of model would suit our investor base the best. But we haven't made a decision yet. No.
Okay, but you are kind of focusing on the different preferences and.
Yes, we have that on top of our mind when we talk about distribution. That there's different ways to do that, and some is more beneficial. Some ways are more beneficial for investors than others, and yeah, we're aware of that.
Okay. Yes, and finally, is there any news on the possibility of the Faroe government exiting its 35% stake?
No news has been, no discussion has been about that topic, at least as far as we know. Of course, we do not know more than the general public know, but there has been no signs and indications whether they want to exit or not, actually.
Okay, so still politically uncertain outcome for that one.
Yeah.
Yes. Great, Rune. Thank you very much. In the interest of time, I think we have to end it here. But very good presentation. Thank you.
You're welcome. Have a nice day. Thank you.
You too.
Good day everyone, and welcome to this next presentation here at ABG Investor Seminar. My name is Victor Forsell. I am the research analyst here in the healthcare team, And we are actually very glad to have our latest addition to the research coverage here at the healthcare team. It's C-RAD with the CEO, Tim Turn, and the CFO, Henrik Bergentoft. Welcome, guys, and please go ahead with your presentation.
Perfect. Thanks, Victor. Thanks for the introduction. So I will guide you through our presentation now. If we move on to the first slide, please, I would like to start with a short introduction to C-RAD. For those of you who don't know C-RAD, that will be new. Radiation therapy market overview is kind of the next point to put C-RAD a bit in the context of the overall market. I will move over to solution and products, our contribution to radiation therapy or cancer care. And then I will finalize my presentation with the business model and the growth strategy, and then take you through the financial highlights. So if we move on to the first slide, or next slide, rather, just very brief. The slide appears a little bit cut. I don't know if that's only on my end now, but okay. So C-RAD market cap roughly 2 billion SEK at the moment. Last year we had a revenue of around 220 million SEK, and then operating profit of 8%, translating into 17 million SEK. So with almost 60 people around the world, we are serving our customers and ultimately the patient to improve cancer care and improve the process within radiation therapy. If we move on to the next slide. So, I mean, if we look at the cancer care market, essentially there are three ways of how cancer is treated today. Surgery, chemotherapy or drug therapy, and then radiation therapy. Our focus, C-RAD's focus, is only on radiation therapy, and we are contributing with improving the safety and increase efficiency within radiation therapy. Next slide. So I think a very important pillar of assessing the case, the C-RAD case, is whether or not this technology is on its way to become standard of care. And our clear assessment now is certainly that we are on this way. We have several indications that surface tracking is adopted as standard of care. And I think if we look at the tenders, especially here in the Western world, most of the tenders are including our positioning products or positioning products in general. So there is a demand in almost all tenders. Another point which is very important, that the major vendors have decided to secure access to this technology. I will come back to this later, because that's the opportunity for us to cooperate also with Elekta. If we look at the latest technology within radiation therapy, which is proton therapy, that's kind of the spearhead of radiation therapy. I think here, in basically all cases, positioning equipment is required. And as the last point, I would like to highlight here, I mean, the larger societies within radiation therapy, we name here the AAPM, but it's also ASTRO, came out with clear instructions, protocols, recommendations for customers how to operate with surface tracking in their space. So this is a very strong point where we believe that are underlying our assessment that this technology will become standard of care moving forward. If we go to the next slide. Just a quick overview about the radiation therapy market. I think what we can say, there are several market drivers. First of all, there is a huge capacity shortage of, according to the World Health Organization, around 10,000 linear accelerators, primarily in the emerging markets. I think if we look at the more advanced markets, it is primarily on the Linux side a replacement market, but that generates also a great opportunity for us to be part of this replacement cycle and bring our products into the mix. I think what we can also see, that radiation or the adoption of radiation therapy has been improving in general all over the world. So more and more patients are treated with radiation therapy over other techniques. And I think what is very important for our industry, or for our product specifically within the industry, is that there is a continuous push towards high precision beam delivery, which means that while the beam is delivered with high accuracy, also the patient needs to be positioned very accurately. And that's really what C-RAD brings to the table, ensuring that the tumor is in the right position at the right moment in time. Next slide. Victor? Excellent. So if we look at the opportunity, there are around 12,000, maybe a bit more than 12,000 Linacs installed worldwide. And we assess the, for us, addressable market to be roughly 3/4 of these 12,000. So we can say around 9,000 linear accelerators are installed in what we call the advanced markets. That are the markets that we are addressing with our technology. I mentioned before that we assess the surface tracking motion management to be on its way to become standard of care. What it means is that from our perspective, ultimately, the large majority of the machines in our addressable market will be equipped with surface tracking. So we say 75%, can be a bit more, somewhere between there and 100%. Ultimately. So if we look at the current market penetration from C-RAD, but also looking at our competitors altogether, we see that only 20% of the addressable market are equipped with surface tracking. Also, we need to conclude that C-RAD has been outperforming the market over the past year. We have been growing faster than our competitors. If we move on to the next slide. C-RAD has by now an installed base of around 630 systems. Another 130 systems are in the order backlog, so basically sold but not yet delivered. If we look at the market potential, I'm referring here a bit to the previous slide, the number of Linacs that are to be equipped, around 5,500 Linacs to be equipped, which is approximately a potential of 5 billion SEK. If we break this down on an annual basis, we can say roughly 12,000 Linacs are sold on an annual basis, whereas 700 of this 1,200 are going in those markets where we assess customers to be interested in our technology. So that gives us a market potential of, on an annual basis, of roughly 1 billion crown. If we move on to the next slide. I think this slide very well displays the development that C-RAD has done, but with C-RAD also the overall market. I mean, this technology was very new in the beginning. When we brought it to the market, I think the big question for customers was, okay, why do we need surface tracking? Why do we need motion management? That has changed, and over the past years, the question is more, why do we need C-RAD? So I think what I'm saying is that the understanding in the market from the customer side is there that they need surface tracking. So now they are actually on the next level and look more at comparing the different vendors. And that was a very important step, again, in the context of this technology becoming standard of care. So we have been growing quite significantly over the past years. And I think, again, there is a great opportunity still out there for us to harvest. Next slide. If we look at the competitive landscape, essentially there are two main vendors, whereas C-RAD is, in terms of installed base and market share, the number 2 right now. We have a market share of approximately 30%, maybe slightly above. Then we have our main competitor, which is Vision IT, UK-based company, around 60%, and then approximately 10% are other vendors, or occupied by other vendors. I think what is important, however, is if we take a bit of a closer look, Vision IT became very strong through a cooperation that they had with Varian. Varian is the in terms of Linac equipment, the largest vendor worldwide, and this cooperation ceased now 1-2 years ago. Since then they are focusing on direct sales as well as we had before. At the same time as they ceased their relationship with Varian, we engaged in a partnership with Elekta. So in currently 2, or including Japan, 3 markets, US and China, Elekta has our products in their price book, is able to offer the products along with their value proposition, along with their linac to their customer. And that's, of course, very important for us from a market access perspective. If we move on to the next slide. This slide puts C-RAD a bit in the context of the entire radiation therapy field. There are a few names here that probably appear familiar to you or are familiar to you. Elekta, Clear, Varian, I mentioned already, Mevion, IBA. Those companies, they are providing the treatment equipment. They are providing the equipment that is actually delivering the dose to the patient. Some of you might have heard about Research, Stockholm-based company. They are very much focusing on software, so their main product is the treatment planning part. Then there's dosimetry, and then the fourth segment here is the patient positioning space. And that is really the area, this sector where C-RAD is active, where we are positioning us with our current products. We move on. So this is another slide showing the development of surface tracking over the past years, and again in the context of this technology becoming standard of care. What we see on the left side is a diagram, a chart showing the different indications that are treated at a radiation therapy center. This is now based on US data, but can basically be applied also to Europe and also some Asian market. What we see, we don't need to go too much into details, but what we can see is that essentially there are no big changes in terms of the distribution of the various indications over the past 10, 11 years. And that's also our assessment that this will not change. So there are certain indications where radiation therapy is simply a good way of treating those cancer indications, and we assess the market to not change in that respect over the next years. What has, however, changed is, if we look in the middle of the slide, the implementation or adoption of surface tracking for the various indications. 5 years back or 6 years back, surface tracking was primarily used for breast patients. It is a large indication, roughly 20-25% of the patients that are walking into a radiation therapy center are breast cancer patients, so it was already a fairly large indication. But what has happened over the last 5 or 6 years is that the adoption has further increased, and by now more than 70% of the patients are benefiting from surface tracking if the system is installed. So that's basically showing the versatility. So it's not any longer a pure niche product, but rather a product that can be used on the large majority of the patient. Again, in the context of this becoming standard of care, a very relevant data point. If we move on. I mentioned initially the C-RAD value proposition is basically based on treatment efficiency on the one hand and accuracy improvements on the other hand. So in principle, the positioning accuracy is always a function of time, or time is a function of the accuracy. And what it means is essentially that there are different ways how patients are positioned. There are the lasers, which we see on the chart in the lower right corner. The lasers, which in principle is a fairly quick way of positioning the patient, but unfortunately the accuracy that can be achieved is also fairly limited. In some cases it's fine, but if we speak about high precision radiation therapy, it's certainly not sufficient anymore. If we look to the other end of the scale, what we call cone beam CT here, very high precision, but it takes quite some time. So, and C-RAD is positioned with the surface tracking products at the sweet spot where we achieve a very high accuracy, but do it also very quick. And that's important in certain markets. If you look in the Asian countries, they simply can't afford to take imaging methods that take so much time. So they are very much relying on having a quick way of positioning the patient, and by that improve accuracy and also patient throughput. In the Western countries here, where maybe the patient volume is not that critical, not that high, the focus is absolutely more on the accuracy side of things. We move on to the next slide. patient that is undergoing radiation therapy follows a very stringent process. The first step is imaging. Typically, a CT will be taken, a CT image will be taken, and a treatment plan is established. C-RAD is in the what we call imaging suite, represented with the Sentinel system, which is a system to monitor and track respiratory motion for two more indications that are affected by respiratory motion, which is breast, which is lung, partly liver, treat patients. If we move on to the next slide, we see the workflow in the radiation therapy room, which is really our main product, the Catalyst family in different versions for the photon therapy, but also proton or particle therapy. Some of you might have heard about Scandion Clinic. Scandion Clinic is one of these proton facilities. Again, it is important and used for those techniques where high precision radiation therapy is applied. Then accurate patient positioning is also required for the patient. If we move on, the clinical advantages of the C-RAD solution are it's dose-free, which is becoming more and more important because it reduces the side effects for the patient after the treatment. It's a non-invasive system, so high level of ease of use. It's markerless, translating into patient comfort on the one hand, but also for the therapist, or the one working with the patient and the system. It definitely has less impact on the daily workflow. This is becoming more and more important. C-RAD has put a lot of attention in integrating the system into the Linux system, into the record and verify system, so in the surrounding systems, in order to facilitate a smooth workflow. And last but not least, it is patient compliance. I mentioned earlier the versatility of the system. It can simply be used on a large number of patients. It's not a niche product anymore. It can be used on the large majority of the patients. Okay, next slide. So this is an attempt to show the clinical background, why this is becoming so important, and also what has developed in radiation therapy over the last years, and was creating the need for accurate patient positioning. So on the left side, we see a conventional treatment technique. Typically, the radiation beam is applied from different angles. In the middle, we see this so-called hotspot area, this square-formed area, and a subset of that area is the tumor. We see the red delineated part. So essentially what we can conclude is that the radiation beam is very well encapsulating the tumor, but we also need to acknowledge the fact that not only the tumor, but also other organs or the tissue around the tumor is very much affected. In this example, it is the bladder as well as the rectum. The disadvantage with applying radiation to those organs is simply that it will cause side effects. And as patients in general get older, their focus is to avoid side effects to ensure a good quality of life for the patients even after the treatment. And therefore, what we see on the right side, more modern treatment techniques where the dose is delivered with very tight margins around the tumor. We see that the bladder and the rectum are more or less spared out, so there's no radiation or very limited radiation delivered to those organs. So the positive effect is simply that we reduce the side effects. The challenge that comes with this is that the patient motion becomes more crucial. So if the patient starts to move, the radiation will not be delivered to the tumor anymore, but rather to the surrounding tissues only. So the curative effect is gone, and we have again side effects. And therefore, the positioning part is becoming so important, and that's why our products are required. Next slide. So we are continuously looking at expanding our technology. We are working on what we call workflow management. The last year we have released two products, brought two products to the market in that space. Here, without going too much into the details now, but the overall objective is to improve the efficiency even further and provide the customer with additional modules that can be connected to our positioning system that I introduced on the earlier slides. Next slide. So the business model is pretty straightforward. We spoke about the market. It is cancer centers in advanced radiation therapy clinics, in what we call the advanced markets. We are approaching those sites, these customers, with essentially 3 sales channels. Direct sales, which is still the largest channel in terms of order volume. Then we look at the distributors in certain countries where we are not represented ourselves. We assign local independent resellers. And what is fairly new for us is these industrial partnerships. In this category, the Elekta Corporation is falling into this category. And that is really the important opportunity for us to be able to have Elekta or partners to present our products to their customers as part of a package together with their Linac. And we started with that in 2019 in the US. I think this cooperation has started very well. We added China to the territory as well in 2020. So we are starting to work there as well. And Japan is one of the other countries that we have already a cooperation in place with Elekta. So our focus is really the clinical and the product competence. We have outsourced all manufacturing to sub-suppliers that take care for the entire assembly process and ship the products to the customer where our people are showing up for service and installation. Next slide. One of the important parts of our business, or increasingly becoming important parts of our business, is the service business. We usually sell our product or offer our products together with service contracts. Typically, that's a long-term commitment from our customers at a certain percentage of the product, which is typically around 9%. As an annual fee, they become software updates, they become hardware replacements, spare parts, and service as needed. So on the right side, we see the distribution in the various regions. But we clearly need to point out that in the US, essentially all customers go for a service contract. In the EMEA region, the coverage is still less, but still growing. The APAC region is the situation is a little bit different. Markets, the more advanced markets like Japan and Australia, most customers have service contracts, but other markets like China, for example, the idea of signing up for a service contract is a bit more remote for most of the customers. We move on. So our strategy moving forward is based on the 3 pillars: product excellence, sales excellence, and service excellence. I think the main product, the catalyst product, the positioning product, is well developed. The applications are clearly defined. It is really a matter of us scaling up the business now. We have the clinical proof that the system does what it's supposed to do. So our objective is now to get the message out to as many customers as possible, combined with a long-term business component, which is the service contracts that I mentioned on the previous slide. Next slide. So if we just go quickly through the financial highlights from the first quarter this year, we had a quite significant growth on the order intake side. If we look at local currencies, almost 50% growth. Revenue grew with 16%, or in local currencies, 23%. We had a quite significant order backlog increase over the last year because, as a consequence of the pandemic, in certain areas we were not able to deliver as much systems as possible, simply because hospitals were to a large extent closed or access was limited. So the order backlog is increased basically by 30%. We had an operating profit of around 6 million SEK in the first quarter, which is fairly good for us. The first quarter is usually the weakest quarter. We see usually towards the end of the year stronger results. And if we move on to the next slide, we see the distribution in the different regions. I think what is very encouraging to see is that the business in North America picked up again. We had a fairly good fourth quarter, so end of last year. Now also good continuation in the first quarter this year. Also very encouraging to see is the performance that we have in the APAC countries. This is on the one hand China, but also the region or the countries outside China are developing very strong. Next slide. Here I'm coming back to the seasonality. It is typically so that we see a pattern that the second half of the year and specifically the fourth quarter is coming in very strong, both in terms of revenue, but specifically also on the order intake side. And that is due to the fact that most of our customers are public hospital or governmental funded hospital. They typically have their investment cycle or their budget cycle over the calendar year, and then towards the end of the year, investments are pursued. Next slide. Then quick look at the revenue distribution for the first quarter. Without going into all the details now, but I mean the APAC region developed very well over the last year. That's why we see also the fairly high order intake that we had on the previous slide, also translating in a pretty steep upwards leaning curve for the revenue. The US, we had a good fourth quarter, but quarter 1, 2, and 3 in the US were fairly difficult simply because of COVID. That's why we don't have very impressive revenue from the Americas in the first quarter. So in general, I can say that we see a book and bill period, also the period between order intake and revenue of around 6 months across all regions. Next slide. Yeah, and this is perhaps summarizing the growth story for C-RAD. We see both our revenue development over the past 3 or 4 years. We see also how our operating expenses have developed. And I think it is very simple. I mean, we reached a point where the technology is adopted by our customers. We are simply growing revenues right now faster than we need to grow our operating expenses. Next slide.
Tim, it's Victor here. I think we actually are starting to running out of time. So if you have any final comments, that would be great to conclude this presentation with.
Absolutely. Just to mention, I mean, I think we are overall very much exposed to very volatile environment, both on the order intake, but also on the revenue side. But if we go to the last slide, I think to sum up the C-RAD case, I mean, we have a proven and now also recognized product essentially worldwide. We have comprehensive market access. Our direct sales force, which is currently still standing for the lion's share of our orders, but then also a very good development in terms of our industrial partnerships. I mentioned the Elekta Corporation in this context is helping us to further grow our business. I want to highlight, and that's very important, I mean, we are firmly convinced that this technology is becoming standard of care. So it is now a matter of scaling up the business, rolling out this technology to our customers. And final comment here, we have a very stable financial platform. The company is debt-free, and we have around 100 million SEK in cash on the bank right now. So this gives us, of course, a degree of freedom to further grow the company. So that was the last slide. I managed in 30 minutes, sorry. But Victor, if there is a question, please go ahead.
I think that we are actually running out of time here, Tim. So with that, I think I'll have to thank you so much for that thorough presentation of yours, and thank you so much for joining us, and good luck to you in the future, and let's see what C-RAD can bring to this market ahead as well. Thank you so much.
And good luck to you as well. Thank you.
Hi, Craig.
Hi, how are you?
I'm good. I'm good. Okay, can you see the presentation?
Yes, I can.
Good. Our next presentation comes from Herantis Pharma. I'll hand over the word to CEO Craig Cook.
Thank you. Delighted to be here. Should we move on to the next slide, please? Next one, sorry. Okay, so by way of brief introduction, Herantis is a biotech company. We're headquartered in Helsinki, and we listed on Nasdaq First North in Finland in 2014, and then subsequently in Sweden, Stockholm in 2019. And over the past year, we've made some important strategic decisions. And as a result, the company now is a pure play central nervous system company as of 2021. Our research focus is on disease modification. So we're looking to stop, slow, or even reverse disease pathology with our neurodegenerative assets. We focused on Parkinson's disease specifically, but also more broadly on neurodegenerative diseases. And I think it's fair to say the data that we're now generating after more than a decade of R&D is starting to yield some compelling and intriguing data as it relates to key components of Parkinson's, including the clinical side of things, the imaging side of treatments, biomarkers, as well as genetics. And I'll touch on each of those as we go through the presentation. Next slide, please. So this is our pipeline. CDNF stands for cerebral dopamine neurotrophic factor. And then that's a biological protein. It's a natural protein that occurs naturally in the body. And the natural role of CDNF is to protect neurons. And we're looking to take that natural ability of CDNF and harness it as a treatment for Parkinson's disease. That has completed a phase 1. It's a clinical stage asset that has completed towards the end of last year. And the route of administration there was directly into the inner areas of the brain using quite invasive surgical administration means. Moving forward, we're expanding the administration options to include the intranasal route of administration, so nose to brain, as well as subcutaneous or skin injection route of administration. These are far easier, far more patient-friendly, far more regulator-friendly routes of administration, and the focus of CDNF is to move away from the need for surgery to these administration routes. Then we have xCDNF, and this is a chemically re-engineered version of the parent CDNF. So we've taken the smallest components of CDNF and we've re-engineered them chemically, and I'll touch on that program as well during the course of this presentation. That's currently in preclinical. We are about to select the lead candidate to take forward into further development. Next slide. So during the course of this presentation, I'm going to touch on the key aspects as it relates to CDNF and xCDNF, but specifically the key aspects that are important for Parkinson's disease and Parkinson's treatments, including mechanism of action, safety, biomarkers as they relate to CDNF and xCDNF, genetics, as well as potency. Next slide. So to start off with proteostasis, this is the mechanism of action of CDNF and xCDNF. Next slide, please. Now, proteostasis is a key system in the body
that influences the fate of every single protein, from production right through to degradation. And proteins are the building blocks of the body. So it's a key system in the body. And when proteostasis starts to go wrong, that's when we have diseases like Parkinson's disease and other neurodegenerative diseases start to manifest. And CDNF and ex-CDNF are targeted specifically at proteostasis. We're in great company. There's other big players in this space that are also focused on proteostasis, like Roche, Merck, Biogen, Kilico Labs, and Google. And the difference between what Herantis is doing and what these other companies are doing is explained on the next slide, please. So this just illustrates proteostasis. I'm not going to go into detail on this, other than to say that you will note that there's 4 key areas where CDNF interacts with proteostasis, including the production of the proteins, the folding of the proteins into their active 3-dimensional structure, the degradation or elimination of bad proteins or toxic proteins that are responsible for disease, as well as number 4, there is inflammation outside proteostasis that CDNF interacts with this key system. Now, many of the companies that I mentioned previously, they're doing great work. Roche and Biogen, they're doing great work. They focused on a specific segment of proteostasis. Herantis, we're also doing great, fascinating work, but we focus on the entire system of proteostasis. So we have a different approach to these other companies. Next slide. So that's mechanism of action, proteostasis, important to remember, because that is our core offering. From a safety perspective, the second point, moving on to the next slide. This was a study that completed at the end of last year. It was a safety-focused study. There was an initial 6 months where patients were put onto either placebo or onto drug. There was then an extension 6 months where patients that were on placebo were also put onto drug, and currently the study is in follow-up. On average, the patients in the study were around about 60 years old, and importantly, they had diagnosis of Parkinson's disease for 10 years plus. So that's quite advanced disease for Parkinson's patients. So these were very advanced patients in terms of the loss of dopaminergic neurons in their brain, which is the key pathology in Parkinson's disease. Next slide, please. And we are very pleased to announce that the study met its endpoint and safety for CDNF was established. Most of the adverse events were mild and transient. There was a similar safety profile in the first 6 months versus the second 6 months. There was a similar safety profile between drugs and placebo and different drug dose groups. Importantly, there were no dose-limiting toxicities related to CDNF. And although this was not an efficacy study, because it was the patients were so advanced in terms of their disease, what we can say is that we didn't see any worsening of disease in a disease that you would expect to deteriorate over time. So we're very pleased with the outcome of the phase 1 study. So I've touched on proteostasis, I've touched on safety. Next slide, please. Now I'm going to talk about biomarkers and genetics, and this is where it gets even more interesting, really interesting. Next slide, please. So the study was very intensive, and at several occasions during the course of the study, we took samples to analyze biomarkers from the cerebrospinal fluid. And we recently completed the analysis of the biomarkers, and some very intriguing observations have come out of that analysis. First of all, we see that the biomarkers that we analyzed, and this was a panel of 50 biomarkers relevant to the disease, the biomarkers change in response to CDNF treatment. And those changes in CDNF treatment in the biomarkers are actually correlated with improvements in motor function, as well as in biological imaging signals. So imaging that is done of the brain, and specifically the Parkinson's areas of the brain. We also noticed interesting genetic context, since some of the patients had Parkinson's relevant mutations, LRRK2 and GBA. Those are recognized genetic mutations in patients. And finally, the profiling or the signature that emerged as a result of this analysis very strongly suggests that we are modulating potently the system of proteostasis, which I described earlier in the deck. Next slide, please. So this is looking at a patient on the study where we're pulling together all the aspects of his treatment. We're looking at the genetics, we're looking at the motor score, we're looking at the imaging, and we're looking at the biomarkers. It was a 62-year-old male. He'd had disease duration for 10 years. And in the study, he was put onto the first 6 months, he was put into placebo. And the second 6 months, he was then changed on to CDNF. So the first point to make is that his genotype or his genetics were LRRK2, which is a recognized Parkinson's mutation. Then we looked at the motor score. And the tool that we used in the motor score is something called UPDRS. And the lower the score, the better. So in the first 6 months, we look at the left-hand column of that graphic under number 2. While the patient was on placebo, we see that there's no real improvement, maybe a slight improvement, but overall nothing remarkable. When the patient is transferred onto CDNF, which is the second column, the second 6 months, we see a dramatic improvement in the motor score of this patient as assessed by UPDRS. Then we had a look at the imaging, which is the graphic under number 3. And here, higher is better because we want as much of a signal as possible done through the scan of the brain. In the first 6 months, the patient is on placebo, and we see that signal deteriorating over time. But once the patient is switched onto CDNF in the second 6 months, which is the second column over there, we see that stabilize or potentially even increase slightly as a result potentially of the CDNF treatment. And then we had a look at the final piece of the puzzle, which is the biomarkers, the proteomic profile under point 4 there. And again, it's split into 2 columns. The left-hand side is the first 6 months on placebo. The right-hand side is the second 6 months on CDNF. And red means response. So in the first 6 months, we see there's not a lot going on there. In fact, there's deterioration in many of those biomarkers as they change color into blue and yellow and white. But once the patient is put onto CDNF, we see those biomarkers light up red, which indicates a definite response to the CDNF treatment. So when we pull together the entire picture of this patient's treatment, we see a very intriguing and compelling picture that covers the genetics, the motor score, the imaging, and the biomarker profile. Next slide, please. What about xCDNF? So xCDNF, remember, is the chemically engineered version of CDNF. Next slide. And what we've done here is we have re-engineered CDNF and taken the smallest, most potent components of that, specifically the C-terminal domain, which is the green area you see on the right-hand side of the slide there. And we've re-engineered it to achieve 2 things. One is to cross the blood-brain barrier, and number 2 is to retain the potency of CDNF in protecting neurons. And this is given via a simple skin injection to patients. Next slide. So the first aspect that we had to make sure we could get right with the re-engineering is blood-brain barrier penetration. So here, this is a study in mice that demonstrates exactly that. The y-axis is the concentration of xCDNF, and the x-axis is the time after administration. And what we're seeing here is the blue trace is the concentration in plasma after the injection, so nothing remarkable there. You expect it to go up and down. The red trace is the proportion of xCDNF that has crossed into the blood-brain barrier. And what we see there is an impressively significant proportion of xCDNF has actually crossed into the blood-brain barrier. About 20% has managed to cross into the blood-brain barrier and once into the brain, meaning it's crossed the blood-brain barrier. And once it's in the brain, it sticks around for a long time. And as long as it's there, it can do its job, what it's meant to do on the disease areas of Parkinson's. So this is very impressive proportion that has actually crossed into the brain. Typically, you would expect less than 1% to be able to cross the brain. That wouldn't be unusual. Here we're managing to get 20% across the blood-brain barrier. So a big tick in the box for the blood-brain barrier penetration. Next slide. What about the potency? So this is a study in animals again that we did, and these animals were induced with Parkinson's type disease. And then they were split into two groups, one that didn't get any treatment and another that did get ex-CDNF treatment. On the left-hand side, we're looking at the survival of dopamine neurons. So on the y-axis, we have the number of dopamine neurons surviving. So those are the key nerve cells in Parkinson's that need to be preserved. And on the x-axis, we see different dose groups. The gray column here is control animals. So those are animals that weren't induced with disease. They're just there to control. So you'd expect 100% of their neurons to survive. But then the colored columns to the right are animals that were induced with Parkinson's disease. The red group is animals that were induced with Parkinson's disease, but did not get treatment. And we see they lose about 50% of their neurons during the course of the study. The blue groups are animals that did get treatment with ex-CDNF. And for example, if we look at the dark blue group, ex-CDNF protected 50% more than the neurons compared to the vehicle group, the animals that didn't get treatment. And that's a very significant result. This is only 4 weeks of treatment. These animals only got 4 doses, 1 dose per week. So it was statistically significant as well as observationally significant, the difference in the number of neurons that survived in the CDNF group, ex-CDNF group, compared to vehicle. Then we look at the graph on the right-hand side. And here we're looking at alpha-synuclein. Alpha-synuclein is a bad protein. That's one of the proteins that cause pathology in Parkinson's and closely linked with Parkinson's. So here, the lower the better. You want this to be low. On the y-axis, we've got the concentration of alpha-synuclein, and on the x-axis, again, we have the different groups. The control group, normal animals, no disease, you'd expect it to be low. The vehicle group, the alpha-synuclein levels in the vehicle group are very high, as would be intended by this model. But the animals that got the ex-CDNF treatment, we see that the alpha-synuclein levels are dramatically reduced, almost below supranormal, because they go below the control animals. So a very significant effect of ex-CDNF on alpha-synuclein aggregates. So again, a big tick in the potency box for ex-CDNF. Next slide. I won't spend a lot of time on this slide in the interest of time, other than to say this is looking specifically at markers of proteostasis. So remember, proteostasis is a key component, key system that goes wrong in Parkinson's disease. And this is looking at specifically at markers of disease as it relates to proteostasis. And these markers typically increase as it relates to what is called the unfolded protein response. So the intention here is with treatment, you want to get these markers as low as possible. So across the board over here, if we look at the groups, we see that in the treatment groups of animals that received ex-CDNF, up to 80, 85, 90% reduction in the markers as it relates to proteostasis. So definite evidence that we're having an effect on proteostasis. Next slide, please. So in summary, next slide. This is an overview of our projects and our pipeline. CDNF, as I mentioned, is a clinical stage asset. It's completed phase 1. We are now looping back to the nose to brain administration and the subcutaneous administration of CDNF. Ex-CDNF, we're at the point where we're just about to select the lead. And on the right-hand side, we have some of the news flow that we expect to generate over the next 12 to 18 months, which mimics the activities on the left-hand side of the slide. And we expect a rich news flow over the next 12 to 18 months. Next slide. So in summary, it's been quite a lot to get through, but there's quite a lot to tell about CDNF and ex-CDNF. This slide sort of pulls out the key aspects of both assets, specifically the multimodal mechanism of action that we know restores proteostasis and reduces neuroinflammation, which are both key pathologies in Parkinson's. So that's clear evidence of target engagement. For CDNF, we know it's safe. We know that there's a biomarker response. We know that that biomarker response correlates with clinical and imaging findings. There's also this genetic context that we see in some of the patients. And also there's no worsening of disease over 12 months of treatment. And for ex-CDNF, we see that chemical engineering has been successful because from a simple skin injection, we know that we can cross the blood-brain barrier. We know that we can protect the neurons. We know that we can get rid of the bad proteins that are related to the pathology of Parkinson's. And we know that we can reduce neuroinflammation. So I hope that's given you a good overview of Herantis and our assets in Parkinson's disease. As I said, there was a lot to get through, but I hope that the key aspects that I wanted to communicate, you remember those, because there's certainly a lot that we are building on as we move the assets forward. Thank you.
Great, thank you very much for that presentation, Craig. A few questions. First, a question on the finances. What can you say about your current cash position and your expected funding needs looking forward in the next few kind of near to medium term?
So so last year we raised approximately 15 million in total, 5 million roughly early on in the year, and then 7 million early on in the year, and then 8 million in December. We now have a runway through to early 2022. And clearly, we need to make sure that we address the funding needs of the company moving forward. But the runway right now takes us into early 2022. Okay, great.
And you spent some time talking about proteostasis, the kind of the core mechanism behind CDNF and ex-CDNF, and you mentioned some of the other actors within that field. Obviously, there are more companies beyond that, of course, Denali and Humanity, etc. How should one think about the fact that so many companies seem interested in the proteostasis space, specifically within Parkinson's disease and neurodegenerative disease? Is this competition, or is it validation for you kind of being in the right space?
I think it's certainly a validation. These companies could be collaborators, they could be partners at some point. It's a highly active area of research, a highly promising area of research, and the deals that are being done in that area, for example, with Prothena and Roche, or Merck and Biogen, are billion-dollar deals. And as I mentioned, those companies are focused on specific components of the entire proteostasis system and doing great work. Whereas with Herantis, we focused on we have a different approach because we focused on the entire proteostasis system with CDNF. So in a great space, very promising area, and a solid foundation to build on.
Okay. And you spoke about the formulation work for CDNF primarily. Just looking back, can you kind of just take us through the rationale for switching towards non-invasive routes of administration, and I guess also give some flavor on to what extent you believe you'll be able to leverage kind of learnings and progress that you made with that clinical program into the future clinical program for CDNF.
Yeah, so the one of the biggest drivers to move away from the surgery is that as long as we needed surgery to administer CDNF to patients, we were always going to be limited to late stage patients, very advanced disease. Whereas it's important for CDNF and for any therapy really to get in as early as possible, so that the dopamine neuron, it may be deteriorating, it may be declining, but that's when CDNF can get in and turn things around. Once the neuron is lost, then no therapy, not even CDNF, is going to be able to replenish those neurons. So it's key for us to be able to get into earlier patients. with these new administration routes, that's exactly what we are able to do. We expand the target population to a much bigger population, a much earlier population, whereas with the invasive surgical device, we would always have been boxed into late stage patients, and it's so that was the key driver. Other drivers or other factors that were taken into consideration was the regulatory perspective and the hurdles to go through that, the burden that it places on patients and hospitals because it's invasive, it needs hospital time. It's an intense period and observation for patients. And also to complete the picture, potential partners interested in the program, the invasive surgical route was an issue for them. So I think the fact that we moved away from the need for surgery addresses all of those components or those concerns that maybe existed with a surgical device as long as it was part of the formula. Now we're backing the drug on its own without the need for any surgery.
Okay, great. We're all out of time. Thank you very much for an interesting presentation, Craig.
Thank you. Thank you. Delighted to be here. Bye.
Welcome back. We have another very interesting company up next. So I'm very happy to introduce Integrum, who will be our next company presenting, and we will have Rickard Brånemark, the founder and chairman of the company, with us presenting today. So without further ado, Rickard, the floor is yours. Welcome, and looking forward to your presentation.
Yeah, thank you very much, and thanks for the opportunity to present some of our work here. And I bring you greetings from a lab room in Tübingen, where I'm sitting right now after I performed a couple of surgeries this morning. So can I have the next slide, please? So my name is Rickard Brånemark, and as you heard, I'm the founder and the chairman of the company, and actually run the company for the first 17 years until I moved to the US. I'm an orthopedic surgeon by training, and we established a center at University of California, San Francisco. I worked there as a couple of years as a professor of orthopedic surgery, but these days I work part-time as a researcher at MIT. Our core product is what we call the OPRA implant system that consists of two main components, an inner implant and an outer component called OPRA Axor, that is working like a ski binding, a safety device that is connecting the inner implant to an external prosthesis. So next slide, please. So we're in the field of amputations, major limb amputations that is dramatically changing the life course of the individual that is suffering from this. It's not only related to body and physical integrity, it's also related to mental well-being and social well-being and interaction in the society when you got a disability. And not least in the US, key market for us, there is a lot of financial issues to consider with increased healthcare cost and work opportunities. Maybe you lose your job. In the US, there are about 185,000 amputations performed each year, and there are about 2 million individuals living with limb amputations, and they forecast that it will be roughly 4 million 2050. Next slide, please. So what is it really that Integrum is doing? Well, we are addressing a new way to treat amputees that never really been done before. And we use that with our special OPRA implant system. We are the only company that has any kind of approval to use this device in the US market. We are already working with some of the leading university hospitals in the world, and we are, for instance, working together with the Department of Defense. Last year, during the pandemic, we were still able to show a strong growth, and we are actually now improving profitability from being run at a loss to almost break even. And we have some very interesting high-tech solutions in the pipeline. And we have a well-established management team and board of directors. Next slide, please. So in 2017, we went public and we are listed on Nasdaq First North. The collaboration with Department of Defense includes a commitment from their side to invest $6 million in using our technology to treat wounded warriors. We're working with University of California, San Francisco, Johns Hopkins, University of Southern California, Duke, etc. We have performed more than 500 surgeries, and since we got the PMA approval from FDA in December 2020, at least FDA is considering those surgeries to be successful. Next slide, please. So what are we addressing? The old technology is called a socket prosthesis, and that's been around for a long period of time. And I think the major shift came in the 1600s. I know that Össur is on the presentation list. Maybe they have another opinion, but let me tell you why there is a conceptual problem with the socket. Next slide, please. So the problem with a socket is similar to dentures. And maybe you know that osseointegration is something that was developed in Gothenburg in the early 1960s by my father, Per-Ingvar Brånemark, and led to the implementation of modern dental implantology. That now is a big game changer in the treatment of edentulism. Next slide, please. So we have extended that technology to orthopedic osseointegration to be able to provide amputees with increased comfort and performance. Next slide, please. So here is the socket. That is this white hard shell that is surrounding the amputee's stump. And what is the problem here? The problem is we have the skeleton because the skeleton is very good at transferring loads, much better than soft tissues. Next slide, please. But with an amputation and the socket solution, you need to use the soft tissues, the muscles, the subcutaneous fat, and the skin to transfer the loads. And this is not a good system. So the concept is wrong. You should transfer the loads via the skeleton. So how can you do that? Next slide, please. And that is what we are doing with the OPRA implant system. So here you see a stump top left, and there is some kind of pin coming out, and that's a part of the OPRA implant system that has two major inner components, one that sits inside the bone and then another piece that comes out through the skin. And to the end of the piece that comes out through the skin, there is this safety device. And with this load transfer, we increase the range of motion. We have a very stable attachment, absolutely stable. It's easy to take on and take off. It improves mobility. You don't have to adjust the shape of the stump when you gain weight or lose weight. With the GS, you deteriorate and have muscle atrophy. And of course, all the pressure source and pain that is coming from the socket that is frequently working like a bad pair of shoes, that goes away completely. Next slide, please. To this, we have been working many years with an implanted control system that we call the e-OPRA system, the mind control prosthesis, or the robot arm system. And that is an upgrade we can do to patients already been treated with the OPRA implant system. So we can use the implant as a bidirectional information portal. And by doing that, we can help the brain to think that the prosthesis is becoming a part of the brain and actually of the person's body. Next slide, please. So I think you have a video here that you need to.
Jag heter Rickard Normark, är 45 år, bor på en gård i Lövånger i Västerbotten med fru och 3 barn. 2011 var jag med om en högspänningsolycka i ett ställverk och blev kraftigt brännskadad, förlorade min vänstra arm. Och efter det så fick jag då börja använda en hylsprotes som jag egentligen aldrig kände mig bekväm i. Den satt dåligt och var svår att kontrollera, svår att få sätta som man ville på morgonen. Efter ett tag så kände jag det att min högra hand började domna av och jag fick problem med rörelseförmågan i vänster axel och ryggen började kännas sned. Jag tänkte att det här måste finnas någonting bättre. Och då kom jag i kontakt med Integrum och blev erbjuden att prova OPRA-systemet, vilket jag då valde att göra. Och efter 2 operationer och en del rehabilitering så kunde jag då börja använda den protes jag har idag. Och det har ju öppnat upp en helt ny värld. Det går inte att jämföra, det är så otroligt mycket bättre. Systemet är lätt att använda. Jag tar på mig pucken, klickar fast den och startar den på några sekunder är den igång. Med hylsprotesen kunde man få ta på den flera gånger innan det väl börjar fungera. Det kan ta upp till 20 minuter, en halvtimme innan man kan börja använda den på morgonen. Så att det kändes aldrig bekvämt. Det som var kvar då, det var ju att ytelektroderna var väldigt störkänsliga för mig. Jag kunde aldrig riktigt lita på greppet när man var i en miljö med mycket elektronik. Helt plötsligt kunde handen bara öppna om man tappade saker. Då blev jag erbjuden att delta i ett forskningsprojekt som en av hittills 4 personer. Och det heter då e-OPRA och då har de opererat in elektroderna i armen. Vilket har gjort att störningarna för mig är helt borta. Och precisionen är mycket, mycket mer finkänslig. Jag kan göra väldigt små rörelser och styra ännu bättre ovanför huvudet. Och det är en helt ny värld även det. Och det möjliggör även att jag får en viss känselrespons tillbaka. När jag tar i saker så känner jag att greppet finns där. I och med att vi då lever på en gård och jag hade tidigare ett väldigt aktivt liv, finns sysslor att göra hela tiden, har ett stort motorsportintresse, så var jag väldigt begränsad med min hylsprotes. Man litade inte på greppet och det var svårt att röra sig. Idag så har ju allt det där börjat komma tillbaka mer och mer. Jag hittar nya saker varje dag som jag kan göra. Och jag känner det som tidigare, då bar man en protes som ett hjälpmedel. Idag är protesen mer en del av mig. Jag ser det inte som att jag bär protes. Det är en helt ny värld.
Next slide, please. So far I've mostly been talking about the technology, but of course we also need to run a business. And here is our management team with Maria Lopez, that is the CEO, and she started working in the company in 2011, working through R&D and operations up to the executive position. Dennis Beckland is a fairly recently recruited CFO, about 18 months ago, coming from Latour. Blake Pokres is running the business in the US, and he has more than 12 years working with respected companies like Stryker and Arthrex. James Sheridan's even more experience working outside the US and has more than 20 years of experience working with Össur integration in the dental implant field, establishing businesses in Australia and Japan. And Niklas Hoverberg, that's head of quality and regulatory, been working for AstraZeneca, Aktier, and also in the dental implant field. Next slide, please. So today, our absolutely core business is around the OPRA implant system that is creating almost all of our revenue. And in the clinical trial phase, and also, of course, teasing the partner of defense is this mind control prosthesis. And in addition to that, we have another treatment for phantom pain, that is a severe pain that you can get after amputation. It's a system, it's an augmented reality system that we created, and that's just been CE marked, and we're still in the early phase of launching that commercially. Next slide, please. I think our biggest milestone so far, and maybe ever, is the fairly recent PMA we got from the FDA for the OPRA implant system for treatment of above-knee amputees. And this, as I said previously, this is first and the only product in the world to receive a market approval in the US. And this is something that, of course, opening up the entire US market, but also changes the perception when you come with a new technology that will be considered as experimental clinical trial, etc. We are now past that stage, and we are confident that this technology will be a new standard of care for selected amputees. And in addition to that, the PMA will also help us to drive recruitment of new patients and facilitate the fairly challenging reimbursement negotiations that you have in the US healthcare system. Next slide, please. So if we look into the US and some selected European countries, we expect the market value to be about 7 or 8 billion US dollars. And that is based on that there are about 3 million people living with amputation in these markets, and about 1.3 million people have amputation caused by trauma or cancer, where we have the indications for the OPRA implant system. And out of those, about 20% are directly indicated to be using the OPRA implant system, and with an average sales price of $30,000, that leads to this market size. Next slide, please. So how can we attack this market, this big market? Well, these are some of the core activities we identified. We need to find the really key opinion leaders. And I think in the US, we have already a good track record with Johns Hopkins, UCSF, Walter Reed, that is the big military hospital just outside of Washington, D.C., University of Southern California, etc. But we also need to expand the number of centers or hospitals that are working with the system. We have ourselves a fairly small sales and marketing organization in the US, and that will not be quick enough. So we joined forces with Oncos Surgical, a smaller US-based orthopedic implant company that is targeting university hospitals and the leading university hospitals in the US. And they're about 5 times bigger than us, and they have a good, strong reputation and experience coming from the Stryker sphere with more than 20 years of experience there. But we also need to work with creating awareness for surgeons, rehabilitation specialists, and potential patients. And one important tool here is, of course, like social media, and we have been very fortunate to be able to run a couple of patient stories, free ads, and that is, for instance, on CBS Sunday Morning Show. That is one of the most respected morning shows in the US. And all of this will also aim to our long-term vision that this will be able to create these treatments as a standard of care. Next slide, please. So since the US is the most important, we put down this slide, and here you see the leading hospitals that we're working with already today. Oncos Surgical, that is bringing 20 years of experience in selling advanced orthopedic implant system to our organization. And we are also working with this ski binding or safety device, the Opera Axor that I talked about in the beginning, and that is distributed in the US by Ottobock, and Ottobock is the biggest orthopedic prosthetic company in the world. Next slide, please. So inside this pandemic, we have now, we have a broken year, so we reported 3 quarters. We have gone from, on an annual basis, a loss of about 15 million to now have a small operating profit. We're growing about 50%, and we have good traction. Next slide, please. And of course, what we see is in the US, our target market, we have an even stronger growth with about 90% for the first 3 quarters. Next slide, please. Thank you very much for your attention. I'm happy to take any questions you might have.
Great. Thank you very much, Rickard. So first one here, to what extent would you say that treatment guidelines are established in the field of prosthetics, and is this a requirement to get broad reimbursement and standardized reimbursement in the US?
Okay, yeah, so the entire reimbursement thing, that it's complicated in the US, but I try to be very brief. So in principle, you can say that 2 systems. It's when you're retired, and then you have Medicare. And Medicare is typically more conservative and might require more work. Our targeted patient population is 22 to 65, so we don't really target them right now. However, we have a pathway, and we think it would take us 3, maybe up to 5 years to get the streamlined reimbursement for Medicare patients. All other patients, that is our primary target right now, they have private health insurance, Blue Cross, United Health, Sutter Health, etc. And therefore, any kind of procedure you do, if it's new or old, you still require pre-authorization. So of course, with the new technology, it's more challenging, but with the PMA and very respected university hospitals, so far we have seen that it's on a case by case going forward. It's been fairly successful, and you can see the growth. For a really big growth in the US, we need to have established what you're referring to, codes and established reimbursement levels. But I think we can continue to grow at least a couple of years, maybe even more, until that will maybe become an issue if we can't resolve that problem. But I'm confident that we will.
Great, sounds very interesting. And can you talk a bit more about the data underlying the PMA application? How many patients it was based on? Maybe some key factors. The prevalence of deep infections, revision rates, use of walking aids, etc. And perhaps if this data is very important as you sell the product, or is it more a commercial play where you try to attract with margins, etc.?
Yeah, so of course there's a lot of things to talk about there, but it's also public figures because this is something that the FDA is publishing on their webpage. So we had in total 65 patients included in the study protocols, and they were treated in Sweden, which is a bit rare. Normally you need to have US-based studies. And we had an overall success rate of a bit just above 90% at 5 years follow-up, and that means that the 10% were failure. And I think of those 10%, it was 25% that lost the implant. So it's actually one patient out of the 4 failures we had. But that was based on the implant system we used in the late 1990s, and that's not the implant system we have presently on the US market, even though there is what we call substantial equivalence. And there we have short-term results now being a couple of years, and we actually have almost 100% success rate. So that's improving. But I think from a communication strategy, it might be the studies, but mostly it's the PMA. I think, if FDA is approving a device, then it's supposed to be a good device.
Sure, absolutely. And can you also perhaps give some flavor on the complexity of the intervention here? Is it a significant learning curve for orthopedic surgeons to adopt this technology as opposed to what they're currently doing, so to speak?
Well, what should I say? I've done this so many times, so I think it's fairly easy. And I think we also, we have, I think the last figures, we have 30 centers that we train around the world. So it's not that difficult, but it's not something that the junior surgeons should start with directly. It should be experienced surgeons. And then we didn't talk about that. We have 2 surgeries. One surgery when you put in the inner implant, that's very straightforward orthopedic surgery, and anyone can be trained in doing that very rapidly. And then the second stage surgery, where you do a more plastic surgery reconstructions, that is more challenging for an orthopedic surgeon. But we see that most centers, they actually have a collaboration, so they have an orthopedic surgeon and a plastic surgeon working together, and that will lessen the burden on our training a lot.
Sure, absolutely. And switching gears a bit to the financial side, are there any financial, sort of medium-term financial targets we should look out for, think around? You communicated roughly 50% growth rates historically. How should we think going forward? And on that, will you communicate sort of financial targets in the near term that you can talk about?
Well, so the PMA is triggering a lot of things and a lot of activities, and I think that's one of the last boxes we wanted to check, because we already checked that we can sell in the US, we can sell to Department of Defense, we can sell to public hospitals. We're happy with the prices we get, and we're happy with the sort of the reimbursement frequency we get. How many percentage? We don't really have the figures that, but we're well above the 50% that we initially thought before we got the PMA, and still the PMA is not fully implemented in the market. That might take another year or so. So that means that we are fairly confident that the commercial side is working, and we are very confident that the product is working because we have been using that for 30 years. So that means that now it's time to scale up the business and be more aggressive. So we're working internally with the goals, and I hope I will be able to share more with you in the future, but I don't have any prognosis to disclose today. But of course, if we are able to grow roughly 50% in the middle of the pandemic, I guess you can think that would not be our real target. We would like to go higher.
Great. And just a final quick one. The last 2 quarters has been very strong, particularly in the US. 119 and 94% growth year over year, respectively. Can you say anything about the trends here in the next fiscal quarter that you will be reporting in June? Are you happy with the market development in the quarter?
Well, I cannot comment those figures, but we are working hard. And everyone knows that the healthcare systems are under less pressure, and we got the PMA, which means that we can now quicker recruit new centers, maybe going from up to more than a year to maybe half a year. So even though we will maybe not see the full effect this quarter, I think we created a nice foundation for a strong future growth.
Fantastic. And that's, in the interest of time, Rickard, we will end the presentation here. I want to thank you again very much for participating today. Wish you a good day ahead and best of luck going forward.
Thank you very much. Thanks for having me.
Thank you. Bye. All right, so the ABGSC Investor Day continues. We have another very exciting company up next here. So it's OssDsign that will be the next company presenting. And without further ado, I will hand the word over to you, Morten Henneveld, CEO of OssDsign. Thank you for participating today.
Thank you very much, Rickard, and a warm welcome and good afternoon to all of you. As always, when we do these presentations, we have a disclaimer around forward-looking statements. If you could move to the next one, please, Rickard. What I really wanted to talk about today is really to show you how we've, over the years, have built a foundation and a platform that we can now use for acceleration and value creation. I also want to talk about the very transformative step we took with the acquisition of the Scottish company called Sirakoss last year. And then I want to go in and show you how attractive markets we are in today and also how we are addressing some real unmet clinical needs. And then last but not least, we launched our new 25 strategy called Ascend 25. So I'll be spending some time walking you through that. So if we go to the next one. Just in case there anyone who don't know OssDsign, we are a Swedish medtech company headquartered in Uppsala, very focused on regenerative solutions for bone repair. We're about 50 employees and operate in 10 markets globally. And everywhere we operate fully patent protected and also fully reimbursed by the healthcare system. If you go to the next one. OssDsign is about 10 years old now, and really the last 4 or 5 years was about getting ready and doing some preclinical work, and then we started commercialization around 16, and then in the last couple of years a lot of things happened. IPO'd in 19, setting up direct subsidiary in the US. Last year we were also cleared for Japan and appointed a partner. We acquired Syracuse, and just a few weeks ago we also announced the completion of a 270 million rights issue that was completed, which was heavily oversubscribed at 185%. So clearly a lot of things are happening. What I think is unique, so I want to spend some time about that, is really the commercial infrastructure OssDsign has built up over the last couple of years. You know, being a fairly young company, fairly small company, this is quite unique, and what it gives us is really a platform that we can use to drive growth. Right now we're direct in the US. We operate with a direct subsidiary, but we're also managing a distributor network of approximately 60 agents and distributors. In the EU, we are direct in the UK, in Germany, covering also Sweden direct, and then Southern Europe we cover with agents and distributors. And as I mentioned, we've also appointed Muranaka in Japan to be our main distributor. So currently we are present in all the largest medtech companies or markets, that you want to be in as a medtech company. So you'll hear me talking about that later, but that's how it looks right now, and that is really going to be our vehicle to drive future growth. Go to the next one. OssDsign is a company that's in the orthopedic industry, and what characterizes the orthopedic industry is that we tend to treat degenerative diseases. So essentially, as we grow older, we start to suffer from various kinds of degenerative diseases. And when you look at the macro trends out there, they are extremely favorable to the orthopedic industry. We see a population plus 60 years likely to double over the next 30 years. We also see an increase in average life expectancy. So what this means for us is that there will be a growing need for services like ours for many years to come. When we look at the orthopedic industry in itself, it is clearly dominated by the US, with representing more than 60% of the world market, about a quarter in EMEA and the rest in APAC and rest of the world. So you'll hear me talking about that later also when we talk about the strategy, because clearly if you want to be big, if you want to succeed as a company, you also need to succeed in the US. Go to the next one. Now, for the first 10 years of OssDsign's life as such, we've been focusing on what we call CMF, craniomaxillofacial or cranial reconstruction. Last year, we took a very transformative step by acquiring a company called Syracuse to really start broadening out the company. And what the acquisition gave us was access to a very large and fast-growing orthobiologics market. It also gave us a portfolio and a product that is already 510(k) cleared for the US market that is clearly scalable. And then last but not least, it's also both a business space, but also a product that has some very strong commercial synergies to where we already are, with some very strong relationships to neurosurgeons. We see customers both using bone graft and using cranial reconstructions. We see it in our distributor network, also covering both businesses. And then last but not least, many of us in the company, both in the management team, in the US sales force, and in the board, actually have experience with this business of orthobiologics. So this is maybe new to OssDsign, but it's certainly not new to many of us. If you go to the next one. And what we'll do with the acquisition and the product called OsteoZP Putty is really to target spinal fusion. The product is cleared also for trauma indications, but as you can see from the slide here, clearly the biggest market and the biggest opportunities in spine, and very much so directly in the US, where we already have a 510(k) clearance. If you go to the next one, and what it means for OssDsign is that with the acquisition, we will now have an addressable market which is 5 times bigger than what it was before. It also means that we'll be present in the 2 most attractive spaces in the orthopedic industry in terms of growth, and certainly also in terms of gross profit, both growing around 7%, gross profit in excess of 70%, and in particular orthobiologics typically sitting north of 90%. So with good underlying growth, good value growth, and also good profit, those we feel are very attractive places to be for a company like OssDsign. But if we just take a step back, because we are really here to address the unmet clinical need. So let me just try to give you a few examples. If we start with cranial reconstruction, and we take that example, unfortunately, there are many people each year that suffer from some kind of traumatic brain injury. It could be a trauma to the head, could be a hemorrhage, it could be a tumor, it could be other things. Some will need to be hospitalized, and some will need a decompression and the need for a cranial implant. Unfortunately, what you see in the literature is that quite a high number of those implants end up with infections. The range is actually enormous. We're speaking to some surgeons just in the last month or so who are reporting up to 20%. But clearly we see infection rates around 10%, which is, in our view, way too high. So there's a clear unmet clinical need. Similarly, if we take the example for where we now plan to go to market, targeting spinal surgery with our orthobiologics product, unfortunately, as we grow older, many of us will suffer from back pain. Some will also get what we call spinal instability and therefore have a need for a surgery. And essentially what you want to have in that surgery is you want stability, or what we technically call a fusion. So the implant that's inserted needs to be integrated with the body, and you want bone formation around that implant to make sure that it sits stable. What you see in the literature is actually up to 1/3 does not achieve that outcome. I think the common denominator is typically 20%. So 1 out of 5 patients actually do not achieve the desired outcome. So this is an enormous burden for the patient, of course, but it's also an enormous cost to society having to do a resurgery on so many patients. So those are some real unmet clinical needs that we are addressing and will be addressing in the years to come. If you just move to the next one, Rika, the next one slide, please. And what we'll do is we'll do that with our 2 technology platforms now that we also have after the acquisition. If we start with our CMF technology platform, already from the very first study done by Karolinska in 2018, what we showed here was a 2% removal rate due to infection. So this is a very low number and something we're extremely proud of, because it certainly sets us apart from what we see in the marketplace. And that number has actually proven to be very consistent. Just this year, we launched an updated post-market surveillance, and now it covers more than 1,000 patients, more than 181 hospitals from all over the world. And we are still seeing that 2%. So I think it's fair to say that that is a number that we think that actually the industry should be looking at, because it is something we're extremely proud of, and it's also something that clearly benefits patients. And of course, it's starting to attract more attention in the academic community as well, with more and more peer-reviewed articles. If we look at the orthobiologics, now we haven't launched the product yet, so this is a preclinical data. And what really got us excited is, as I said, when you look at the other synthetic bone grafts that are out there, they actually only perform about 80% of the fusion, so they don't get to the last 20% that I talked about before. There is actually only one product out there. It's not a bone graft. It's called BMP2 or infused from Medtronic. And that product actually gets closer to the 90 to the 100%, but it's extremely expensive, quite often 2 to 3 times more expensive than bone graft. And also recently, there have been a number of adverse incidents because it's a liquid that it actually starts to leak into the body, for instance, and you start to see bone formations in places you don't want. So there's been a certain degree of skepticism for that product. So what really attracted us about the technology platform that we acquired from Syracuse, well, that is when you do preclinical trials, you test it in something called a Boden model. It's a very discriminating rapid model. And when you look at the other bone grafts out there and you look at their data in that model, they actually only achieve the outcome in 25 to 50% of the time. When we saw the data from Syracuse, you see already after 12 weeks, we're seeing fusion rates around 90%, and actually we get to the 100% after 26 weeks. So it is very, very promising, and it is the best preclinical data we've seen on any bone graft, and that's of course also what led us to do the acquisition. So what you see now is really the platform that I believe we have in place in OssDsign that we can and we will use to accelerate growth in the coming years. But of course, also as a new coming CEO, we want to spend some time on really thinking about the business in the years to come. So the management team and I spent some significant amount of time conducting a strategic review of the business here over the winter. And that led us to come out with a new strategy called Ascend 25. And what that strategy in essence is a focusing of the organization on offerings for neurosurgeons and spinal surgeons, orthopedic spinal surgeons. And we intend to do that by participating in 3 different segments of serving this customer group with cranial implants, with bone graft or the equivalent of the biologics. And also we have an intent later in the strategy period to also come out with what I would call more traditional spinal implants, but all focused on neuro and orthopedic spinal surgeons. And to do that, we've set 5 strategic priorities for the company in the years to come. If you go to the next one. So I think the way to think about that aspiration is really the last years were all around building foundation. The next 3 years will be about expanding and investing in portfolio, in footprint, and in clinical data. And then when we get to 24, 25, that's where we are going to have the scale where we can start to get much more focused on cash flows and profit and business optimization and so on. And as part of this process, we also took a revised view on our financial ambition, and we now have a financial ambition of reaching 300 to 400 million in revenue by 25, and also to become cash flow positive from operations by 2024. So those are the 2 new financial ambitions that we've set for the company. If you go to the next slide. And in order to deliver on that, as I said, we have 5 very clear priorities. One is win in the US, and in essence, that is all around accelerating our KOL, our surgeon engagement, and our footprint. Then, of course, number 2 is we need to build the orthobiologics business. This is the business we acquired. We're setting it up right now, and we will commercialize and launch it in the second half of this year. Then we also want to really drive innovation and start to build a bigger and a better portfolio. As I said, we have the commercial infrastructure in place. We need more products out there. So that's also what we intend to do. Number 4 priority for us is a very significant acceleration of our clinical programs. This year alone, we are likely to spend 3 to 4 times of what we spent last year. So a very, very important aspect of the coming years for OssDsign. And then last but certainly not least, as we start to get more scale into the business, we start to build more volume. Of course, we need to be extremely vigilant and mindful of our COGS levels and our delivery time and keep optimizing that as we're building robustness. So those are the 5 priorities for the company. But when you also focus a company, it also inevitably means that you have been doing things in the past that may not fit that picture anymore, unfortunately. One of those places for us is dental. We published some data in August actually showing that we can replicate the same strong bone formation with granules used for the dental space. But the dental space is very different to neuro and orthopedic surgeons. It's a completely different dynamic. It's a different customer group. So while we think we may have an offering here, we may consider out-licensing or other things similar of that kind, you're not going to see OssDsign moving into the dental space. Similarly, we have worked with surgeons over a period of time to really try to find a good solution for them to deal with some of their facial reconstruction. We also just have to admit that the needs are very fragmented, they're very different in the market, and we haven't yet come to a point where we can say that this is a fully marketable product. So we're going to take a step back now, reassess that potential, and also reassess the clinical usage before we can confirm that that's a product that will stay in our portfolio. If you go to the next one. And the reason we're also deselecting certain things is because we think there are so many opportunities for us to drive value into the company in the coming years. As you see here on the slide, we expect to have a number of regulatory approvals in the coming years and also longer term. On clinical, we're going to keep building the cohort that we have in our post-market surveillance. We're going to start a number of preclinical trials. We're going to start a number of clinical trials on our new bone graft product. And then we're also going to launch and set up 2 registries in the US for cranial and for our new OsteoCube ZP product. And so over time here, you'll see us start to come out with a lot more data than what we've been able to do historically. And then, of course, we have some commercial milestones we need to hit. So just to summarize what OssDsign is, I truly think OssDsign is very uniquely positioned for growth. We are present in very attractive markets. We clearly have, as you saw, a very differentiated technology that is showing some very strong outcomes. We already have the commercial infrastructure in place. Of course, we'll start building that, but it is there and we can use that synergy right now. We're also extremely well positioned for the US, which you saw is a must if you want to be successful in the orthopedic industry. And then we've come through, we're still not quite out of it, but we've come through the COVID pandemic very well. And now we also have a very clear line of sight to what the company needs to do in the coming years. So I think the summary of all that for me is that OssDsign is uniquely positioned for growth.
All right. Excellent. Thank you very much, Morten. We'll move into Q&A. And the first one from my side, looking at your current commercial infrastructure in the US, you mentioned that you have roughly 60 or so agents and local distributors which you work with. Are you happy with the sort of size and reach of that as of now? And can you give an approximation of how much that base will have to expand in order to reach your long-term targets of, you know, between 300 to 400 million SEK in sales in 2025 there?
Yeah, to me, Richard, and it's a good question, of course, but to me, it's less around the reach, actually. It's equally much around the deepening, right? I mean, the US have some really big states. As you know, we have 10 focus states that we focus on, being the East Coast, California, Texas, and Florida. And then we have some selected metropolitan areas. We cover those well, but I also think there are much more to be gained just through that focus than necessarily broadening out. But we do have an intention that over over the next 5 years, we also want to be present in 6 to 8 more states, with more heavy presence than what we are today.
Great. And switching gears a bit to Japan, can you talk a little bit about why that's a very interesting market opportunity, and perhaps talk about the potential of that market as you see it?
Yeah, I think Japan, per default for any medtech company is extremely important. It's typically a fairly high price, which means you get good prices, but you also have good profitability in that market. It's also for most medtech disciplines actually the second largest medtech market in the world. So that makes it in itself attractive. Then it is also attractive because there are some very, I would say, instrumental key opinion leaders in that market, also key opinion leaders that international surgeons are looking at and referring to. So to me, that's really the attractiveness. There's both a longer term positioning aspect, but there's certainly also just an immense growth potential in that market.
Sure, absolutely. And some investors might historically at least been a bit concerned about scalability of OssDsign's business. You touched upon it in the presentation, but it would be very interesting to hear more on how we should think about the scalability of the business going forward.
Listen, it's a concern I understand, right? We are in patient specific. We have historically been doing patient specific implants. Now, I don't think that we've reached how we've really seen and demonstrated that we can get more scale into that business, which I'm sure that we can. And we also just launched a product last year in the beginning before the pandemic called Cranial Plug, which is also a cranial volume based, more of the shelf type product. So I don't think we've quite demonstrated to the market yet that we can get more scalability in our CMF business. But of course, with the acquisition of Sirakoss, that is a truly scalable product. It is batch, it's volume production, it's typically also volume selling, so you're selling in bulks. And what it means also with our current commercial infrastructure is that we don't need to necessarily go out and start recruiting lots of salespeople to run with the new product, because we actually have people in place speaking to surgeons who are also using the bone graft product. So we also see scalability effects in terms of our own infrastructure.
Great. And just a final one from my side. You have a quite ambitious study program here lined up. Can you talk a little bit about the cost structure there and how important this study program is for the commercial side of OssDsign's path going forward?
Yeah, I think the way to think about our clinical programs is that really it's you can put it into 3 boxes. We have some preclinical trials, we have some clinical trials, and then we have our registries. And if we just start backwards, in spaces where clinical data is not that great, registries become extremely important, because we're gonna build up our own registry, and what it means is that first of all, we'll get a big patient cohort into those registries, but we can also get time series data so we can follow patients. And then I think equally important, we get a lot of data points so we can start to publish, and we can also start to say something very meaningful on, for instance, how we are dealing with or performing for very troublesome patients, typically diabetics or smokers that have issues actually for going through and forming the bone that's needed for that. So I think the registries are there. They're not the risk profile, I would say, is very low. There is, of course, some cost associated to running the registries. Then we have clinical trials. They're fairly small. A prospective trial on cranial plug in Europe, and we're also going to do what we call a first in man. It's a study called Top Fusion on our new bone graft product, which will be fairly small, and it's likely to be completed by this year if all goes well. And then we have 2 preclinical. And you may ask, why do we do preclinical when we already are about to commercialize? Well, we want to have more clearance. We want to have a standalone clearance on the product, which today you need to mix with the patient's own bone. That requires a preclinical trial. And then I think very importantly also, we've seen some very promising osteoinductive potential. So osteoinductive meaning that we can actually grow bone in non-bony sites, for instance, a muscle pouch. No other product currently can do that other than this BMP2 product that I talked about. So we think that actually warrants a proper preclinical trial.
Great. Thank you very much for that run through, Morten. In the interest of time, we'll have to cut the presentation here, but thank you again for participating. Wish you the best of luck going forward, and have a good day ahead.
Thank you very much. Thanks for having me. Have a good day.
Thank you. Goodbye.
Hi everybody and good afternoon. My name is Benjamin Silverstone and I am an equity analyst here at ABG. Today I have the pleasure of having Jon with me today. Jon Sigurdsson is the CEO of Össur, a very interesting company from Iceland, which is listed in Denmark in Copenhagen. Jon, thank you very much for taking your time to be here today. We look very much forward to your presentation. Thank you very much.
Thank you, Benjamin. And thanks for the opportunity. I will go through a presentation on a more like a general presentation on the corporate profile. I'll go through what we are, go into the market we are serving, and the equity case in general. And if we look at the first slide there, if we look at Össur at a glance, we are obviously a medical device company. We are a global leader in non-invasive orthopedics. We do not have implants. We have a direct operation in 27 countries, and there is a 3,500 there full-time employees, but there are closer to 4,000 now. We are very innovation driven. We have about 5% of R&D cost of compared to top line, and we have about 1,700 granted patents because of our equity cases so based on technology upgrade. And there are new products, a lot of products. I believe we have about 650 products. We are very close to being a complete solutions provider, so our customers do not need, even though many of them do, they would not need to go elsewhere. We have a very profitable growth. We have organic and acquisitive sales growth, combination of it, and since listing in 1999, we have about 18% compounded growth rate on the top line. We have our EBITDA margin is typically about 22%, but in 2019 we had a very bad results due to COVID, and but despite that we were able to show 15%, and we very much expect this to get into this the normal run rate when the COVID is over. Now, we are listed, as Benjamin said, we're listed in Nasdaq Copenhagen, and we have done dividends and share buybacks. I'll cover that later. We are very cash generative, and we have a very international shareholder base. The next slide, please. We divide the company into prosthetics and bracing and support. This is called the O&P industry. Bracing and support is the O of that O&P, and prosthetics is the P. We about a little less than 60% of our sales is prosthetics, 40%, little over 40% is bracing and support. Now, next slide, please. Now, this is the global footprint of the company. We are headquartered in Iceland, where we have about 500 of those little less than 4,000 employees. If we have a headquarters, our marketing headquarters in US are in California and in Holland in Europe. And you can see that we are relatively big in US, where we have about half of our sales is, and that's obviously one market, even though Canada and South America are counted within, that's the biggest in US, and we are probably the biggest provider of O&P solutions in US. And we are considered to be a high-tech company, and if you would ask our customers, they would probably say that it's a quality product, high-tech product, but we are expensive, and we are. I mean, we are catering to the top echelon of the market. We have about a little less than 10% is in APAC region. The biggest there would be China, and Australia is quite big as well, and Japan. And so we are catering to, until now, we've been catering to the more sophisticated part of the market, which is typically the Western type market. Next slide, please. If we look at the market, the prosthetics, at manufacturer's level, then the prosthetics is little less than $1.5 billion. Our market share there is 23 to 24%, and you can see it's a quite consolidated market. Us and the biggest player, two of the biggest player there, is have almost 60%, 55+% of the market. So this is quite consolidated. As a different with the bracing and support, where it's very fractured, it's very lot of small local players. Reason why we are in that market is that part of our customers, or big part of our customers, excuse me, will have orthotics also as a in their offering. So we are trying to cater to both. Market growth would be 3 to 5%. Both market, where the difference there is a lot of technology trade-up going on in prosthetics. Volume growth is slower than bracing and support, but there is a profound technology trade-up, which basically mean more money per patient. Next slide, please. Now, we have divided our strategic pillars on innovation, growth, and efficiency. And innovation, it is technology trade-up. That's a very big part of our strategy. It's a very big part of our equity story. And the growth, as you've seen, and we've got a very impressive growth. And then there is a efficiency or economic of scale built into the model, that even though that we've been buying a lot of companies that typically will have a lower profit margin than us, we've been able to keep up our profit margin, and the profit, of course, then grows accordingly. Now, if we look at the first then, or the next slide, and that shows a schematic picture, or kind of explains the technology trade-off I was talking about. And we have in the x-axis we have the time, and then the value on the y-axis, and we can see that over time, a typical product, and this is one example of a product that have been changing. If we go 30 years back, those were less than $100 a piece. And then there is a technology trade-up, carbon fiber coming in, and then it's increase up to 2,000 typically. This is an example, of course. And then there is a further on 8,000, 10,000, and now we have a combined systems, numerous of them, that goes for tens of thousands of dollars. And of course, you can imagine that what that does to the market, and the penetration of those high-tech solutions are very low. There's a relatively few numbers, but now they are about 1/5 of our what we call bionic, which is more computer-controlled artificial intelligence, smart legs, if you like. They represent about 1/5 of our sales. So those solutions are reimbursed because I forgot to mention in the marketing slide, basically all of our products are reimbursed, or we are based in 95+. That is the only market that is of a certain size that do not have reimbursement is China. But I guess that the rest of all the rest would be reimbursed, and the people generally do not pay for it themselves. Hence the overrepresentation of the developed market in our sales. Now, as I said before, we believe that this is the future of O&P, prosthetic, and even though it's quite cumbersome to get reimbursement for those expensive products, and there is a lot of thresholds put in the way of those products with all the reimbursement authorities around the world. I mean, people will get them, but there are severe restrictions of it. And we saw that in the mechanical feed solutions, carbon fiber. We've gone through it over and over again. There is a lot of restrictions put in place, and the reimbursement system will say, okay, it's a good system and it's helped our patients a lot, but we will only allow certain few to get reimbursement. But I mean, there is a absolutely certainty that those will, since those improve people's quality of life considerably, there is no doubt that those products will be accepted as those products have been accepted in earlier times. Because this $2,000 food that was met with the same skepticism 20 years ago the bionic solutions are met now. They said, okay, we accept very few, but now it's just a mainstream products and nobody would ever dream of putting restrictions in that. So this is an evolution. This also mean that when we come out with those really good products that change people's lives, and they really do, then there's expectations on the market that these are the blockbusters that come in because everybody wants them. The reimbursement system means that our growth is gradual. It's not kind of a blockbustering that we can sell like the drug companies that could sell a lot when they introduce those drugs. So this is the technology trade-off. So if we get the next slide, and that is it's a picture on our valuation model. There's a technology trade-off. I spent a lot of innovation, technology trade-off, partnership services, which is very important for us. And because of our relatively size, we've been able to tie our customers with us with all kinds of services, reimbursement services, technological services, all kinds of services, and expanding the value chain. We are now have, a few years back, we started the journey on partnering up with our customers, buying our customer forward integration in certain markets. Geographic expansion, we believe that Asia is a very exciting market for us. China has been doing very well, and then acquisition. We are quite acquisitive. We probably buy 2 to 5 companies every year. So we consider that as one of our competences. So this is kind of the equity model of the company is basically based on those pillars. If we look at the next slide, please. And then the growth story, I'm not going to spend a lot of time on it. And of course, we have 2020, which is quite abnormal year. I would underlining very strongly that we believe that the COVID does not have any long-term effect, positive or negative, on our business. Of course, temporarily, when the market has been closed down, the sales have suffered, and we see that, but we are nowhere near any existential threat. We had that scare for a few weeks back in 2020, but that we realized quite fast that even though it was not a great business, we were nowhere near any danger there. So and the payout ratio, we have temporarily halted our share buyback program. We expect we will come back to that when our business is more normal, which is fast approaching a normal run rate. The next slide, please. In interest of time, I'll not go through that. And the next slide, please. That is just to show that the very strong cash flow. The financial target is that the net interest-bearing debt is 1.5 to 2.5. We are over that range now because we are dragging with us very bad COVID quarters, but we will get very fast out of that when already now. And and the share buybacks and dividends. Next step, please. That's we were WIPO ranked us as a second in the world, I believe, after Toyota. And that's just underlying our emphasis on technology trade-off and how effective our innovation muscle is. Next slide, please. We are very proud of the fact that we are partnered to UN Sustainable Development Goals, 4 of them, good health and well-being. That obviously very important for the gender equality, responsible consumption and production, and then climate action. And further on that one, we will be this year, we are extremely proud that we will be carbon neutral. I believe that we are by far the first one in this industry that achieved that. We are obviously helped by the fact that part of our operation is in Iceland, so all the energy here, all the electricity here is a hydropower, so it's have a zero carbon dioxide footprint. So the next slide, please. So this basically sums it up.
Thank you very much, Jon. Thank you for a very interesting presentation on Össur. So we have a few minutes for some Q&A sessions, and to begin with, just to sort of give a broad understanding to listeners who might be a bit new to the case, could you give just a brief highlight on how the competitive situation is like in the OMP industry and how Össur sort of stands out and remain their competitiveness? I do remember also you mentioned that you have your business partnerships with the individual OMP clinics. Could you perhaps just also mention how that is potentially linked to how you actually get Össur products out to the individual clinics and how they decide which brands they're going to carry? Thank you.
Yeah, I mean, the competitive landscape in the prosthetic industry is, and prosthetic is orthotic is a little bit different, but the dynamic is that we have the 2 biggest player have in probably over 55% of the combined market share. So it's a very consolidated market, and we have basically no number 3. I mean, there would be much smaller than us. So and there would be only 2 companies that are able to offer a complete solutions, and we believe that will be a big advantage going forward, where we have chains coming together and and more sophisticated customers that want to have a complete solutions. That is, the market is pretty much put together in such a way that our customers typically buy components from various manufacturers. And by the way, we are not the end seller. I mean, our customers are the one who get the prosthesis together and bill the reimbursement, and they are servicing the customers. Now, hence to your question, who is the decision maker? This is a typical medical device, so the customer typically doesn't decide. The decision maker doesn't pay, and the payer doesn't decide. Then it's a quite complicated as all medical device. So, but I would say in most instances, the decision maker is the prosthetist, our customer. Of course, the doctor will prescribe it in order to get a reimbursement. But having said that, very few doctors do have the knowledge of deciding what product. So the prosthetist will decide. Patients in some few examples, but it is the prosthetist.
Thank you very much, Jon. A last question would be in terms of how you see the next sort of mid to long-term growth drivers. You do mention tech trade up, but for the people who are new to the case, could you just please elaborate a little bit on what is going to drive the industry in the next couple of years?
Well, I believe that there is a lot. The technology trade up will be a very exciting journey, and our penetration rate, let's call it the bionic, or I mean, it's kind of an artificial categorization. I mean, there's a lot of technology trade up going on, and we can see that most of the solutions, by far, most of the solutions are fairly low tech, simple products, and we can see a huge opportunity to improve quality of life for our customers, and that will continue. And I think it's a very exciting journey. But there's a lot of it's not easy, because there's a lot of resentment. There's a lot of resentment from the payer part, because they have to pay more. And but I believe that there is no question that the only question is the speed it will go on.
I agree. Thank you, Jon. The final question is in terms of the case itself. So if we look at growth historically, it has been a very good mix of organic and acquired growth. You do mention that you're obviously very actively looking at acquiring new companies, and you have been doing so in the past. Could you just give the people listening in an idea of which companies you are looking at? Which sort of profile are you looking to add to the Össur group or Össur family, so to speak?
Yeah, I mean, there are three, I would categorize in three potential acquisition targets. First of all is exciting product lines, which we have been adding, and we have a long history of doing that. But having such a relatively big market share, the competitive restrictions are getting in a way that we could probably not buy a reasonable big product company within the industry unless we would go in for all of the competitive authorities. But so we have kind of stopped focusing on that, but looking at technology, stop with exciting new technology. The second one would be at this distributors, with typically former distributors, that because we believe that because of this is a technology trade-off, we are not selling, in very many instances, we are not selling a me-too product. We are kind of educating the market. So So we've basically found out that we need to be in the market. We cannot be very effective educating the market through a distributor that knows that when they are successful, we'll kick them out and take over ourselves. So I mean, we cannot expect them to invest enough in the market. So we in those markets, and that's the reason why we are direct in 27 markets, is for that reason. The third group is then also distribution chains that are our customers that are serving the market. And we believe that this market will become in not maybe all the places, but in very many markets, this will be a vertically integrated market.
Thank you very much, Jon, and thank you for the very thorough presentation and a very interesting case. In terms of the time, I think we'll have to end the presentation here. But thank you very much for taking the time to be here today.
You're welcome, and thanks for the opportunity.
Hi everybody, welcome to this presentation with BHG Group. My name is Fredrik Iverson, covering the retail sector here with ABG, and with me today I have BHG CEO Adam Schatz and CFO Jesper Flemme, I think, and Jesper and Adam will go through a presentation of around 10 minutes, and after that I will run a Q&A, and we aim to wrap this up within 25 minutes or so. So with that, I will hand the word over to Adam.
Thank you, Fredrik. Good afternoon, everyone. 2020 was truly a transformative year for BHG, and our Q1 report, which we released a month ago, confirmed that 2021 has started in a similar vein, with continued strong and profitable organic growth and with very strong performances in recently acquired businesses. If we please move to slide 2. As Fredrik has already mentioned, together with me here today is Jesper, our CFO. And with that, if we move to slide 3, please. So I'll kick off today's discussion with an overview of who we are, after which Jesper will provide a brief financial update, and then I will wrap up. And as Fredrik also already mentioned, we will then make sure that we leave plenty of time for the ensuing Q&A session. Slide 4, please. We are the leading Nordic e-commerce company, both as measured by revenue and market cap. At the start of this year, the BHG share graduated, and we are now a proud member of the large cap segment on Nasdaq Stockholm. We operate in the home improvement market through our two similarly sized segments, do-it-yourself and home furnishing. Our complete customer offering what we call the BHG ecosystem, comprises the market's leading portfolio of well-known external brands and our own private label range, a physical infrastructure of showrooms, product experts, and complementary services, such as our own last mile deliveries within home furnishing and installation services within DIY. We have a history of coupling fast growth with profitability and cash flow generation, bearing out the strength of our strategy and business model. In 2020, we grew by 43% to reach net sales of 9 billion SEK. At the same time, we delivered our highest EBIT as well as our highest EBIT margin to date. As Jesper will soon show, our growth was accelerating already in the quarters leading up to the pandemic, and growth has since accelerated further. We were well placed to capitalize on the changing consumer behaviors in the wake of the pandemic, favoring the online channel in general, and also leading to consumers dedicating a higher share of wallet to home improvement specifically. Slide 5, please. Applying a compounder model, we couple organic initiatives with an active M&A agenda, where the latter acts as an accelerant of both growth and strategy execution. Speaking of strategy execution, our organic initiatives revolve around 4 strategic pillars. Firstly, a leading and ever-expanding product range, now including over 1 million unique products. Secondly, size and scale, so that we can consistently match our competitors' lowest prices on the part of the assortment that has a high degree of price transparency, but also as an enabler for us to have a high share of net sales from our own brands, which comprise around 50% of revenue. Thirdly, providing the best digital shopping experience and maximizing the use of the vast amounts of data that flows through our systems, including that generated by the over 300 million visits our web shops saw in 2020. And finally, fourthly, supporting our digital footprint with physical infrastructure in the form of a network of showrooms, as well as our own last mile delivery capabilities and installation services. The first 2 pillars ensure that the product offering forms the base, while the second 2 ensure that we always place the customer at the center. Execution along our 4 strategic pillars is then supercharged by M&A. This year alone, we welcomed 4 new stars to the BHG galaxy, including the team from Nordic Nest, our largest acquisition to date. And with our latest acquisition, that of Hafa Bathroom Group, we have now made 35 acquisitions since our journey began. Each one of these acquisitions has materially contributed to 1 or more of the 4 strategic pillars you see on the left-hand side here. Our acquisition pipeline is full, and although it is always difficult to predict when the next acquisition will materialize, we intend to maintain a high pace also going forward. I'll now hand it over to Jesper, so moving to slide 6, please.
Thank you, Adam.
Slide 7.
Slide 7. As you said, 2020 was a year like no other for BHG, and 2021 has started in a similar vein, with continued strong organic growth and with very strong performances in recently acquired businesses. Total growth amounted to 58%, organic growth to 37%, and pro forma organic growth to 43%. The pro forma organic growth number shows both the importance of Nordic Nest and the continuous stellar performance of the business. Net sales reached 2.6 billion SEK. Adjusted EBIT came in at 184 million SEK, corresponding to an adjusted EBIT margin of 7.2%, and cash flow from operating activities amounted to 120 million SEK, despite Q1 typically not being a strong quarter from a cash flow perspective. Our performance shows that consumer interest in the home improvement remained high, but also that the accelerated shift towards the online channel has continued. In a strong overall market, which we believe grew by around 10%, BHG took significant further market share. Taking the segment view, the home furnishing segment was further boosted by the inclusion of Nordic Nest, as well as a strong growth in our Eastern European markets, while
The do-it-yourself segment continued on its accelerated path with strong trading in all units, including our large Swedish and Finnish platforms, and was turbocharged by the performance of our private label and own brand businesses. Slide 8, please. Zooming in on the organic growth trajectory, we are now reporting our 6th quarter in a row with a growth above 15% level or communicated target over a business cycle. Again, with a 37% organic growth this past quarter and 43% including Nordic Nest on a pro forma basis, Q1 saw a further acceleration on the past 2 excellent quarters. Back to you, Adam.
Thank you, Jesper. Slide 9, please. And then moving quickly on to slide 10, please. So as we enter our 9th year since inception, some key metrics describing who we are today at a glance. Firstly, on the left-hand side, our CAGR since 2014 exceeds 40%. In this period, EBIT has grown by more than 100% per annum. Our EBIT margin on an LTM basis stands at 8.1% and is generated by our over 100 customer-facing web properties. And now moving over to the right-hand side, these web shops have been visited well over 300 million times in the past 12 months, generating some 3.6 million orders from customers in 24 countries. And finally, our leading product portfolio keeps expanding. Slide 11, please. Taking a step back, looking at the market opportunity. Today, we are the number 1 in the Nordics and also have a rapidly growing presence in Eastern Europe. The acquisition of Nordic Nest further and quite significantly broadens our geographic footprint. The home improvement space constitutes a very large market. Our 2020 pro forma net sales of 10 billion SEK should be viewed against the backdrop of a Nordic online market for home improvement worth some 35 billion SEK, which in turn forms part of the total addressable market in the Nordics worth some 300 billion SEK per annum, which finally, of course, is dwarfed by the almost 20 times larger EU market. With online penetration standing at around 14%, but increasing steadily, the bulk of the growth in the total addressable market will continue to accrue to the online segment for many years to come. Again, 2020 was a transformative year for us. And so when we released the year-end report, we took the opportunity to update our midterm financial targets. These now include us setting out to again double the size of our business and become a 20 billion SEK sales company. The 20 billion target should be viewed in light of the large and still significantly underpenetrated total addressable market, as well as our own strong historical and recent performance, and the high rate that we continue to maintain in adding new businesses under our umbrella through M&A. Our path forward is thus clear, and the past quarter shows the progress that we continue to make along this path. This concludes the presentation, and let us now move on to the Q&A session. Over to you, Fredrik.
Thank you, Adam and Jesper, for a good presentation. I'll follow up with a few questions from my side. Maybe, if I recall correctly, you were speaking about a continuously strong demand when we heard you on the Q1 presentation a month ago in April, and curious to hear what you've seen in May. Are you still seeing the same kind of demand market-wise as you saw 1 month ago? That's my first question.
Sure. Thank you, Fredrik. That's of course a super valid question. However, we are quite cautious in between our quarters in terms of what information we share on current trading. So we really only fully update the community in conjunction with our reports. And since a few quarters back, we've taken to the practice of also being quite clear about how performance into the new quarter, to the date of the release of the report, which was the 27th of April, if I recall correctly, how those weeks have gone. And you're quite right that we were very pleased with demand holding up well. And so I don't want to say too much directly about the month that has passed since, but I can say that generally the remarks that we made in the report about the potential risks, I think that was well phrased by us in a balanced way. And what we said, just to remind everyone, was that in terms of the balance of risk between demand suddenly evaporating and supply challenges being at the fore, we maintain that in the short term we are handling supply challenges, and that's where most of our energy goes right now, rather than seeing this risk of demands suddenly falling off a cliff. So that's what we said then, and I think we phrased that well, if I put it that way.
Yeah, I appreciate that, Adam. Thank you for the answer anyways. And maybe if we can take a step back instead, looking at 2020, obviously it was a very volatile few months during March, April, May last year. Would you care to sort of give us a feeling for the various months and the performance in, for instance, April versus May, just to get a feeling for the comparables?
Yes, it was a super interesting, exciting time for us. I guess just like everyone else, we weren't entirely clear on how the pandemic would affect our business in the earliest stages. So we're now in mid-March, and the world has realized, and consumers have realized, that what was a local epidemic is actually a global pandemic. And for a week or so, third week of March, consumers hesitated. And then demand picked up significantly and basically exploded in the last 2 weeks of April, first 2 weeks of May. Those were the weeks with the highest demand that we saw last year. But demand was also at a high and very, very solid level in all of the other weeks in the second quarter. So the second quarter as a whole, as Jesper's slide showed, was the single quarter in the past 12 months that we grew the most. And so it was overall a very, very strong quarter, with, again, the turn of month between April and May seeing the highest peaks in demand. And some differences between the countries, but basically, in all of the Nordics, the overall pattern looked like that.
Thank you. And then maybe moving on to M&A, you mentioned it a couple of times in the presentation, Adam. Obviously an important growth pillar for your company. And I guess as your base is getting bigger and bigger by the minute, you will need to either make more small bolt-on acquisitions or a few larger ones, like the one we saw of the Nordic Nest, for instance. So I'd be curious to hear if you have any preference for either small bolt-ons or larger, fewer ones.
Right. Overall, our strategy remains as it's looked in the past few years. So if I just briefly share what that looks like, we, just as you say, we do quite a lot of what we call category catalyst type acquisitions. Those are the bolt-ons, and what unites them is that they all very meaningfully contribute to one or other aspect of our product assortment expansion. Lately, many of those acquisitions have been within the DIY segment and focused on bolt-ons that have a high share of sales coming from their own brands or their private label portfolios. We also, from time to time, do larger acquisitions. We call them platform acquisitions. And the most recent one we've done is the Nordic Nest acquisition. It happens to be the largest we've done to date, but it also is a platform acquisition in the sense that it meaningfully extends our reach into something that is new to us, although it fits really well under our umbrella. We had been looking at the affordable luxury segment for quite a while, and we had decided for various reasons that our entry into that segment should be via a platform acquisition rather than piece by piece doing category catalyst acquisitions. And now that we have established the platform through Nordic Nest in the affordable luxury segment, we are fully prepared to add bolt-ons to that vertical as we see it. And the Svenssons acquisition was exactly such a bolt-on, which made perfect sense to us once we had established the platform. So that's the general approach we take. And I think the difference to our past is that we have expanded our capabilities and our capacity both to do larger acquisitions than we've done historically. The Nordic Nest acquisition proved that we are fully capable to handle acquisitions of that size. So we can do larger acquisitions in terms of handling the transactions, but we have also beefed up our post-merger integration capabilities and team so that we can handle integrations in a robust and pretty industrialized way. So what that means, and the law of big numbers, as you also refer to, means is that in order for us to be able to add between 5 and 10 percentage points to our top line from acquisitions, which is part of our stated midterm target, we will be including platforms, Nordic Nest style, in the acquisitions in the time to come. It's always difficult to predict exactly when those opportunities will arise, but I am fully convinced that in the next, say, couple of years, we will have a very good mix of acquisitions in terms of a number of category catalysts and a few select additional platforms.
And in terms of the platforms you might lack in your product assortment today, would you care to give any flavor on what you're missing when you look at the portfolio?
Mm-hmm. So as always, there are two dimensions to expansion, at least. One of which is to do with the product portfolio and the categories that you mentioned, and the other one is the geography axis. So we're looking at both those. Within DIY, we have DIY is a pretty broad field, including, of course, core categories such as doors and windows and flooring and garden, etc., but also leisure for us. So it's the same customer group, and it's stuff that people buy revolving around their home lives. So that's DIY for us, and we could envisage continuing to extend also the reach in terms of categories we serve in that broad definition of DIY. Within home furnishings, we are now really well placed both to handle big bulky items, which is our traditional forte, but also smaller parcels, which is Nordic Nest's strength really. And it's more likely that should we do platform acquisitions into the home furnishing space, there will be some sort of geographic component to those.
Excellent, thanks you for that, Adam. Moving on to the margin target, 7%. You're at 8% on an LTM basis, so the 7% might look a bit cautious. How should we read that? Is the current margin level sort of boosted due to the high volumes, or are you simply just being cautious?
We always try to put out targets that we believe that we will be able to reach. And what we have said is that we are targeting and we're steering the business towards delivering at least 7%. So I'm not precluding that we will be trading at a higher level in the next 2 or 3 years, just as we have in the past 12 months. But what we do want to signal very clearly to the investor community is that we will not be jeopardizing or compromising on growth opportunities to drive that margin above the 7%. So in terms of priorities, it's always profitable growth for us, but we're satisfied with 7%, just as long as we can maximize growth. And if that's compatible with running the business at a higher level, of course we will do that, and we'll use the cash flow generated to fuel organic and inorganic growth. And to the other aspect of your question, yes, of course, we have seen extremely strong trading conditions in the past 12 months. So there is a degree of uncertainty as to where things will go from here, that I think is prudent to reflect. No one really has in modern times lived through a pandemic with such significant changes to how people lead their lives as we've seen in the past 12 months. and what the next 12 months hold for us in terms of the macroeconomic environment, just to mention one field. Of course, there's a degree of uncertainty that is, I would say, higher than usual there.
Yeah, that sounds prudent and also a bit reassuring, I guess. So thanks for that answer. I think we have room for maybe one or possibly two questions. So maybe also, I guess an effect of the pandemic has been rising raw material prices, and I'd be curious to hear whether you see that you're able to pass those higher prices, input prices, on to the consumers, and what your expectations in terms of consumer price inflation might look like within your categories over the coming 2 quarters or so.
Yeah, sure. So some truths will hold forever, like supply and demand needing to meet in that middle in the graph that we all learned when we studied economics. So that's the fundamental laws that we operate under, our base case assumption is that demand will hold up in the near term at least, and with the supply constraints that definitely are not a BHG situation, they are a market-wide situation. And as I've commented on previously, let me be really clear on this again here. I believe we're better placed than the market on average in terms of handling the supply challenges. But with the supply challenges combined with demand holding up, that should mean that cost increases will be passed on to consumers to a very high degree. But that all, of course, depends on how supply and demand develops going forward. I think more or less all of our competitors and peers have very similar sourcing in terms of raw material composition, but also geographies and currencies and freight rates and all of that. That affects everyone equally. So the one that is the best placed in terms of having been the smartest in positioning themselves for meeting the demand as it develops, those will be the winners. And I, of course, hope that we will be in that spot.
And we do too. I think we managed to make this in 25 minutes, so good job. I want to thank you, especially Adam and Jesper, for joining in today, and thank you also the audience for listening in. And then we're looking forward to hearing you when you report Q2 numbers in a while.
We do too. Thanks a lot, Fredrik. Thanks, everyone.
Thank you.
Welcome back to the ABG Investor Days. My name is Johan Brown, a retail analyst here at ABG. I now have the pleasure to welcome Nathalie Ahlström, the CEO of Fiskars Group. Please go ahead, Nathalie.
Thank you, Johan, and thanks for having the opportunity to talk about Fiskars today. First, if we look at Fiskars, what are we all about? And if we look at the slide going, Johan, that slide. Thank you. If we look, what is Fiskars all about? I mean, we are a lifestyle brand with fantastic brands that are really beloved by the consumers. And when you look at these brands, you also recognize that they are really iconic products behind these brands. And then coupled with that, we have the passionate global team behind us. And that then has led, if we go to the next slide, to really astonishing figures for Q1. And if we look, actually whole 2020, of course, supported by COVID-19, has been a story of growth, which we haven't had historically, but now we've started the growth engine. And then looking at Q1, we see that in Q1 we grew a comparable 23%. What I'm extremely happy and pleased about especially is that when we look at the right side, we see that we grew in all the business areas, in business area Vita, business area Terra and Crea. So we have growth in all of our businesses. And then when looking at one level lower down, we have growth in every single category we are playing in, whether it's gardening, cooking, tableware, glasses, you name it. And we have scissors and crafting and so on. We have growth in every single category and also in every brand and every region. On a country level, we also have growth in every country in Q1, except for one exception, which is UK. Due to the heavy lockdowns in UK Q1, we didn't have growth there, but otherwise growth all over the place. And this is really a testament to the strong portfolio we have at Fiskars. And this is a good platform for us to continue the growth story as we go forward in the year and the years to come. Then if we look at the next slide, how does this then translate into profitability? And of course, here we see a similar story. The growth falls through and we see a fantastic improvement of profitability. And when looking at Q4 last year, we see that was the highest profitability we've ever had in a quarter in the history of the company. Q4 is always the biggest profit month for us in the year. And therefore, looking at Q1 2021, where we are only shy of 0.1 million, it just shows the extraordinary strength the company has at the moment, that we came with the second best profitability in the history of the company in Q1. Q1 also, as you see from the historic figures, normally is a bit weaker quarter for us. What drew the fantastic performance in Q1 is strong load-in of Terra, of gardening products across all the markets. So strong load-in and also good growth in the Vita business. Despite the COVID, despite all the lockdowns we experienced in many parts of the world during that time in Q1. At times in Q1, we had more than 20% of our own stores closed. Now, today in May, the situation is much better. It's only in Japan where we face significant lockdowns still. And we see that consumers have found new ways of shopping, of course, them being e-com, because it hasn't heavily impacted our business. Then if we go to slide 6, there we see how are the different business areas doing. And if I start with Vita, Vita for many years has been the one with challenges. For years, there's been a lot of work being done, and I come to the programs shortly, but we have had the Vita transformation program looking at the cost efficiency and also simplifying the business. And that work is now bearing fruit. And if you look at the comparable net sales in Vita in Q1, there's significant 18% growth. But maybe more importantly is to look at how that converts then into the profitability in EBITDA. So the top line growth really now, thanks to the programs that have been going on for a while, they are now bearing fruit, and we can see it in the conversion. Then looking at Terra, as said, significant load in during Q1 compared to last year, which of course was a very strange year. So thanks to that, Terra grew 29% in Q1. And of course, then the profitability is at a significantly higher level. And then now in Q2, of course, it's we are all following with interest the trends and also, of course, the weather pattern for gardening, that how the sellout is going. Then Crea, our cooking and crafting business, also continued to show fantastic growth of 17%. And also here that then translated into healthy profit increases. So here you see more on a granular level this, that all the businesses are performing and the cost structure also is in place to translate this into healthy profits. And then if we look at the future growth, what will we focus on to continue to grow in the future? We are focusing on 3 growth levers. The first one is consumer everyday. And consumer everyday for us is really means to understand the needs of the consumer today and in the future. And what are the challenges, what are the questions the consumers are having? They might not know it themselves, but we are there to support the consumers and be relevant also in the future. So consumer everyday. Second growth lever for us is digitalization. And digitalization is not only e-com, of course, here especially if you look at the Vita figures, e-com, both our own direct to consumer and also our customers, e-com is supporting our growth. But when we talk about digitalization being one of our growth levers, it's really not only the e-com, it's also about what is the whole digital consumer journey and experience our consumers are facing, regardless if they are in a brick and mortar shop, if they are on a web page, if they are on the mobile, so that it's a holistic experience and also having more kind of experience for the consumers. And also in the digitalization, what is so important for us is data and data analytics, and to be with the finger on the pulse all the time, analyzing data to be able to react and fast, foresee what's happening, and also use this data to be even more relevant for the consumers going forward. So these are our 3 growth levers to continue the growth momentum. Of course, what we see here on this page is very much supported by COVID-19, but to ensure that we sustain the growth. So consumer everyday, digital, and the third one is sustainability. Sustainability for us is a core to our strategy. It's a part of Fiskars DNA. We have always done high quality products. We have always done long lasting design. And we will continue to work on this. I'll come a bit later more to the sustainability agenda. So this is the growth and the growth levers. And then if we go to the next slide and look, where does the growth come from? I mentioned earlier that the growth comes from all countries, all regions, and here you see really how nicely it is. 22% from, if we look at the comparable growth figures, 22% from Europe, Americas 21%, and Asia Pacific continues to deliver 36% comparable growth. And the growth in Asia Pacific is in particular driven by our focus on China and the execution of the China strategy, where we are present with own flagship stores in multiple locations, and also then the close cooperation with Tmall. So good platform, good base to continue, where we see that all the regions are performing. Then if we go to the next page, I mentioned earlier our programs, and as I said, we start to see the benefit of the programs falling through to the bottom line. If we look at the programs, we are continuing them with the transformation program of Vita, and then also the restructuring program. And these we're going to complete by this year. And they are progressing well. And then if we take all this together and look at the next slide, this of course then leads to, we have upgraded our guidance in 19th of April. And now we're expecting the strong momentum we've seen in the first quarter to continue. And we expect our comparable EBITDA to be in the range of 130 to 145 million. So this is our upgraded outlook. And then just bringing a bit color, why did we have a lower guidance in the early February? It's really now with the COVID-19, and as we have so many direct-to-consumer channels ourselves, it was in the beginning of the year difficult to have good visibility on how consumers are going to behave with the heavy lockdowns. Like said, we saw that in the UK that it had an enormous impact on our sales. However, then for the whole Fiskars Group, we have really had a good Q1 and therefore upgraded the outlook for the whole year to these fantastic figures. Also, what we see now and a bit looking at what's happening is that due to the changing consumer behaviors, due to the changing restrictions coming and going, and also different disposable income in different consumer groups, we are foreseeing that maybe the normal seasonality, also with gifting and so on, might be different from a typical normal year in the past. So exciting year ahead. Then if we look at the next slide, our long-term targets, here are the long-term targets, and they remain as we've communicated before. And on this one, in terms of growth, we are fully focused now on growth. We know that's our most important lever to work on. Of course, on the profitability and then on the capital structure. And then that all taken together, that leads to our commitment to continue to have a stable and over time increasing dividend. So these targets are at the moment unchanged like this. Then if we look at the next slide, and here is a bit examples of what are we doing to execute the strategy, and as you've heard, I'm talking a lot about the increased focus on growth. We are really here now getting the growth mindset, and again, as I I on the BA slide showed that we are focused on the 3 levers on the digital consumer experience, our internal processes, the data analytics, and then the consumer every day, the consumer centricity. And what we have done here is that in March, we further aligned this, what is a consumer perception, what is a consumer experience, by combining our group communications with our brand management. So that then again, that it's all focusing outwards, focusing on one coherent consumer focus. And finally on sustainability. And then these recent actions we have done to execute our strategy, they also are then reflected in how our management team looks like. And if we go to the next slide, here's our management team. I want to highlight three things. If I start with the consumer every day, like I said, we merged group communications with our Chief Consumer Officer with Tina Andersson. So that's all now in a holistic way combined under Tina to drive the growth from a consumer point of view. Then the second lever, digital and digitalization. We in March we created a new position in the leadership team of Fiskars, a position of Chief Digital Officer, and I've been very pleased that Peter Holmberg joined us. Peter is based in Copenhagen. And then the latest addition we've done, which is also demonstrating that we are now taking the next step on our evolution. The past years have very much been about getting one coherent Fiskars, about getting the synergies. Now we're taking the next step on this transformation, about growth transformation. And therefore, we came out a few weeks ago that Jussi Siitonen will join us as a CFO, and he'll starting latest in November as our CFO. And then previously already sustainability has been under Tina Andersson. So our strategy, our growth levers, very much aligned also with how we are set up, how we are structured, what the company looks like. And then finally, looking at sustainability, if we go to the last slide, sustainability, as said, it's a part of the Fiskars DNA. This is so much at the core of everything we do, and we have 3 main pillars we are standing on. The first one is against throwaway culture. We are on a mission against throwaway culture, and that means that we want to continue to develop circular solutions using the circular raw material feeds and also to minimize the strain on the planet. Here already we have multiple commercial solutions out on the market, and also we want sustainability to have a commercial intent, that it's driving purchasing behavior. And a good example is here this scissor. This scissor is made by recycled steel and recycled plastic. That's one example, and we've seen really that's driving the commercial purchasing intent. We also have pots and pans made out of recycled steel. We have our iconic Aalto vase made out of recycled glass, glasses made of recycled glass. So we're all the time expanding products in this range, in addition to the vintage service, and that we're having at the moment still only in Finland and Sweden, where consumers can come to our stores, trade their valuable vintage products, and get a voucher for that. We are going to expand that to further markets. Next one in line is Copenhagen, and of course that's A good news for all Royal Copenhagen fans. Second leg we're standing on sustainability commitment and journey is for carbon neutral future. And we're really taking this climate actions and our commitment with scientific based commitment seriously. And we want to transform our business to carbon neutral in the future. This is of course probably one of the more hardest one, but we're fully committed to do this. And the last one is for increased joy. Sustainability is not only about CO2 and circular economy, it's also about the people and the planet. And for increased joy, where we want to increase the quality of life for the people and communities around us. And here we have multiple metrics we are looking at: safety, diversity, inclusion, and so on. So this is our sustainability journey, and really with a focus on long-lasting well-being. So that's what I had today. So I'm eager to hear your questions.
Thank you very much, Natalie. So a few questions from me, and I want to start in the sort of pandemic boosted consumer demand for home products, where you've obviously been partly affected by that in Crea and Terra in particular. And I'm curious about your sort of view in the 2019 versus 2022 or 2023 comparison. If we look at the home consumer market, where do you think we're standing when we're looking 2-3 years out?
Thank you, Johan. I think that's $1 million question. Where do we stand? If we look and also when we're looking at our data and research, we see that consumers have really now found the joy of being together with their families and the joy of spending times with their loved ones. And they've also, as we all know, they've invested a lot in their homes, their second homes. And we don't think that is going to go away anytime soon. Because as you've done that commitment, and you also found as a consumer your new habits of being at home and having these fantastic activities. Is it in the garden? Is it cooking? Is it crafting? Is it having a beautiful table? We don't think that is going to go fully away. But of course, what is a stickiness? That's something we are really having our finger on the pulse and every day analyzing and trying to understand, and also being there as a category captain to drive it.
Thank you. And looking historically, you've obviously come in with some new perspectives to Fiskars Group now as the new CEO. Looking historically, Fiskars has been very active in both M&A and divestments and so forth. Where do you think Fiskars stands today? Do you see any potential and attractive prospects out there for some M&A activity or even streamlining the business? What is your view on that now that you've been with the company for some time?
Yeah, I mean, thanks to the work that has been done over the years and the programs we've had, so we now have a good core. We have a good core and a global platform that allow us to start to do acquisitions again. And at the same time, our balance sheet is very strong. So we are well set up to start on the M&A journey. However, of course, we need to find the attractive white spaces for us, and that work is still ongoing. But yes, that's something we are actively looking at.
Thank you. And a last question from me. You've obviously mentioned a few growth levers here in the presentation, and looking at a segment basis, we know that you're expanding your reach in Europe in Terra and your cooking business in Crea, and also in Vita you're having a sort of Chinese initiative as well. Looking at all of these segments and different initiatives, is there some initiative that you want to highlight as to the long-term potential in volumes and so forth being the greatest, so to say?
Yeah, I would say as we have such a good base and as we have our brands, we have our products, we have our categories and the global team. And if we look at where we are today, 40% of our sales already today comes from the US. And looking at the macroeconomic trends also going forward and the financial forecast for US on a global economic scale, of course, US will continue to offer significant opportunities for us. And so will Asia. I mean, it's not only China. We are already roughly 15% of the company is already in Asia Pacific. So we have multiple growth levers that we can strengthen and also then by focusing our efforts in these key growth places, we can deliver further growth. And not to forget then our core markets, our home markets here in the Nordics. You mentioned, Johan, Germany, our home market in the UK and so on. So as said, we are fortunate to have such a solid, strong base to continue the growth from.
Thank you very much. Unfortunately, we are out of time, but I want to thank you very much, Nathalie, for presenting today and everyone for listening in. Thank you very much.
Thank you.
Hello and welcome back to ABG's Investor Days and the upcoming presentation with Arise. My name is Ophelia Aspermyr and I'm an equity research analyst here at ABG, primarily covering clean tech and renewable stocks. I today have the pleasure to introduce Arise CEO Daniel Johansson that will start off with a presentation followed by a short Q&A session. But anyway, I won't steal any more of your time, Daniel, so please go ahead with the presentation.
Okay, thank you very much, Ophelia, and thanks for inviting me to this presentation. I think you can flip to the next page. Thank you. Yeah, we want to develop renewable energy for a sustainable future, and I think that's spot on where we are today and what the world is heading for. And we want to be the obvious partner for investors in renewable electricity production, create value throughout the life cycle. We want to maximize also the value of our green electricity production through professional operation management, sales and financing. You can go to the next slide, please. We were founded on the west coast in Laholm and then moved to Halmstad. Was founded in 2007. We still have our headquarters in Halmstad. We are about 30 employees at the moment. And that's a figure that's on the rise. We have a project portfolio because we develop renewable energy projects of more than 1,300 megawatts. Today only wind, but we are aiming at adding solar as well to that portfolio. We own 10 wind farms in the south of Sweden of a total of 139 megawatts or equivalent to a bit above 340 gigawatt hours normal annual production. And then our third business leg is that we take care of these assets for on behalf of customers. So we are asset managers for 1,100 megawatts of wind power in Sweden and Norway at the moment. And right now we are constructing a large wind farm called Skaftåsen that we sold to a large infrastructure fund called Foresight. And that is due to be in operation during the first half of next year. Next slide, please. Our first quarter this year was quite okay. We had a net sales of 47 million SEK. We had an EBITDA of 23 million and a comparable profit before tax of 4 million SEK. And why do we say comparable? That's because we took up a loan during the fourth quarter last year in euro, backed by our 10 operating wind farms of 40 million euro. The book value is some 105 euros, so it's a quite conservative leverage on those wind farms. And when the euro SEK FX rate is moving, then the value of the loan is moving. So that is going to be seen in the reported profit or loss before tax. So we think that the most comparable figure to have over time is the one that doesn't take into consideration the move in the FX. So the reported was -4. That was because the Swedish krona was depreciated against the euro. Operating cash flow came in at plus 15 million. We had a lower generation than the year before and also lower than normally of the electricity production. And this was due to weaker wind conditions than normal. At the same time, we saw a normalization of the power markets. We had an average income of 463 kronas per megawatt hour compared to 314 only last year, same quarter. And if we recall, the last year was quite special. It was very wet. It was a very mild weather. And on top of that, we also had a COVID-19 which meant that the consumption was slightly lower than normal in the power market. So what we have seen now is for one close down of 2 reactors in the last 2 years at Ringhals power plant, and also saw by the end of last year a new grid connection from Norway to Germany being energized. And this meant that Norway started to import more power from the south of Sweden and adding demand for power in the south of Sweden, and obviously that helps to keep up the power prices. So we see that these levels are more normal, and we did anticipate the power markets to become more normal, and that's why we didn't hedge any large fractions of our power production for this year yet. We also in March presented a new growth plan with aiming for 2025. It includes an international expansion and also diversification into solar. And I will tell you a bit more about it later on. You can flip page, please. If we look into our project pipeline, it's over 1,300 megawatts, whereby some 850 megawatts are late-stage development projects. We are right now having a sales process for Ranasjöhöjden and Salsjöhöjden, total of 240 megawatts plus. We don't expect Salsjöhöjden to be more than a marginal project. That's because of some individual features of that project and quite modest wind conditions there. We expect to close this deal before the turn of this quarter, actually. Next project is Lebo. It's a 5-turbine project located in the south of Sweden. Really good conditions and a strong market environment to be in. We hope to be able to come to an investment decision later this year. Fasikan, because it has all the permits necessary and underlying concession secured as well. Fasikan is a 15-turbine project which holds the environmental permit, and we are just waiting to get the line concession approved finally. Expected to take place late this year, and then it's ready for sale. Kölvallen, our largest and probably best project accordingly, almost 300 megawatt project, almost 50 turbines. We did get approval from the regional administrative board. We already have the line concession, and actually the substation it's going to be connected to is about to be built in order to connect the Skaftåsen project that we are constructing right now. So it looks very promising. We are waiting for the environmental court to make their decision, and hopefully it can come pretty soon. Finwire is a 25 turbine project also in the north of Sweden, some 150 megawatts. Got a positive ruling also there from the country administrative board. We are now on our way to prepare for line concession application and also wind measurement campaign. Also very, very good profit potential in that project. And then we have Tormsdale, where we are right now in preparation for filing the final application. Fantastic wind conditions, northeast Scotland, amongst the best positions in Europe actually. So we have a strong belief that our profits from these megawatts after Ranasjö and Salsjöhöjden will well exceed 1 million SEK per megawatt. And we're working in parallel on early stage development projects in different areas, both in the south and the north part of Sweden and in Norway and in Scotland. It's some 530 megawatts that we are working on at the moment, but constantly working on increasing the number of projects that we hold in our portfolio. You can flip the page, please. Just taking a step back, what we see now is really that renewable energy is entering the center stage. EU has made their ambitious goals even more ambitious. They aim for a 55% reduction of greenhouse gas emissions by 2030 and then to become neutral by 2050. Accordingly, the price of CO2 emissions is rising, and of course that also means that it holds up power prices in Europe. At the same time, the coal-fired power plants are being phased out from the European power system. So already in the 2020s, a lot of plants are being closed. For instance, in Germany, more than half will be closed during the 2020s. International Energy Agency, the most prominent amongst forecasters, say that electricity demand will surge during the coming decades. And that's of course because we see new technologies entering the markets. So we replace the fossil fuels in the cars, in the vehicles. We see battery technology developing, we see hydrogen, and we see the phase out of fossil fuels in industrial processes. All in all, the demand will surge and the supply to be coping that demand will be mainly wind and solar, according to International Energy Agency. What we know is that in the north of Europe, wind power is really competitive, and also so with solar further south in Europe. So clearly, the renewable energy is leading the combat against climate change. Please flip page. So how can Arise then help accelerating the green transition and do the best for our company? We want to expand internationally and diversify our development portfolio. We have identified Poland and UK as especially interesting markets when it comes to solar power. So we're working on concrete opportunities there. Hope to come back during the year with more news. We have a still and then the focus on early stage wind projects in various geographies to be developed. I want to secure more rights, of course. Our mission now is to realize some 3 to 5 terawatt hours of new green electricity production in the coming 5 years. We want to invite financial partners to invest in platforms and by this way creating decent returns, attractive returns. And we believe that while doing this, Arise can sit by as a minority stakeholder in projects and thereby create comfort for investors and also have a higher profit per megawatt through this way of performing. So this is our plan. It also encompasses our operating wind farms that create a very good basis for this new strategy. So we are about to launch also a sale of a majority stake in our operating wind farms. We have changed the reporting into 3 segments. For 1, development, 2 is production, and then solutions. And it's in order to make the company even more easy to analyze, more transparency, and also because we believe the solutions where we have the construction management business and also the asset management hold some potential for the future. So, and we also believe that we can be profitable in all these 3 business segments. Could you flip to the last page, please? For 2021, as mentioned, we are looking to divest Ranasjö and Salsjöhöjden during the first half of this year. We are also aiming at taking an investment decision to construct Lebo of approximately 30 megawatts. We are about to initiate the process to partly farm out our existing production assets. We are also starting preparations for bringing Kölvallen and Fasikan to the market when they are getting the final permits and line concessions that we wait for. And of course, we are looking now actively into opportunities in Poland and UK to secure a larger pipeline of solar opportunities as well. And we see that during the coming 2 years, we will be able to bring some 700 megawatts of projects to transaction. So very promising times for us. Thank you.
Okay, thank you very much for a good presentation and introduction to Arise, Daniel. I now have some questions, and I would like to start with what Eolus Vind stated in their Q1 report, that they are worried about delayed deliveries of future grid connection, but also environmental permit processes. I wonder if you see this as a potential bottleneck for your near-term, but also medium-term projects as well.
I think it's fair to say that this has been a challenge for a long time. And it's something we have learned to cope with. As a company, we have been becoming more and more skillful in handling these environmental permit applications and also learning new markets. And the same, of course, goes for the line concessions and the ability to connect the projects to the grid. So I think this is an area where we try to focus a lot. In our late stage developed projects, we don't see that it's a massive problem, but at the same time, you can't plan the financial close to occur in one exact quarter or another. You have to live with, as a project developer, that things could slip in time 1 or 2 quarters here and there. So that's nothing new basically to us, but what we do agree that it's a challenge, of course, and we also work on trying to get the authorities to be more efficient. So it's really important that government and authorities take the responsibility to actually make the energy transition even quicker, because it's really needed now.
Okay, that's a really good answer. And I also want to talk about the announced growth plan with a new entry into UK and Poland. And I wonder if you can give us an update on this and what we should expect during this year.
Yeah, I think we are in numerous discussions at the moment. So it's a plan for us to enter into pretty early stage development of solar power. We are doing some investigations in one case, and we have ongoing discussions with potential partners, and we hope to be able to come back. Obviously, this is not something you just want to do a one-off. This is something we see as a growth potential for many years. So yeah, I'm really keen to come back. But I can't give you any numbers or exact time frames on that, but we will come back for sure.
Okay, I understand. But regarding the new entry, it is also interesting to know a bit more about the markets that you are entering. Can you please tell us a bit about the differences between those markets?
Yeah, we've done quite a thorough analysis of some of the European markets that we find the most interesting. It's not that we have lost interest in other markets, but we are primarily focusing on Poland and UK now, besides Sweden, Norway and Scotland, where we were active before. And I mean, in general, wind power is a bit more complicated than solar power to develop. So we don't find it quite, of course you need to learn some things and understand a few bits, but energization of solar power is not differing very much from wind power. Slightly different when it comes to permit application regimes in different countries. For instance, in Scotland, you need to have a 2-year bird monitoring while in Sweden it's only one season, and then it's a longer process to get the project permit granted in Sweden than it is in Scotland, for instance, just to take two examples. We have a thorough knowledge, I would say, about the Swedish conditions and how you should work it through. Then in Norway and Scotland, we have people employed that work for us. Obviously, when we go into new markets, it's important that we get local competence on board. So at the moment, we are, of course, speaking to lawyers and others to really understand how you pursue the permitting and the grid energization and stuff like that. So that's the way we go about things. And then at a later stage, of course, we will think over if we are to employ more people as well. So all in all, wind power is usually taking some 5 to 7 years before you can reach the financial close from where you start developing a project. Solar is more in the range of 2 to 3 years maybe. So that's one big difference. And then if you look to Poland, it's a market that is mainly having coal-fired power plants today, and those are to be phased out at latest 2050. So they have an immense challenge. They also have higher power prices than we have in Sweden at the moment. So that's obviously good features for a market you want to enter into. And in Great Britain, they have a much tighter power balance than we have in the Nordics, and especially in Sweden. So they are now, they really need a new power generation, and the power prices are also higher in the onset. So I mean, attractive markets, of course. Those are the main reasons for trying to enter them.
Okay, I understand. And you touched upon the solar development as well, but can you say something about what you see as the main, like the main perks, but also risk with scaling up the PV business?
Yeah, I think it's, as I mentioned, beneficial that it's shorter lead times. Then, of course, it's hard to exactly know how many megawatts you can acquire the rights to. And obviously, we are not alone in the market. We want to find proprietary opportunities to come in and come in early. So we're working on that. In general, solar is per megawatt produces some third of what you can produce from a megawatt of wind power. Then, of course, the further south you come in Europe, the more the production can go up. So that's why we're not focusing so much yet in Sweden. I think we are pretty well positioned. I mean, the land lease agreements, the grid connection, it's very similar to what we do in wind. So it's a natural step for us to take. And in these individual markets, I think we know enough to be able to develop the projects and know to what authorities to go and what steps to take. So that's I feel comfortable we are going to be able to do that in a good way.
Okay, that's very good answers, Daniel. I'm sorry to say, but we have to round up here. So thank you very much, and thank you all for listening. We now take a short break and open up for Lohilo Foods in a few minutes. Thank you.
Okay, thank you very much.
Hi everybody, welcome to this presentation with Lohilo Food. My name is Fredrik Iverson. I cover the consumer goods sector here at ABG. And with us today we have Tyrone Anderson, who will give us a short presentation of around 20 minutes, and then we will wrap it up with a short Q&A. But again, try to wrap this up within 25 minutes or so. And with that, I will hand the word over to Tyrone. Please go ahead.
Thank you very much. Welcome to Lohilo Foods and the short journey of where we are heading. Next, please. So, where are we coming from? This is Småland, for those who doesn't know that. That's the southern part of Sweden. We are from the beginning, an ice cream company that has been in the market for over 14 years. We are developing ice cream as a foundation, and we have been one of the first companies in the world to launch sugar-free ice cream, protein ice cream, and also low lactose ice cream. In 2017, we expanded outside of Sweden into Finland. That was the first country abroad, and that is still our biggest export market. In 2019, the company decided to move into other categories. So we launched beverage and snacks during that year. In 2020, we moved into also functional products like paddle and stuff like that. And last year, we also did an IPO and went in the Nasdaq Stock Exchange market. So that's a short background of the company. So we are in the base an ice cream company that has moved into other functional areas. Next, please. So where do we find our insights from? Yeah, it's very easy. There are megatrends around in the world. This is one report that comes every 3 years, and we read it from the first page to the last one. And from this one, we actually can spot initial trends that are coming in the future. Lohilo has an ambition to be trend-setting when it comes to new functionalities, and we are launching new products into new categories from time to time, and we are also looking and traveling around the world to find new positions in the market. We translate these megatrends into food trends, and based on that, we develop products. As you can imagine, product development is a big part of our company, and we have really good people working in this department, as it seems. Next slide, please. This is the portfolio that we carry today. As you see, this is a mix of own brands that we own as a company, but also distribution agreements. We have distribution agreements in Nix, the no added sugar ice cream, in Halo Top, the low-cal ice cream from US, and also in Häagen-Dazs, one of the biggest brands in ice cream in the world, but also in Bubby's, the Hawaiian mochi ice cream. So these 4 brands are distribution agreements that we have and that we are buying products and selling on the Swedish market. Alvesta Glass, together with Järna Glass and Superfruit, are our own brands that we own and that we are trying to sell and develop into the Swedish market specifically. But the big brand is Lohilo, and this is where you see a lot of different products in different categories, and that is the brand that we are focusing on. So Lohilo is the main brand that we are developing for the future in the company. Next slide, please. So what is Lohilo? It's, as I see it, one of the most brilliant brand names that you can have. It's low, high, low. So we're talking about low calories. We think that's a mega trend that will be in the market for many years to come. We see that consumers are concerned about what they put into themselves and what they eat, and they want to lower their part of calories. So low calories is one of the pillars that we are looking into for driving product development for the future. Then we're talking about high functionality. Functionality is key for us in the future, and we think that the consumers are really looking for these kind of functions in products and are willing to pay for it. Therefore, the high functionality is of the essence for Lohilo Foods into the future. We also think that clean label products or low additives will be of concern for consumers. We have seen a development into clean products with few ingredients, without any artificial ingredients exploding in the markets. So we think that these three megatrends will stand and last throughout the coming years. And therefore, this is basically the formula where we look into it when we decide about new products or new brands that we will distribute or buy or develop on our own. So this is the formula behind Lohilo Foods, basically. Next slide, please. So what's the business idea? Simply said, we want to Lohilify the world. That means that we want to bring the brand to consumers across the globe. Lohilo is the main brand for us as a company, and that is the one that we will develop for the future. We do that by introducing and launching new and innovative products within different functional categories. We are, as I showed in the beginning, the first slide, we have been in these functional categories since 2019. And that meant that we were 4 or 5 years behind our competition. That means also that the fitness focus that everybody else is fighting within is more or less occupied. We will be there, but we will not win that. What we have identified is the beauty channel. This is a new and relatively unknown area for functional food. We are developing products with collagen, for example, with beta-carotene that are perfectly matching the beauty channel. So therefore, what we want to do is to win the beauty channel and be in the fitness channel. So this is explaining a bit about why we are launching products in that kind of channel. Next, please. The business model for Lohilo Foods is very, very simple. The distribution assignment that we have cover our cost to be able to develop and build Lohilo as a brand. And we do that through social media. So this is the very simple model that is very complex to implement in reality, but we stick to this, and this is the basic fundamental of how we run our business. Distribution assignments will always be a part of our journey for the next coming years, but we also see that we want to grow and expand Lohilo as the main brand, as I explained before. Next, please. So what are we talking about when it comes to marketing? Lohilo is the main brand. We have a target group of females between 16 and 29. As most of you know, they are basically living with a phone attached to their hand. That means that all investments that we are doing to build a brand, to reach out to our consumers, goes through digital media. So social media and digital advertising is key for us to develop the brand for the future. We are also working with an ambassador model where we are driving awareness and reach throughout the digital network. For the smaller ambassadors, we use an agency and a tool called Interlaced. And for the bigger ambassadors, we have them signed and contracted in-house. And we work with them on a daily basis to create contact and drive awareness around the world. Next, please. Sales. So, as I explained from the beginning, we are in the basic foundation of the company comes from ice cream. And therefore, we have a very unique setup in Sweden where we have direct distribution. It's only us and Unilever who has that can reach out to all the stores in Sweden. But what we saw during last year was that we need to focus more on the dry assortment and the beverage assortment. So therefore, we introduced a new sales force, and that was implemented during the second half year last year. Opportunities in the Swedish market are huge. We cover around 1,500 stores today in retail. If you add on 3,000 convenience stores available and 7,000 specialty stores, you understand that the potential of going from 1,500 stores to the 12,500 stores that are available is the key focus for our sales forces. So numeric distribution is the easiest way for us as a company to grow our sales. And that is what we are focusing on at the moment. But we're also working with profit because we don't only want to grow, we also want to make some money in the end. We will do that through portfolio mix, promotion, and customer mix. So we know very exactly where we should drive and in what channel and customers that it will work. So we see that profit comes when we do our homework correctly. Next, please. Export. This is the golden nugget, I would say, in Lohilo Foods. We are using a distribution model, the same as our clients are using it towards us in Sweden, basically. It's a very simple model with no risk for us as a company. We sign an agreement with in a geographical area, you can say, basically, with a distribution partner that gets exclusivity to sell Lohilo products in that area. What they do then is to order products from us, they pay up front, and they pick up the products in Växjö. That's where our central warehouse is. So we have an X-Works Växjö set up with prepayment as a payment method, and then the distribution partner picks up the goods and sell it in the local market. We are currently managing around 30 different countries, out of which 5 are identified as A countries. These are the ones that we are putting more resources behind and try to develop and grow into becoming one of the big export markets for us. We have an ambition to set a new A country every 6 months, so basically 2 new export markets every year. That is what we can manage, and that is also the way to work that we have seen work in the past. We don't want to add on too many countries at the same time because we want to work closely with our distribution partners. We also set up key accounts behind all countries that are working together with them to create business plan, promotion plans, and also review the performance quarterly. We are today present in more than 15 countries around the globe, but there are still many countries to explore and also continents to explore, and that will come closely in the future. Asia is specifically interesting for us as a company. Our product communication fits very well into the Asian culture. Also, tastes, flavors work perfectly fine. We just launched in China in February this year, and the response has been very, very positive. So what we are doing now is basically to build the Lohilo brand in China and in Asia. And what we are doing and seeing now is that also when the volumes are going up, we need to look into finding production facilities over there. And that is what we are working on at the moment as well. Next slide, please. Online or e-com. We have an omni-channel strategy. And we want our consumers to find our products in store, but also online. The good thing with online is that you can have a much broader assortment, and that is something that we are utilizing. We are working with optimizing the traffic into our web pages, but also we are also working with marketing and to try to drive visibility around the brand and build the brand. And that is how we see our digital web pages. So we want to see that we are driving traffic and sales, but we also want to build the brand. We have in the past been working with agencies to do this, but we have found out that our own resources that we are using in a digital hub down in Växjö are doing this in a much faster and cheaper way. And therefore we have established an own e-com team that is working in-house and can respond to all our consumers' needs. We are not only using the business-to-consumer solution only for that. We have also redesigned it a little bit so we can use it for business-to-business solution. That means that our sales force can visit a small customer and help them to log in to the business-to-business solution that we have. And then the customers will basically suit themselves and they will order through our webpage. They will get deliveries sent from our warehouse in Växjö directly to the stores. So it's a very simple, efficient way for us to utilize the sales force in a better way. Next, please. Acquisition strategy. Yeah, what we are looking into here is that we want to work throughout the whole value chain. We are looking for synergies that will help us to grow the brand of Lohilo. That could be anything from a production facility to a business to consumer company. It could be a brand that fits into our portfolio on the low, high, low. But the main thing for us is to have a synergy that we can pick out of this. So we have a very clear acquisition strategy that we want to acquire 1 to 2 companies or brands per year, not more, because we want to integrate them and take care of them in a very good way. You might have seen that we bought a company called Superfruit a couple of months ago, and that we are now in full speed to integrate. And that will take us another couple of months before that is done. But you already see now the benefits of that. As an example, Superfruit had only a numeric distribution in retail Sweden of 100 stores. And now we are taking 2 to 3 new stores a day and driving up the availability of these fantastic products. Next, please. Financial summary of 2020. Yep, as you see, we have been growing very, very fast during the year. We grew 74% last year, and we are seeing that that's coming mainly from the distributed brands. We also see that the gross margin has gone down a bit during 2020, and that is driven by the increased volumes from distributed brands. There we act more like a wholesaler, and as most of you know, the wholesale distribution margins are lower compared to our own brands. Therefore, we have a strategy to drive our own brands and make them grow faster throughout the coming years. And after the Q1 result, as you see here, our own brands are actually growing faster than the distributed brands, and we also see that the gross margin are following that. The overall strategy for the company is to grow profitably, but growth is a key essence here. Therefore, we see that we are losing a bit of money during last year, and that is coming from that we cleaned out a big part of our portfolio. Basically 1/3 was cancelled due to low rotation or low profitability. So we see that the cleaning that we have done will pay off now into the future. We also see that Q1 this year started off with a 12.5% growth. It might not seem too much. 6.2% comes from our organic growth here in Sweden. And also Superfruit are kicking in with another 6%. The positive thing is that Sweden is growing 20%. And that is for me an amazing result in the pandemic world that we are living at the moment. Our export business lost 22%. And that comes very straightforward out of that restrictions kicked in March last year. And we have had restrictions in our export markets throughout the whole Q1 this year. So that explains that number, basically. Next, please. That was it from Lohilo Foods. This is what you see in front of you is the new vision that we are launching. To become and stay the ultimate version of you is what we are aiming to give to all of our consumers and friends around the globe. And that is the first show of this to the public, but you will see it coming much, much more in the future. That was it from my side, I think. Yeah.
Excellent. Thanks. Thanks a lot for the presentation. Very interesting indeed. A few questions from my side. So firstly, my assessment was that you still try to increase the share of D2C sales. Firstly, is that correct? And secondly, if you could share your vision in terms of the various sales channels.
Yeah, we are expanding the online sales. That is a very important channel for us for the future as well, because not only you get the sales, but you also get a lot of information around your consumers that you can use to create new products and new targeted promotion strategies. So for us, the online sales channel is really important, and to drive not only the sales, but also to build the brand. When it comes to export, I think that most export sport companies are suffering a bit from the pandemic that is haunting us at the moment. Our belief is that that will still be the case from Q2 and Q3, and we estimate that there will be a release for Q4. But as we say, that the majority of potential growth will come through acquisitions in export markets. Just opening up one new country will mean fundamental growth coming into us as a company. And therefore, we are now working and preparing for what's going to happen after the pandemic releases it and the restrictions are gone. So that will be, of course, a very important growth channel for us. When it comes to Sweden, we see that as long as we can grow in line with the market, or preferably a bit ahead of the market, like we did now in Q1, that is the base fundamental for us. So we need to grow somewhere around 10 to 20%, I think, in the Swedish market. That's what we aim for. And then the rest of the growth will come from export countries and online sales.
Right, and as you mentioned it, what kind of market growth are you looking at, and what do you forecast for the coming, say, 3 to 5 years?
We have not stated that yet. We are working on a financial communication around it, but let's put it like one of the owners stated when we went into Nasdaq. We should be able to go around somewhere 30%-ish. That is what we're aiming for.
Right, and market-wise, I assume your 30% implies some market share gains, right?
Yes, it does, of course.
Right, and then I guess as an analyst, I couldn't help to notice that you're still in red figures. So do you have a timeline for when you might approach break even, and also what sort of margin levels do you think is sustainable for your business?
Yeah, we see that if you look into the Q1 report, and if we would have grown exactly what we are hoped for to do, we would have shown the black figures, actually. So we are at the moment waiting for the export markets to start delivering the volumes that we are looking for. We are working hard on the margins, as you saw before. We increased the margin in Q1 with 230 bips versus Q1 last year. So the job we are doing is paying off. So we are increasing the margins at the moment, but we need to make sure that the sales volumes are kicking in.
That sounds reassuring. And in terms of COVID impact, I guess this has become sort of a household question nowadays. But how did you see that your market was impacted by the pandemic last year and in the beginning of this year also as well?
Take Germany as an example. We have a distributor that has a contract with 7,000 gyms in Germany, and they were closed over one night. So we are just waiting now for them to open up again, and then we will start to see the sales coming back. So this is just one example of how devastating it could be for our partners out in the world when these kind of restrictions kick in the local countries.
Right, so I assess that the net effect was negative, even though I guess the food retail market in Sweden, for instance, was heavily positively impacted by the pandemic.
It was, yes, correctly. But out in the world, we see that the different countries have got into restrictions when it comes to specifically where you can find our Lohilo products in fitness chains and in these kind of beauty parlors and hair cutting salons and stuff like that.
Excellent. We're looking forward to follow your journey going forward then. And with that, I think we made it in 25 minutes. And yep. I want to thank you, Tyrone, for taking the time to brief us through this presentation. And I also want to thank the audience for listening in. Thank you very much.
Thank you. Thank you. Bye.
Hello and welcome to ABG Sundal Collier Investor Days. My name is Olof Cederholm and I cover Scandinavian Biogas at the research department at ABG. We're very happy to have Matti Vikkula with us, CEO of Scandinavian Biogas. He will run through a presentation for about 20 minutes and then we'll end with some Q&A. With that, Matti, please go ahead.
Thank you very much, Olof. Great pleasure to participate in ABG's investor webinar. If you go forward, please. We will today, my name is Matti Vikkula. I'm the CEO of the company, have been in this position now around 10 years. Before that, a partner at PwC, and have been also working as a CEO for listed companies and even been a board member, either member or chairman. So comfortable with being this position as a CEO for a listed company. Next one. The company in a nutshell, the company was listed last December. We have now a turnover last 12 months around 430 million. A normalized EBITDA on around of 110 million. And in terms of the sustainability benefit or value added, we produced and delivered 320 gigawatt hours biogas last year. And with help with that, we were able to support of the CO2 reduction equivalent of 87,000 tons. And that was made possible by receiving 270,000 tons of organic waste. 5 operational plants today. Next one. We go into the biogas as steam. Biogas, the raw material base which we can use for biogas production is a comprehensive one. Just to name some of them: sludge from wastewater facilities, sorted household waste, industrial organic waste, pulp mill process water, dead salmon converted into ensilage, agricultural residues, manure. Production process is a microbiological process. Microbes and bacteria do the job. The 2 fractions from the production process, one is the raw biogas, the other one is the digestate. Raw biogas you can use as for energy or power and heat production, typical in Germany. You can clean it to be used as a vehicle gas, typical last 10-15 years in Sweden, or you can inject that into a grid if that is nearby, typical in Denmark. And the newest innovation in our industry is to liquefy the biogas, reduce temperature to -60. 160, so it becomes the same product as LNG, but it's green. And that opens new customer segments to us: heavy transportation, shipping, and industrial usage. The other fraction, digestate, is often rich on nutrients and can be used as a biofertilizer on agricultural fields and purposes. And with that, we close the circular economy in a very nice way in our society. We produce green energy and green fertilizer without increasing CO2 emissions in the atmosphere. That's what we do and stand for. Next one. In terms of FN 2030 goals, we as an industry support quite many of them, at least these 6 ones. Numbers 7 and 12 are quite evident. We produce renewable energy and we recycle waste. 9 is unique for us. Our facility in Norway is integrated with Norske Skog pulp mill. We receive their process water, clean it, redirect it back, and deliver, besides of that, also some critical nutrients and chemicals. A good example of industrial symbiosis. Next one. We, as part of our financing strategy last year, we did in cooperation with CICERO, a third-party authorization organization, an assessment on our debt capital financing last summer. We received a dark green rating for our debt financing. We did also, in cooperation with ABG, or a assessment as part of our IPO. an assessment on the equity financing side and received the dark green rating as well. And as a part of that assessment, CICERO came also to the conclusion that we are supposed to be well aligned with the EU taxonomy. So very high ranked green, both in terms of debt capital financing as well as equity. The company as such, we have now 5 facilities up and running, 4 in Scandinavia, 1 in Korea. Korea until 2026 will then, after the BOT agreement, give it over to Ulsan City. Our home market is the Nordic arena. That's the area where we are looking for growth opportunities. The 5 facilities which we have today up and running, with those we were able to achieve a turnover around 450 million on annual level, including Ekdalen's pro forma, and an operative EBITDA which is in the range of 90 million plus, and a normalized EBITDA which is around 110, including some normalization activities. We are looking for growth opportunities in Scandinavia, intend to increase the capacity on 3 sites, 4 projects. In Stockholm, increasing the share of liquid biogas. In Mönsterås, cooperating with local farmers which have an issue with their manure. We use that as a raw material for LBG production. And in Norway, Skogn, we are doubling the capacity at that facility, which is already world's largest producer of LBG. Next one. The value chain, it's always important to understand what substrate you are using in the value chain, or for the logistical services is often niche kind of, special purpose vehicles you need, both inbound, outbound. Our position traditionally has been in the middle, the production of the biogas as such, and then the final delivery to customers, typically either via gas grid or we are filling stations, which is very typical, for example, in the Stockholm region. Next one. Our facilities today, Henriksdal and Bromma, in close cooperation with Stockholm Water. They produce the raw biogas, we upgrade it. Södertörn and Skogn, they are greenfield projects originally. We are receiving the organic wastes, we pre-treat them. We produce the raw biogas, we clean it and we upgrade it and compress it and deliver to customers. And in Skogn, we even liquefy it. And in Ulsan, we deliver raw biogas. We are quite pleased with the utilization ratio of our facilities, but we see ourselves improving the capacity utilization, and thus also enhancing the EBITDA in both in terms of money and margin. Next one. What drives the growth in the market? What we are looking especially for is the heavy transportation segment. As you can see, it's estimated to grow from 2,500 vehicles to 280,000 vehicles the forthcoming 10 years. It's important for this segment to have access to liquid methane, either LNG or LBG, and that is the market what we are especially looking for, not only in the Nordics, but even on the European continent. In terms of the vehicles, so light vehicles and cars, we do believe that the market will go forward, will exist, but we have already seen that the demand is not as fast growing as it used to be. So it's not a segment which is in core in our growth strategy. Next one. In terms of the global energy mix, natural gas has a 24% stake. Always when you use natural gas, you can either blend in with biogas, or you can use instead biogas without changing the infrastructure. Thus, a huge potential, but also a important factor is the demand from the natural gas users, distributors perspective. They need to assure the green dimension in the energy mix. Next one. Closer on the European market, growth estimated or the market estimated to grow from around 22 terawatts to 90 terawatts the next 10 years, in Sweden to 10 terawatts and in Norway to 5. Parallel to this growth estimation, also the feedstock, the raw material market has been assessed with the outcome that it's with known sources, known technologies, the market is able to supply the feedstock needed, and in Sweden even up to 15 terawatt hours. Key segments, as mentioned in Sweden, for example, key drivers for the biogas market the last 10 years have been the vehicle market, light vehicles and buses. Now, given the access to liquid biogas, we go towards heavy transportation, heavy trucks, industrial usage and maritime. The truck segment is driven not only by the access of the LBG and availability of that technology, but also the major improvements in the gas engine technology. Euro 6 gas engines are fully comparable with diesel Euro 6 engines, which they were earlier on when you're comparing Euro 2, 3 engines. Important milestone, making it attractive for transportation service providers to use gas engines. For the maritime sector, the needs to reduce sulfur emissions globally and especially nearby seas has led to a situation where several boats have already and ships have been converted into LNG, LBG. And just to mention one ship, Viking Grace, which is cruising between Stockholm and Åbo, Finland, that one ship needs on annual level 300 plus gigawatt hours, which is more or less our annual production currently. Next one. In terms of concrete evidence on the market development, this is showing the usage of liquefied vehicle gas in Sweden. So 2018, we were on a level of 5 gigawatt hours, and now in 2020 already close to 80 gigawatt hours, well aligned with the growth in the number of gas lorries, heavy vehicles. And what is important driver also is the number of filling stations which are feasible for liquid biogas, liquid Fordonsgas. And this is, they have grown from 6 to 23 and still growing. On European level, we have more than 400 filling stations able to deliver liquefied vehicle gas. In terms of our own strategy, we have already 7 years back decided to focus on large-scale biogas production facilities. We are operating the largest facilities in Sweden and Norway, Henriksdal and Skogn. Smaller one, typically the facilities owned by municipalities serving the local regional market needs. The picture on right is our facility in Skogn, which is the world's largest producer of biogas, liquid biogas, integrated with Norske Skog pulp mill. 80% plus of the energy is based on the dead salmon ensilage coming by boat in and then used as a raw material in the process. We are now doubling the capacity at that facility. That's the plan, and first phase of that has been already commenced. Core competence of the company is related to hold technology, high organic low digesting, which is the core or the core of which is in the microbiological process, understanding the key requirements for microbes and bacteria, so that we can assure high yield of the energy in the raw material, the conversion into biogas, high stability in the process, and high opportunity or high flexibility combining different raw materials. More than 400 materials have been tested on laboratory level, converted into customer applications to be used on site level. Concrete example of the benefit is the graph below. It's the facility in Ulsan. We renovated it according to our hold technology, and based on the local assessment, they came to the conclusion The cost level is 25% of the most expensive one, and especially we're referring to the know-how dimension, which is behind this benefit, and we agree with that result. It's the whole know-how process capability. When taking the company forward, now the investment program is important. This is showing how the ramp up went in Skogn when we commissioned the facility in Skogn. In 6 months' time, we were able to reach 50% level of the capacity utilization. We were on 80% level after, say, 12 months, and a 90% level after 15 months. We have also made a greenfield investment in Sweden, Södertörn, and we have taken over a couple of other facilities over in Sweden, Henriksdal and Bromma. So given the overall experience, we see ourselves to have learned very much, and especially are well equipped for this growth opportunity we are now working with. Important slide is the situation with our customers and suppliers. Given the fact that the company was established 15 years back, we have been able to develop long-term relationship with suppliers and customers. On supplier side, we have on average 7 years agreement assured for our capacity. On the customer side, it's 5 years plus. And as you can see on the customer side, it's a bit less than 20%, which is up to 4 years, and 80% plus is longer than that. Worth noting is that all these agreements have flat prices, fixed prices, which are mainly KPI, CPI indexed, so that we always know that there is a very sure income and a stable cost level per unit produced. So this means that we have overall a good visibility taking the company forward in terms of volumes in, volumes out, and especially then the margin and profitability. It's very difficult then for us also that when we are looking for new business opportunities, growth opportunities, it's our internal demand that 60 to 70%, around 2/3 of the volumes have to be assured before we take the final investment decision. In terms of performance, I think the most important point here is to the graph on right, which is showing the operative EBITDA, and especially the change from 2018 to 2019. 2018, you see the negative development, which was based on the fact that the Skogn facility was commissioned, and we had a one-off cost of 20 million, which was booked as OPEX, not as CAPEX. So that was the reason for the lower profitability. And then year after, we received the positive performance improvement in Skogn and came into the profit and loss. Next one. This is showing the normalized EBITDA estimate, which is linked to we have made a certain technological improvement with our supplier in Skogn. We are now using 2.0 technology, and due to the changes, we had a lower production level the last 12 months. So the impact is now here included as a normalized, and then there is a impact of the COVID. Especially in Sweden, some customer segments, such as taxi drivers, do not have as much customers as they used to have. So that's one of the reasons. So it is normalized after COVID. Next one. The growth program is described here. Stockholm LBG, a small capacity increase, but especially a conversion of existing purified biogas into liquefied biogas in order to get a premium for the energy. We get better paid for the liquid biogas compared to compressed. The premium is higher than cost. In Skogn, we are doubling the project capacity in 2 phases, and here the Skogn 2 phase is already started. We are the investment program is ongoing, and in Mönsterås we are looking for a new greenfield project with the local farmers, and the intention is that they will own around 25% of that facility. Next one. Money-wise, this is a investment program which has a total budget of 1.3 billion Swedish. 400 is estimated to be financed by investment grants, not loans, but grants. And out of this 400, 330 is granted, and the remaining 70 we will send the application in Norway later this year for Skogn 3. As part of the IPO last year, we assured the equity part around 300 million plus, and now we are actively working on the debt capital side to assure a fully financed program. So this is the overall facility and growth plan. Next one. When we published our financial targets, 750 million turnover and EBITDA operative at least 30%, that was part of the IPO. But since then, we have also included a 30 gigawatt hour capacity increase, and especially a conversion of additional 100 gigawatts into LBG. These both enhance the profitability of the company overall, and thus imply also that these targets we see as a conservative ones, the original financial targets. Next one. We have our management, which has been working for the company for a pretty long period of time, committed to and have been well experienced for the investment program. We have also a new board, 3 new members since the board meeting. Since the shareholders meeting. We are very pleased to have a very experienced board for the company now as well. Next one. And then the final slide, as you see our cap table, Trønder Energi is the number 1, the largest shareholder. They were originally our partner for the Biokraft project in Norway, Skogn facility, and they converted their investment stake as part of the IPO into SPF Group shares, are part of the ownership structure as a leading investor. And then we have Bengtssons Tidnings AB, BTB Invest, which is a family-owned company, which was earlier a investor and operator in the media sector, but have sold that business and have used now this, converted the company as a family-owned investment company. Have been now with us around 10 years plus. And Ilja Batljan Invest came as a new investor in this share issue last autumn. I think that was what I had on my agenda. Next one is Q&A.
Excellent. Thank you very much, Matti. I have a couple of questions following up on the presentation. I just wanted to expand a little bit, or wanted you to expand a little bit on the move towards liquid biogas. Historically, it's been compressed biogas. Most of your, or all of your investments are aiming towards increasing the liquid part. Can you talk a little bit about pricing? You mentioned that prices were better than or higher than the cost increase, but could you also talk a little bit about the customer dynamics, how your customer base changes potentially with this, and the growth prospects with sort of liquid compared to compressed, please?
Very good. Thank you for a good question, Olof. First, the pricing. Publicly known sources, E.ON has a price level for its industrial users of natural gas, and the prices are around 80 Swedish öre per kilowatt hour, and the pump price on the market for biogas at filling station is around 130. So there is a 50 öre premium per kilowatt hour, and this 50 öre is a premium for biogas, but it's also including the compensation for the distributor. For compressed biogas, or say traditionally we have seen that the premium for biogas is between 10 to 30%, and now given the market development, we see that the compressed biogas premium is getting closer to the 10 range, whereas the premium for LBG is closer to the 30% span. So there is a higher premium for the liquid biogas. Why is that? Yeah, the compressed biogas is quite often a regional product. It can be transported up to 200 kilometers on truck, but thereafter it becomes quite expensive. Whereas the liquid biogas can be transported exactly as well as LNG. So in our case, we are already planning to transport the LBG to European customers. I mean, on the continent, we have already signed agreement. It's a distributor, LNG distributor, who wants to include the LBG in the portfolio. So we see the market expansion as a substantial benefit for us.
Excellent. And just very quickly on your expansion plans. So to give us a sense of the operational leverage, when you expand the capacity in Norway, for example, how much added fixed cost do you need in order to operate a plant which is, let's say, twice as big as the current one?
I think that in terms of the fixed cost, there are two dimensions. One is related to the facility level, and then one is related to, let's call it so-called headquarters. On the facility level, when we are doubling the capacity on a facility level, the number of fixed cost is in terms of personnel is growing very little. We are able to use more or less the same organization with a couple of additional recruits or employees. Then in terms of a new greenfield, that's of course self-evident that for greenfield projects, the facility needs to have a new staffing. And then in the group headquarters level, we clearly see that as the company grows, we are not the fixed cost on the administrative level, headquarters level, they are not growing pro rata, rather only a fraction of it.
Okay, perfect. Thank you very much. I see that we're running out of time. Thank you very much, Matti, for taking the time to be with us today. And it's going to be very exciting to follow you on the growth journey ahead. Thank you very much.
Thank you very much, Olof, for great moderation.
Thank you.